valuations are stretched, earnings are almost behind us, which haven't been much of a beat in that sense. And China seems to be back in action. So keeping everything in mind, I'm not surprised we are trading lower. And let's not forget, we've not declined very sharply from our recent highs either.
Absolutely agree, Samina. In fact, just about 3.5 to 3 or 4% declines from life highs. The other important thing is that about a little less than a month ago, we had made a low of around the 21,777. We're about 100 points off that mark, and should we see that mark being breached, there could potentially be a little bit more weakness in store for our own markets. Look, the India VIX is not going to go anywhere in a hurry, especially as we move towards the outcome of the elections in the first week of June. So, it's not going to be abating anytime soon. Option premiums are expected to rise, and they will continue to either rise or they will remain where they are. But that is also a little bit of an uncertainty at the moment, because, the latter half of the earnings season, and we are in fact going into the final couple of weeks of the earnings season, they tend to come out with earnings which are, generally not the best, not the amazing. It's sort of a back of the last benchers which will actually come out with their earnings. That said, at the moment, when we look at how things are panning out when it comes to the equity markets, the psychological 22,000 has been taken at the moment. It wasn't a very big, mark anyway, because as I have been talking about the fact that, we've been moving in and out of that 22,000 zone for a while now. It sort of was consolidation. Is this consolidation moving into, a downtrend? That's something that we will decipher with our experts for today. But, as far as the futures space goes, we saw short covering last Friday. And now we are looking at a resumption of shorts this Monday with a 4% increase in open interest as far as the Nifty futures go. The Bank Nifty futures, again, under pressure, the Bank Nifty, of course, and we are looking at a 4.5% increase there as well. Coming down to the options market, of course, a lot of the traction had shifted is from the call. In the call side of things, of course, a lot of action has now shifted to 22,500. I reckon that particular level will have further cemented itself as a sort of a resistance, but I would say a resistance zone of around 22,300 to 22,500. On the lower end, once again, as I was suggesting, the activity has shifted downwards to around 21,500, and we are in fact looking at a 1,000-point range now for this particular week and the expiry, which ends this particular Thursday. That's coming down to how the Nifty is panning out. For the Bank Nifty as well, we've lost out on crucial levels. We're looking to test yet another important psychological 47,000 mark. It's a round figure, and round figures are, where you do have often a make or break situation as well. And sometimes, of course, it tends to fool many participants as well. So I'm not going to take away from that. It's a tough market to be in, there's no doubt about it, especially given the volatility and perhaps unexpected lines. It's just going to add that much more to complications. But on that note, let's get in our experts for today and see what they make of markets. We have Ruchit Jain of 5paisa and Vinay Rajani of HDFC Securities, who's joining us on the show. Good morning to both of you. Thank you for joining in. Ruchit, your view on the Nifty, how are you looking at levels and what trade are you deploying at the moment?
Hi, very good morning, Agam. Very good morning, Samina. Well, if you look at the short-term momentum, then clearly the momentum seems on the negative side. So two reasons, mainly rise in India VIX due to the election results outcome uncertainty. Second is FIS selling, where we have seen that FIs have sold equities worth rupees almost, I think, 35,000 crore. 35,000 crore was the last entire month's figure. And in May, just in first 10 days, we have 25,000 crore almost selling figure from the FIs. The long short ratio in the index futures have reduced from about 50% to 34% now in last couple of weeks. So this clearly indicates that FIs have been selling in the cash segment, and they have also formed short formations in the index futures segment. And whenever there is such combination where they sell in the cash segment and form few shorts in the index futures, I think those in those phases we do see price-wise corrections. And rise in India VIX is leading to more nervousness amongst market participants. Now, if you look at historical data of India VIX, last elections in May 2019, India VIX had formed a top around 30 odd levels, 28 to 30 kind of range. Before that, I think if you look at May 2014, in that elections, India VIX had formed a top around 40 odd levels. So even we consider last elections, then 27, 28, 30, I think this is the range where India VIX had formed a top, and we have still not reached that level. So until we see the election result outcome, I think this volatility would continue to remain on the high, and that's why short-term traders should stay cautious for a while. Any pullback move would get sold into. Yes, if you are a long-term investors, then maybe if we get any panic selling when VIX comes around 27 to 30 range, that could be a good phase to deploy cash for investment buys. But from a short-term trading perspective, I think it remains a sell on rise market. Any pullback move towards 21, 950, 22,000 could be sold into.
Right. Vinay, what about you? We do understand that this is an event-heavy month, right? Fourth phase elections also kicked off today. How do you play this volatility, though? I mean, we completely get the fact that it's going to be a tough market to navigate. The bears very clearly have control of the street. But if you are a trader, what is the trade? Staying out is one, but if you want to participate, how would you do that?
Yeah, good morning and thanks for having me on the show. So as we discussed that Nifty has fallen 1,000 points from the all-time high of 22,800 towards the 21,800 now, and Bank Nifty has been falling for last 9 trading sessions. So there has been choppiness in last couple of weeks, and we have seen that the sectors which are performing well, now they witness a breakdown, and the sectors which did not do well previously, they have started recovering, like FMCG and IT. So there, yes, choppiness is there, zigzag kind of patterns are there, and not only the election results and election process which is going on, but also the result season which is going on. So many mid caps companies are going to come out with their quarterly results this month, and this month till 30th of May, 31st of May, we will get the results. So in result season in the history, we have seen that many a large choppiness could be there in the market, and now as we are marching towards the results also of elections, that is also adding into it. And India VIX, as we discussed, that it has reached to 22. So that all things getting very we can say very tough for the traders, the short-term traders, the momentum traders, which who actually trades on the basis of momentum and charts, are getting actually false breakouts. So this is the time in which as a trader, one should remain light, one should remain conservative, and if you trade on the momentum basis, the chances of getting false breakouts are higher. So better to find the stocks which are actually recovering from the support levels, have not performed well, and the stocks which are giving breakouts at the all-time high, those looking extremely risky at this point of time. So as Ruchit indicated, that the overall market trend has turned weak, and looking by the data, last week we have seen that short buildup was there in the Nifty, where we saw a short buildup of almost 27% when Nifty fell by 2%, and Bank Nifty also witnessed a 19% short buildup going by the weekly data. So, and today we have seen that the upward sloping trend line has also been violated, which was around 22,000, and now the next support comes in around 21,777, which happens to be the previous swing low. And there has been put writing at 21,800 also. So these are the supports for the short term. But overall, I think mid cap, small caps have turned weak, and we should not touch them as of now. And as Ruchit indicated, that every rally should be sold into. There could be a pullback rally any point of time, but I think 22,200 becomes the strong resistance. So range of 22,000 to 22,200 should be utilized to lighten the long commitments and again create a fresh short position. And ultimately, I'm expecting Nifty to reach a target of 21,500 in a couple of weeks, we may say.
Okay, all right. That's the view on the benchmark. Let's also take a look at how things could potentially pan out for the Bank Nifty. Ruchit, back to you. I reckon the theme would remain the same for this one as well.
Yes, I think definitely, being high beta names from the banking space are witnessing sell-off. I think Bank Nifty could also continue to underperform in the near term. Although things are getting a bit oversold on the lower time frame charts, but we usually see whenever things are oversold on lower time frame, then there may be just a pullback moves within a corrective trend. Intraday support for today is around 46,950 to 47,000 range. We are right around that level, so we need to see for next maybe 1 hour or so, if the markets index sustains below that 46,950 mark, then this down move could continue towards a rising trendline resistance or support on the daily chart, which is still far around 46,800, 46,700. So no, I won't advise taking shorts over here because lower time frame charts are a bit oversold. But certainly, as Vinay and me have been talking about that, no, it's a sell on rise market. So wait for some pullback move where any pullback should be sold into.
Right. Vinay, one stock that could be held responsible for a little bit of the carnage today is Tata Motors. 9% lower as we see it. 1,047 is where it opened, rather closed on Friday, and now down to 950. Is it worth betting on this one for a pullback? Not today, but in the week. Good price to get into for a technical rally?
Yeah, I would ignore rather, as I was discussing that the stocks and sectors which were doing very well. And if we were to see the last week's close, Tata Motors weekly close was the all-time high. And today, after the results and the multiple downgrades from the different research houses, the stock has gone down by 9%, more than 9%, with a significant volume. So this is happening. The technicals, the typical textbook breakouts are not working here in the result season. Especially, we've seen that in the history also, this kind of movements and zigzag do come, and this is the first day of reaction, and our institutions is already having the sell rating fundamentally for this particular stock. And today Tata Motors has breached 50 days EMA support also, which was placed at 977. So now it is trading in 950. The support I see around the positional support is around 900. So I think we should not go long and we should not go against the trend as of now, because stock has just changed the trend from bullish to bearish. So I'm expecting a further downside, and 900 is the next support for the Tata Motors.
Well, we must remember that Tata Motors just a few days ago was attempting to make a new life high. On a closing basis, perhaps it didn't manage to do it. And since then, of course, we've had earnings, and then it has corrected substantially, which is taking a huge knock with this increase in OI as well. I'm going to very quickly take a look at all the other stocks which are also in focus on account of increase in open interest, and I reckon a lot of them will be towards the short side. So there you have, that's the list of all the companies which are, and Tata Motors is right at the top of that list. There you can see 20% added in open interest. Piramal Enterprises, the other one. Piramal Enterprises, or even on a cross-sectional momentum basis, is actually looking at a lot of declines coming through. There is an inherent weakness in Piramal Enterprise, because whenever there is a correction in the market, it's one of those stocks which tend to correct the most and the quickest. MGL is the other one, along with Astral, and Cipla, on the other hand, of course, holding fort, trying to do whatever it can, because that one is also, of course, reacting to the broking houses. The earnings came in earlier on Friday's session, and then, of course, with the follow through, we're looking at a little bit of buying coming in. In terms of unwinding, let's pull that list up and see how things are panning up there. Well, we do have a bout of short covering for JK Cement and Asian Paints, but otherwise largely long unwinding for Bharat Forge, Hindustan Copper, Apollo Tyres. From there on, let's take a look at what our experts have on their radar in terms of stocks. Well, Vinay, coming back to you, stocks on your radar today.
Yeah, so I would like to short ONGC, because ONGC till now performed very well, but for last couple of sessions we have been witnessing some weakness in the counter, and stock has also breached the its 50 days EMA support. Previously 50-day EMA acted as a strong reversal point. From there stock reversed from bearish to bullish, but now for the last three consecutive session, we can see that the stock is sustaining below that level. So I can see the oil exploration company and PSU companies coming down from here. So in looking at the market trend, looking at the kind of short buildup which we saw in the last week in the oil and gas segment, ONGC can be a short candidate. So I would go short in ONGC May future around 265. I would suggest a stop loss at 270, and on the downside, I'm expecting a target of 258. The second short, I would go with the Titan. So Titan came out with the weak results. There was a margin pressure that our fundamental team believed, and the stock is now getting weak on the technical basis also, and the trend has been also down. So Titan May future can be shorted here around 32.65. Stop loss can be kept at 3325, and on the downside we can expect almost 100 rupees downside. Around 3165 should be the downside target. So I would go short in these two stocks, ONGC May future and Titan May future.
Ruchir, you too have short calls in today's market?
Well, I have one sell and one buy recommendation. Sell recommendation would be a short call in IndusInd Bank, where we have clearly seen that last 1.5 months the stock was trading in a channel which has been broken down in Friday's trading session. follow-up selling is there today. To any minor intraday pullback moves towards 1400, one should use that opportunity to create fresh short positions. Stop loss should be above 1425 for potential targets around 1350. And the contra buy is in Britannia. So of course, being defensive, right? So I think certain FMCG names can do better. Britannia during results, it gave a breakout from its consolidation with very high volumes. Last few trading sessions, we have seen some pullback move again, and the stock is now trading around its support. So one can go long on Britannia over here, keeping stop loss below 49.70 for potential targets around 5300 in the short term.
Right. Richard, Vinay, stay with us. We'll take a break. We'll come back and talk further. But the markets, of course, still not letting up anything. It still doesn't look good for the street. We'll, of course, discuss that and more on the other side.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps and that entire ecosystem for a large number of people.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with
Good afternoon and welcome to Earnings Edge here at NDTV Profit. We're tracking Polycab wires right now on the back of the strong quarter four performance. The company's revenue grew by 29%, while EBITDA and PAT levels were up by upwards of 20% as well. We're now joined by the CFO, Mr. Gandrav Tongia of Polycab India. Hi sir, good afternoon and thanks so much for joining NDTV Profit today.
Good afternoon, thank you for having us.
To start with, sir, I just wanted to of course talk about the quarter, but the company has seen strong revenue growth while margins have just dipped slightly on a comparative level. Could you comment on what led to this particular fall in margins?
Sure. The entire year was nothing short of extraordinary for us. It was marked by milestones, growth and commitment to excellence, and that defines our journey. The fourth quarter of the year, we recorded revenue of almost 5,600 crore rupees. In the entire year, we recorded revenue of almost 18,000 crore rupees. Both of these are best in the history of the company. You're right, there is a small movement in our margins. That is just because of change in the sales mix. But overall, our PAT margins are around 10%, both for the fourth quarter as well as for the entire year. And I'm happy to share with you that we are the most profitable company in our entire industry. With almost 1,800 crore rupees of profit. This has happened mainly because of the several initiatives which we undertook as part of Project Leap, which is a transformation project which we embarked on in 2021 with a vision to get to 20,000 crore rupees of top line by fiscal 26. And in fiscal 24 itself, we have achieved 18,000 crore rupees of top line. We believe that we would be able to maintain growth momentum with the help of the macro positive demand environment, as well as the company specific initiatives which we have planned as well as we are implementing.
Got it, sir. And rightly, like you said, the company has been, much in the news also this year. So I just wanted to get this question out of the way that we had the income tax authorities conduct searches for unaccounted cash, as they said. What is the progress on the matter? Have you heard from the income tax department currently, and what is the way forward?
You are right. A search was conducted in the second fortnight of December of last year in few of our premises as well as corporate office. And all the information and the data what was requested for was provided to the authorities. As part of post-search activities, we have received some requests from the Income Tax Department to provide additional information that has been already provided with. And as of now, as of today, we haven't received any conclusion from the department or any demand notice from the department. We believe that department is conducting its own set of procedures. And as and when we become aware about their final conclusion, we'll come back and notify our members in the stock exchanges.
And any kind of timeline that the authorities have given for any kind of searches, or traditionally, whenever such a matter has happened, what is the general turnaround time for them to come back to the company?
So in the Income Tax Act, there are timelines which have been defined, and these are, of course, dependent on several ifs and buts. But in general, within 2 years from the year in which the search was conducted, the department is supposed to conclude the procedures, which means by March of 26 is when department should ideally conclude everything. But as I mentioned, these are dependent on several ifs and buts.
Understood, sir. And I wanted to talk a little bit about your international share as well. Currently, it's at roughly 8% of total revenue. Now, is this purely on wires, or for FMEG is included in this as well? The reason I ask is for other industry players, we've seen that they export wires, and those are generally higher margins compared to wires sold domestically. So could you just let us know on that fact, sir?
Yeah. As you know, we are the largest cable and wire player in the industry. We have almost 25% to 26% of market share. And the current year, the growth which we have witnessed, it has come because of volume growth. We believe because of the cost leadership, price leadership, and manufacturing capacities what we have right to win in exports arena as well. In 2021, as part of Project Leap, we had decided to target 10% as a number to achieve exports turnover as part of our total turnover. And as you rightly mentioned, in the year gone by, exports contribution to top line was 8%. We have now presence in almost 79 countries. Many of them are developed countries like, for example, US and Australia. And we believe that year after year, we should be able to further move our needle as far as exports is concerned. Now, your specific questions on wires. We don't necessarily export wires. What we export is cables. And as of today, our exports cable margins are in general slightly better than our domestic cable business. And to that extent, it is as of today is profit accretive.
Got it, sir. And we've seen currently there's been just a rise in commodities for a whole lot of industries. Have you seen the same for wires and cables as well? And if so, any kind of impact that you saw post, of course, March as well? I know you can't talk about numbers per se, but have you seen any rise in commodities?
You're right. But as we are entering the second bull market of commodities, copper was just shy of $10,000 on LME, as well as aluminum is hovering between $2,600 to $2,650 per ton. We have a very robust pricing mechanism in place. In general, we are able to pass on the changes in our raw material prices, which in our case mostly is copper, aluminum, and plastic to our end customer. And over the period, we have seen that movement in prices in general, they don't have any impact on our profitability. We have been able to maintain our EBITDA margin of between 12 to 13% in cable and wire business, and we believe we would be able to maintain that in future.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video, and other multimodal technologies. These new LLMs can understand human voices, accents, and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps, and that entire ecosystem for a large number of people.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide down,
Good morning and welcome. You're watching the small and mid cap show here on NDTV Profit. Thanks for tuning in. Quickly on to where the Nifty 50 is at. We're of course below the 22,000 mark, but we're holding above the 21,850 mark. We're still 40 points odd off the day's low. So that's possibly a positive, but 4/5% lower on the Nifty 50. Let's pull up the contributories, and while we do that, I'm going to quickly flag off some stocks which are buzzing. Pull up something like a Cipla up 5% odd. You're also looking at HDFC Life up roughly 2% odd in trade. Asian Paints up 1.5% after a week last week, and you're looking at Tata Motors, which is really honestly stock of the day, 9% lower. BPCL also roughly 4% odd lower, and Coal India among those which are pressured in trade today, 3% lower. In terms of contributors, we did see that graph, but if we can pull that up again, HDFC Bank positive around 0.5% higher. That's probably just about aiding the Nifty a third of in terms of number of points contributed on the Nifty 50 in terms of positive contributors. So that's a positive. But outside of that, you're looking at a ton of pressure coming in. Tata Motors, RIL, ICICI Bank, SBI, all of which are dragging the market lower. 200 points in terms of the Nifty draggers and 150 points down on the Nifty 50. Let's pull up the mid cap and the small cap, where the rout is a little more accentuated versus the Nifty, 1.5% on the Nifty mid cap, and the Nifty small cap nearly 2% or 1.7% lower. So definitely pressure there as well. Within the Nifty small cap in terms of contributors, as well as in terms of rather than contributors, in terms of the buzzers, we have something like a Sirma which is down, an Ace and a Jai Balaji which is down 5% and almost 7%. Those were of course on the Nifty small cap. On the mid cap as well, a ton of pressure, 1.5% lower on the mid cap, and if we can pull up the top gainers and losers on that one, then we'd have more perspective. But let's also try and shift focus onto the sectoral indices, see what's buzzing there. The Nifty Bank, of course, 0.75% lower, but Nifty Auto down 3%, Nifty PSU Bank down nearly 3% as well. So those are the key drags. I want to go into the Nifty PSU Bank, but before that, let's also take a rundown on some of the other ones which are buzzing. Realty down 1.5%. Metals also down 1+%. The only gainers at the moment, or gainer at the moment, is the Nifty Pharma. That's the only one. Let's pull up the Nifty PSU Bank, because we had Bank of Baroda come out with numbers late last week, but you look at a slew of PSU banking counters. Bank of India, Union Bank, we spoke with the management as well earlier today. Down nearly 8%. Punjab and Sindh also down 5+%. So clearly this one being the dragger in terms of the markets. The Nifty Bank outside of that looking not too bad outside the PSU banking basket. The Nifty Bank also across the board we're seeing a lower trend coming in on the Nifty Bank as well. So I stand corrected. But I have with me one. Let me first off introduce Varsha, who of course leads or rather is the research analyst on the pharma pack that we are focusing on today. And we have Rajendra Gogri, who is the chairman and managing director at Aarti Industries, also with us to talk to us about, of course, Q4 numbers, but outside of that, what to expect from FY25 as well. First off, good morning and welcome, Mr. Gogri, to NDTV Profit.
Yeah, good morning.
Right. Sir, let me first start off with what's happening on top line and margins. Could you talk to us about how the demand environment as well as the supply environment, more than the demand environment, is shaping up?
Yeah, discretionary demand is getting more stabilized, and whereas non-discretionary, especially agrochemical, I think still the demand pressures are there. Inventory corrections are still going on, and especially they are more product specific. So that's where the demand situation is there.
Okay. And how is supply shaping up, sir? Is there how is the China supply shaping up for you?
Yeah, basically, supply side almost, because when the demand is slow, there will be always a demand supply gap in that sense. So overall, I think there will be a little bit excess supply in the system.
Okay, understood. Sir, with regard to how margins are shaping up, could you talk to us about you're currently around the mid-teens kind of number? Of course, we've seen a jump when it comes to your top line versus the first half of this year. Do you expect that margins will go towards or closer to the 20% mark probably in FY25?
Actually, the way our business model is mostly the raw material pass-through model. So margin as a percentage to sales is not an actually appropriate measure. So absolute EBITDA is more important measure. But even at the constant raw material prices, we expect EBITDA margin to improve because of the operating leverage. As FY25, the volumes are going to increase. Compared to that, the manufacturing fixed cost or corporate fixed costs are not going to increase. So at a constant raw material prices, there will be a margin improvement as a percentage also, and also on the absolute EBITDA.
Hello, Mr. Gogri, Varsha this side. Last time you did mention that we have seen an improvement in pricing trends. Would it be possible to give a sense on how much pricing improvement you have seen relative to the first half of the year, and which segment are actually driving this pricing improvement?
So pricing improvement, generally will move with the demand side. So discretionary side, as the demand is global demand is stabilizing. So we see, some sort of a improvement in that segment. Whereas non-discretionary like agro and all, the pricings continue to be under pressure.
You guided for demand improvement, at least in Q3, that demand would improve over the next 1 to 2 quarters. Are you seeing green shoots of that, or are you seeing demand completely come back?
Yeah, discretionary, I think we are near normal.
Sure.
And I think when Q1, Q2 of this FY25, it should reach the almost normal only. Whereas agrochemical, still continue to be on demand side. There is still some pain, I think, and in calendar year 24, I think it will continue this year also.
Also, regarding the recent 2 contracts that you have won, that is 9-year and 4-year contract. Now, how do we see revenue for these contracts? Will it be linear? And even from the EBITDA margin perspective, if I see this 3,000 crore contract is having almost 20% EBITDA margin. So, are we going to see this from the first year of operation itself?
No, that first contract, which is of 9 years, there will be a ramp up. Actually, the next year, FY26 onwards, it will be more stable. This FY25, we are also expanding our capacities. As far as the second contract, which is a 4-year contract, ramp up will be from current year itself. So there, it will be much more stable from the current year itself.
Sure. And in terms of the linearity, how will it contribute to top line? Just want to try and get some perspective. So the 6,000 crore contract, roughly 1,500 crore to contribute to top line in FY25 itself. And for this one, on the 6,000 crore contract, what's the margin number like? Will it be closer to 20%?
No, that margin will be more around around 15% range for that product. And it will be basically 1,500 crore. I think that will be a linear as far as that contract is concerned.
Also, Mr. Gogri, you had given a guidance that in FY24 we'll be having EBITDA of around 1,000 crore, which we did achieve that guidance. Now coming back to FY25, you had guided EBITDA to be in the range of 1,400 to 1,700 crores. Now, where are we in terms of that?
Yeah, we are maintaining the same guidance of 1450 to 1700 crores. As the volumes get stabilized for discretionary and also improve in non-discretionary, and also will our new projects on ethylation, nitrotoluenes, and some of the specialty chemical will get commissioned this year. So this year is a transition both on the volume stabilization as well as stabilization of our new facilities. So we continue to maintain this guidance of 1450 to 1700 crores.
Also, coming to your capex plan, so how are you seeing this capex? And I mean, what is the capex expectation or target that you are in FY25, and how are you going to fund this?
Yeah, this FY24 we had about 1280 crores, and FY25 it will be in the range of 1500 to 1800 crores. And funding wise will be partly through internal accruals and partly through debt.
Understood. Thank you so much, sir. It's been great chatting with you. Good perspective with regard to Aarti Industries. Of course, the stock not doing the best in trade today, but nonetheless, that's the take on the numbers, and quite positive in terms of FY25 commentary. Time to slip into a very short break. On the other side, we'll be joined by the management of GE Shipping to talk to us about the company's fourth quarter earnings and beyond. Stay tuned.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video, and other multimodal technologies. These new LLMs can understand human voices, accents, and languages like nothing ever before. Think Alexa times 1,000, because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages, and the way we speak to each other, in mixed coding, where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead, as AI can unlock access to computing, apps, and that entire ecosystem for a large number of people.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes.
Hello and welcome. Today our focus is on Great Eastern Shipping. The company has come out with its Q4 results, revenue about 2.8% of an uptick, while margins have gone up by 334 basis points at 62.14%. Net profit about 25% of an uptick compared to last year's quarter. Now but to discuss more, we are in conversation with G. Shiv Kumar, the CFO and the Executive Director of the company. Hello and welcome, Mr. Shiv Kumar.
Thank you. Hello, and thank you for having me.
My first question for you is the March quarter's performance. Now, if we look at the sequential, in a sequential manner, it is one of your seasonally weaker quarters. But again, we saw some uptick compared to the December one. So I just wanted to understand what has led to this, and again, what should we look forward as of going ahead?
Yeah. Okay. Thank you. That's a good question. It is typically a seasonally weak quarter for the dry bulk business. It's the weakest quarter usually for the dry bulk business, but a strong quarter traditionally for the tanker business. And the tanker business has been strong. The dry bulk market has been unusually strong considering that it's supposed to be seasonally the weakest quarter. And the reason why the dry bulk market was strong was because Chinese imports were strong, Brazilian iron ore exports were strong. And as you know, Brazil to China is a very long route. Every additional ton of cargo from Brazil to China requires more ships than on any other route in dry bulk. And that's why dry bulk was strong. On the tanker front, tankers were strong because of the disruption caused in the Red Sea. Ships have been rerouting around Africa when they're going from, say, the Middle East to Europe, and that resulted in demand for more ships. And that's why tankers were also strong.
Absolutely. Now, you have described about the dry bulk business remaining strong. But to come to the Baltic Index for the month, if you're looking, we have seen some kind of an uptick over here. What does this mean going forward?
Typically, this is the time when the index recovers, the Baltic freight rates recover for dry bulk. Because seasonally they come off the weak period, which is Jan-March, and start improving from April and May and go into a fairly strong summer. So the strengthening is not unusual. However, the good thing is that we are seeing strengthening across all sectors in the sense that we are seeing the Capesizes, which are the big bulk carriers, also strong. And we are seeing the smaller vessels also, which is the Panamax, Kamsarmax, and the Supramaxes. Doing quite well. So the dry bulk market is showing quite a lot of strength, possibly on the back of stronger dry bulk trade flows. We've seen Chinese imports of iron ore and coal being quite strong. Indian imports of coal also have been quite strong.
Absolutely. Now, the major highlight, if you look at the second half of the year, has been obviously the Red Sea impact that we are seeing. Major disruption in the Suez Channel, but Suez Canal. Again, if you look at the Panama Canal, also some disruption over here. I want to understand now what is going on there currently and how should we look forward to this situation in terms of next year onwards and this quarter, in fact, like how are we seeing the trends going on over there?
Yeah, on these two disruptions, the one update on the Panama Canal is that we were at 32 to 34 ship transits at peak. That came down to below 20 at the bottom when the Panama Canal was at its driest, which was early 2024, that was around December, January. That's now back up. They've had some unseasonal rains, and it's back up to the low 20s, and they're expecting to go back to the high 20s by the end of this monsoon season, which is in the next 3 to 6 months. So you should have a little bit of reversal there. On the Suez Canal, it's anybody's guess. This is a geopolitical thing. It's not a weather-related thing. So it's anybody's guess what happens to it. It could stop tomorrow or it could continue for the next year. So we just don't know that.
Absolutely. Again, I wanted to understand, there had been some US sanctions in the crude tanker segment. So I wanted to understand what does this mean for our segment also in the crude tanker as well going forward. Do we see any sort of impact over here?
So the sanctions that we've seen recently have been very focused and have affected a small number of ships. As a result, they haven't had much impact on the wider market. What is also happening is because of the fear of sanctions, less people are doing the Russian trade, less owners, legitimate owners are willing to do the Russian trade. So it's not had a significant impact on the market balances recently, these round of sanctions. Maybe if there are more widespread sanctions, it could have an impact, but otherwise, no.
Absolutely. So small impact over here. Now coming to the order book. So our order book has remained on the lower side, but if you are to look at your presentation, you have mentioned that there has been some build-up in both the crude tanker and the product tanker. So what kind of outlook does this paint for the markets going forward over here?
Okay, so the order book has indeed built up, as you said, that there has been a significant pickup in the pace of ordering of tankers. The good thing is that these ships are likely to come only in 2026 or 2027. There's nothing much coming in 24 and 25 in terms of new tonnage joining the fleet. And therefore, that threat of the new supply is limited, at least for the tankers. It's still not a large number if you see it in relation to the old fleet. There are a lot of old ships which are still in the active fleet, mainly because the market is so strong. If the market becomes weak, then you will find the old ships going, which gives a little bit of a safety net to the demand-supply balance. So if there is an oversupply of ships because of new ships coming in, then you could have old ships being scrapped and removed from the fleet, which will bring the market back into balance.
Absolutely. Mr. Shiv Kumar, now moving on to the vessel sides, the repricing, about 12 of our vessels are getting repriced, and that too, if I'm not wrong, in the first half of FY25. So can you quantify what is the extent of repricing that we are looking at, and how does that lead to our margins, our EBITDA, in terms of an incremental sense?
Yeah, so this is the offshore vessels that you're referring to. Right. We have 12 of them coming up for repricing within the next few months. Most repricings are happening at higher levels. In fact, all repricings are happening at higher than previous levels. And if I had to quantify this, I would put this at an average of $3,000 to $4,000 a day better than previous contracts. And since the cost base is fixed, this is an addition to, this flows straight from top line to bottom line. So all of these vessels are getting repriced, and the pricing is better because the market is just better. These are typically 3-year contracts. Market in 2024 is much better than it was in 2021 for the offshore vessels. And therefore, the repricings are happening at much better rates, which of course will feed through into our profitability.
Okay, so better outlook for the offshore vessels over here that you've mentioned about. But now if I look at the Saudi Aramco side, some cancellation has happened over here, about 90 rigs to be precise. Now, what is the kind of impact that we look at for our offshore vessels over here?
Yeah, so we have 2 rigs coming up for pricing in this year. They're coming off their earlier 3-year contracts. There are tenders in place which are under process. One tender got cancelled, which is relating to where we had bid our rig Greater Chetna. The other tender is under process still. Typically, what happens in the Middle East should not affect this market. These are disparate markets, and you're unlikely to find rigs which have been cancelled in Saudi Arabia coming to India. It's not very likely for that to happen. So it shouldn't have a practical impact. It might have a small impact on sentiment internationally. Practically, it should not have an impact on the Indian market, really.
All right, Mr. Shiv Kumar, before I let you go, my final question is, what is the key strategies that we are looking to place for FY25 going forward? So can you just highlight on the picture forward?
Yeah. So a couple of things that we're doing. We have, of course, collected a lot of cash. Our balance sheet is very light. We would like to do more capex and expand. However, the prices are expensive, and therefore we are not likely to do a large amount of capex currently. What we're doing is replacing our old tonnage with more modern tonnage. We will wait for the market downturn to invest a significant portion of our resources. So we are going to be patient and wait for the markets to come to the right prices for us to invest.
All right. Thank you so much for joining in and having this conversation. We look forward to next quarter to discuss more.
Thank you very much.
I have a right to decide who will run my country for the next 5 years. And for that, I need to vote. So I pledge to vote, and I encourage all my family members, all my colleagues at Hyundai Motor India, and of course, all the citizens of my great country to go ahead and vote. Vote now and vote forever. Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video, and other multimodal technologies. These new LLMs can understand human voices, accents, and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps, and that entire ecosystem for a large number of people.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only
Good morning. You're watching Ask Profit on NDTV Profit. I'm Smriti Chaudhary and with me is Alex Matthew. And this show is all about your stock related queries. So do write to us on any of our social media channels or on the WhatsApp number that'll be on your screen in just a minute. You can also write to us through the YouTube live chat and we'll take your questions from there to our guests for today. But before we do that, let's take a quick check on the markets. You have the Nifty 50 trading 0.5% down, still below 22,000 mark today and a bit of a weak day in trade today. Let's look at some of the constituents of the Nifty 50 as well and see what's pulling the index lower. You have the likes of Tata Motors that's down 35 points and RIL, SBI, Infosys all in the red. On the other hand, you have HDFC Bank, Cipla, Asian Paints slightly in the green today. HDFC Bank contributing about 12 points to the index. A bit of a, and even if you look at the sectors as well, most sectors in red in trade today apart from pharma and the healthcare index. VIX seems to be very high, about 12.5% higher. Very volatile day for the markets today. Let's okay, we'll come to Tata Motors, which is falling today in trade, down about 8.5% as we speak. But we'll come to that in just a minute. Let me just talk about a couple of stocks that are moving on the back of results. You have Cipla that's gaining in trade today after the fourth quarter results. You have something like a Sirma that's down as well in trade today. Then there is ABB that's up about over 9% in trade, and that is also on the back of results. It's also hit its 52-week high a while ago. You have Bank of India that's down about 11%. This is also on the back of fourth quarter results. However, on the Nifty 50 index, Tata Motors seems to be the biggest loser in trade today after the fourth quarter results, Alex.
Absolutely, and I don't think it has to do with the earnings themselves.
Definitely, look at the numbers.
Absolutely, you're seeing an expansion on the margin front. You're seeing an expansion for Jaguar Land Rover's margins as well. So what really is the issue? We'll talk about that with the guests that we have on the show in just a bit. But let me go across to our automotive analyst. We've got Puneet joining in to give you some perspective as to why the street is looking so negatively at Tata Motors right now. Puneet, what are the reasons that you picked up?
Yeah, thanks for that, Alex. So stock down roughly 8 to 9%, eroding a market cap of roughly 27,000 crores. And there were 5 key reasons, according to us, that led to this fall. The first one is that the company does not see any kind of incremental growth in its passenger car sales for the next financial year. The company has said that over the past 2 years, the segment has been really strong. And going forward, they are seeing some moderation in demand as well. They are seeing that this is also due to a sharp run-up post-COVID for the need of personal mobility, as well as the EV trend over the last 2 years has been really strong. So going forward, they are seeing some demand momentum to be slow. The second reason we could think is the Jaguar Land Rover, the projected sales for the next financial year is really just like flat. According to brokerage Elara Securities, they see just 2% growth in sales over the next 2 fiscal years for Jaguar Land Rover, since it's going into a transition and getting newer models as well. They see also that the competition such as Mercedes and Porsche in this particular segment that compete with them globally will be also a key problem. The third one we see is the commercial vehicle segment, which has been strong for Tata Motors this year, but going forward they see that due to elections the first half will be slow, while any kind of recovery is only expected in the second half of financial year 2025. The fourth reason we see is the order book for JLR. It's declining to roughly 1,33,000 units and has declined from the previous quarter by roughly 10 to 12%. They also see that, for going forward, the volumes will be flat for this year, as we mentioned. And also on the investment, they are going to spend roughly 3.5 billion pounds in financial year 25, which will lead to negative free cash flow for the company as well. And finally, the post-FAME environment. Now, do know that the FAME 2 scheme has ended on March 31st, and now we are in the new EMPS scheme, where the subsidies have been reduced by roughly 50%. The company highlighted in the conference call that they will be seeing the trend, how the buyers are reacting on the lower incentive schemes. But overall, we see that these were the 5 key reasons which will be a key problem for the company going forward, and that's kind of reflecting in the stock as well. Back to you.
Absolutely. Thanks so much, Puneet, for wrapping that up for us. If you look at the year to date, and I'm talking about 2024 itself, the stock is still up over 20% despite today's drop. But let's get our expert. We've got Sameer Dalal from Natwarlal and Sons joining in, and we will soon have Rajesh Palvi. Okay, we already have Rajesh Palviya joining in. Thank you so much, gentlemen, for taking the time, and good morning to you. Sameer, I'll come straight to you on Tata Motors. Hopefully you've heard what my colleague had to say about what he thought the key reasons were. What do you make of it, though? And would you say that this is enough of a drop to contemplate getting into the stock if you don't have it, or averaging your cost?
So good morning. So let's first talk about the results. The results were really good, right? Let's avoid the fact that they had the deferred tax write back. So even if we eliminate that, the profitability was extremely healthy. This is on the back of volume growth. You see, the operating leverage for the company played out. Now, 2 things you got to factor in. One, the management has given a slightly subdued guidance saying that growth may be a little tapered in the current financial year. And maybe, in FY26, we might see some amount of better growth. But if I look at it on an overall basis, when a company delivers such strong operating margins, and even if I expect vehicle sales to be relatively flattish, I think the profitability will still remain there. It may not grow at the pace that probably the market wants to grow. So that has been one of the reasons the stock has taken a knock, given the fact that growth will slow down. But even when I look at it compared to other players, valuations are cheaper, but they had moved up quite significantly. So, it was kind of like you can say the stock was priced really well. And, given the fact that people are expecting slower growth, the stock has come off. Now, my personal take is, yet valuations are not very, very attractive, where I would say that you can go out, gung-ho and say, even after this 7-8% fall, go out and buy the stock right away. I think you will get opportunities. You might see, 1 or 2 quarters where numbers come a little subdued in the fact that sales numbers are lower or flattish, and that could probably pull the stock down closer to the 850 odd levels. At 850 levels, I would definitely be a buyer in Tata Motors. But for the time being, given the fact that the guidance given by the management is not very positive, there's no real trigger to pull the stock up. So whether you're an investor or a trader, the near-term upside to some extent may get capped, but on downsides from a long-term investor, I would definitely be a buyer.
Okay, fair point. All right, so watch out so buy on dips kind of an approach. Rajesh, good morning. Coming to you on where you see the benchmarks heading. It's a tough question to answer because of the kind of volatility we've seen, but what are the key levels in your opinion to watch?
So yeah, good morning. So definitely there is a high volatility. India VIX is at a elevated level, so that clearly giving a sign that yes, volatility is going to remain in the system for some more time, as we are now trading at 20 level of India VIX. For Nifty, 21,800, that almost we have touched that low. So that is, coincide with the 100-day moving average. So 21,800 around is the important support area based on the put concentration at this juncture. But looking at the breakdown which we have witnessed in the previous week, that is very critical for the market to recover from here onward. 21,150, 21,200 are the major challenging level based on the call concentration area. So I think till 22,200, 22,200 not taken out by the Nifty in the coming trading session, that may remain as a challenge for the market. Until these levels are not taken out, there would be pressure in the market. 21,800, and then if it's break, then 21,650 could be the next level on the downside. For Bank Nifty, 47,000 is the key challenging level on the downside. If we breaks below those level, then this fall may extend further towards 46,700. Also on the higher side, 47,600 is the major supply zone for the Bank Nifty at this juncture.
All right, let's start with the questions now. And first question is from Subodh. They're talking about Fed Bank Financial Services. They bought the share at a current price of 125. It's not moving in trade at all today, absolutely flat. But this is from a longer term perspective. Samir, I'm going to come to you on this one. They're yet to come out with their earnings now. And if you look at the stock performance, it hasn't done too much in the last 1 month. Even in the last 6 months, it's down actually about 11% in trade. What's the long-term view on Fed Bank Financial?
So we don't have this stock under active coverage, but what I can tell you about the entire NBFC space is, to some extent, borrowing costs have moved up, of course, already, and they're continuing to remain elevated. Now, the point is, if Fed Bank is able to pass on any of these elevated borrowing costs, then I think they will continue to do well. But I think, we do have Federal Bank under coverage, and for us, the way I would like to play any of these is, why not buy Federal Bank, who has a stake in this as well, and you can get a play on both the banking operations as well as the NBFC operations. So Federal Bank would be my play, but I have no active coverage, so I won't be able to comment on Fed Bank Financial.
Okay, the next counter that we're talking about is Kirloskar Oil Engines Limited. If I'm not mistaken, this is BSE listed. I'm coming to you on this one, Rajesh. If you can pull up the chart, we've got Rohit from Delhi, who's got 100 shares. that he's bought at levels of 1,075 and he's looking for a short-term perspective. Okay, it's on NSE as well. It's up as much as 6% in trade today, and his buy price is 1075. So he's still a little away from his buy price. What should his short-term strategy be?
I think he should hold on the position. The way stock is moving across all time frame, stock is holding the ground on the near-term, short-term structure. Also, stock is almost trading near to its all-time high trajectory, series of higher top, higher bottom formation. So that clearly shows that there is a sustained buying action is taking place. We have seen a brief consolidation of 2 weeks, and again, fresh breakout is taken place in the stock after today's move. So I think he should hold the position, keep stop loss at around 1040, and possible upside we can see in short term towards 1160 to 1200 kind of zone for the Kirloskar Oilage.
All right. The next question is from Prasanthi from Sydney. They say they want to buy out of these 3 stocks, 1 stock from a longer term perspective. They're all shipbuilders. So Cochin Shipyard, Mazagon Dock and Garden Reach are the 3 counters that they're currently looking at. They want to know if this is the right time to enter either of these stocks. Now Samir, you look at the counters in the last 1 year and the kind of rally they've had. Cochin and Mazagon definitely they've doubled, at least doubled in the last 1 year itself. And Garden Reach, if you look at the 1 year counter, it's up over 80%. Would you suggest buying at any of these counter at the current levels?
So at the current levels, no. Given the fact that they have run up a lot and valuations have moved up. I'm not saying they're expensive, but you see there's many slip between the cup and the lip, and these are very long gestation projects that they get, these shipbuilding projects. It's not like you get the order and within 3 months, 4 months you finish it and you get the revenue flow. So you've taken orders based on certain price points. Now, if for example certain product prices change, you're able to pass on some amount of it, some amount of it you have to absorb yourselves. And because of all of those difficulties that happen during these long gestation periods, what you will see is at some points, a couple quarters down the line, you will see some amount of margin contraction, or you will see some amount of pain point in the numbers. Now, those will be the right time. So we are not denying the fact that these companies are great long-term wealth creators and will probably continue to remain wealth creators given the fact that the order flows will remain strong. There are a limited number of players. India is becoming a key player in the global shipbuilding industry. We are a very, very small player, and the opportunities are very large. So we agree on all of those facts, but I would wait for correction. My preferred pick in all of these is Cochin Shipyard, but like you rightfully said, it's more than 100% up in the last 1 year. So wait for a correction. Maybe if you get 10 to 15% lower, that would be a great point. Out of the 3, I would recommend the Cochin Shipyard for you.
Okay. So incidentally, we've got a follow-up, I guess, or a separate question, in fact, on Cochin Shipyard, and I'll take the opportunity to go to Rajesh on this one. We've got a viewer, Swastik, who bought at levels of 805, 500 shares, and sold 250 of them at levels of 1300. The stock is down about 3.8% today, and it's at 1183. So the viewer is still holding on and is making profit. Rajesh, should he sell the rest is the question, or should he buy more at the current juncture?
I think if he's holding this stock for long-term perspective, I think he should use this decline as again buying opportunity, as long-term structure for the Cochin Shipyard is on the bullish side. Though there is some weakness is taken place in near-term structure. Stock now slipped below to 20-day moving average, but long-term structure is still bullish. So I think if you get any opportunity around 1150, 1160 zone, it's again a good level again to re-enter in this stock. And we believe that if 1150 hold out in this decline, then again the stock will start showing some buying interest. And once the stock manages to cross over 1240, then again there is a high possibility that stock may regain to its again new all-time high trajectory also. So buy on dip should be your strategy. 1150 is a level where again you can re-enter in the stock in this decline.
All right, we'll slip into a short break now, but we'll be back and we'll take more queries on the other side. Stay tuned.
I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps and that entire ecosystem for a large number of people.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others,
Welcome back. You're watching Ask Profit, and we're speaking with Sameer Dalal as well as Rajesh Palvia. Rajesh, this next one's for you, and this is a question coming in from Tanya Bakchi. She's asking about Angel One, which she's wondering whether to get in at the current market price of at 2,423 for the next 6 months or so. What's the view on the charts?
So there is a sustained supply pressure in the stock, and in this corrective move, stock is making a lower top, lower bottom formation. Stock is now slipped below to 200-day moving average also. So that is giving us some sign of further more bearishness for some more time we can see in this stock. We have seen this is the fifth consecutive month where stock is in corrective mode. Though stock is now approaching towards its major important support area, which is placed at around 2350, 2300 kind of zone. So if you get further more dips towards 2350 or 2300 kind of level, then you can buy some stocks around those level in staggered manner. Because still, as you want to buy this stock, because looking at the technical, again, it's a contra buy. So I think wait for further more dips. 2350 would be the attractive level again in this decline. Keep your stop loss around 2280. In the pullback, if the stock manages to cross above 2650, then only we can see some more recovery in the stock, and then possible target 2800 would be there. But at this moment, wait for another fall towards 2350, then initiate some buy.
All right. Next counter we're talking about is KPIT, and this one's KPIT Technologies. This one's from Akshay. They say they bought the shares at a price of 945. It's currently trading above 1400 levels. Sameer, on something like a KPIT, they have guided for a strong FY25 growth. But the stock is in a bit of a pressure today. What should somebody who has a longer term view on the counter should do?
definitely hold on. So the auto, I mean, the segment that KPIT caters to in the technology space is the auto companies. The kind of software, the kind of technology that is going into all of these companies is only increasing. You're getting even in some of the I will say, how do I put it? The lower end models, you're getting more and more technology inputs, and KPIT comes in with a lot of that. Apart from the information systems and the music systems and all of that, it comes with a lot of other things. So as the penetration for this keeps increasing, as the further increase in battery operated cars increases, I think the opportunity for companies like KPIT, Tata Technologies is quite significant. So I would definitely hold on your viewers making good amount of money. I think he will probably get higher rates 1 year to 2 years down the line. So hold on to the stock.
Samir, did I interpret your wry smile at the question on the guidance right? Because they've managed to beat their guidance, and people have questioned them in the past, but they've not got it right. But maybe I interpreted your smile right. MapMy India is the next question that we're taking, or the next stock that we're taking, and this is Polomi's question. She's bought 33 shares at an average price of 1,995. Which is slightly elevated. She's lost a little bit of ground. She's asking if she can hold for the next 6 months or so. Rajesh, since it's a short-term query, should she hold on?
I think already stock has corrected. I think she can hold on the position, as stock is now trading near to the important support area of 1740. So I think she can hold on. If stock not breaks below 1740, then possible pullback we can see towards 1840 to 1900 kind of zone. So keep at this moment stop loss at around 1740.
All right. The next counter is Hudco. This one's from Naman from Kolkata. They say they bought the share at an average price of 219 rupees. It's below that price. And Rajesh, this is from a perspective of 3 months. Now, something like a Hudco that has rallied so much in the last 1 year, it's gained over 200%. Do you see more upside into the counter?
I think long-term structure is bullish. Yes, stock is correcting in line with the market, and I think now still stock is holding about 20-day, 50-day moving average. That clearly giving us sign that yes, stock is holding the ground at higher level, and strength is there for near-term to short-term structure also. Yes, definitely one should look to buy Hudco in this correction. 190 should be your stop loss to buy for positional perspective. On the higher side, once stock able to take out 225, then this rally can extend to 250 level also. So we are bullish for Hudco with stop loss of 190.
Dinesh has got the next question. 2 counters that he's identified, Cummins as well as Ingersoll Rand, and he's doing an SIP in these 2 stocks. You can say that he's acquiring over a period of time on an ongoing basis. The question, Samir, is should he continue to do this, or should he stop this strategy?
Time being, I think the stock Cummins at least has run up quite significantly, and one can take a pause. So you see, Cummins used to trade at much cheaper valuations in the engineering space compared to a lot of the other competitors. Now the valuations to some extent have caught up. Of course, it's still trading cheaper. As an MNC, it's still trading cheaper than a lot of the others. But you might continue to retain that discount because Cummins doesn't have the same kind of profitability margins that some of the other engineering companies do have. Also, you got to realize that Cummins is also to some extent dependent on what happens in the global markets, because we do export from here. Cummins India does export to Cummins International as well. And if you see a bit of a slowdown going forward in some of the Western countries, then the order inflow and the growth may not be as significant as like market participants are expecting. So given the fact valuations are a bit stretched compared to its own historical, I think it's time to probably stop doing the SIP. These are great long-term stories again. Maybe if the stock corrects at that point, one can restart the reinvestment, but for the time being, I'll ask him to stop.
All right. The next counter we're talking about is Vijay Diagnostic. This one's from Rosemary. They want to buy into this counter. However, Rajesh, this counter has doubled in the last 1 year. Would you suggest buying at these levels, or should you wait for some correction?
I think the way stock is moving, I think he should hold on, as overall long-term structure for the stock is on the bullish side. Stock is almost trading near to its all-time high trajectory, though there is some correction from higher level, but I think still stock is holding above 730, 725 level. Trend is likely to remain on the bullish side. So I think he should hold on the position. Once his stock again, manages to cross above 790, 800 zone, then these rally can extend to 860 to 900 also. So hold with stop loss of 725.
Got it. Unfortunately, we're completely out of time on this particular edition of Ask Profit. Samir as well as Rajesh, thank you so much for joining in, for answering all the questions that you did. Viewers, hopefully the conversation that we've had today and the stocks that we've discussed have benefited you, even if your specific question may not have been answered. And we'll be back tomorrow at 11:30 to take even more of your questions. So do stay tuned for that. Meanwhile, lots more coming up over the course of the day. From Smriti, myself, and the team that put this show together, thank you so much for watching. Do stay tuned. This is NDTV Profit. Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video, and other multimodal technologies. These new LLMs can understand human voices, accents, and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other.
Welcome back to NDTV Profit, and today we have the QSR sector in focus, and particularly Sapphire Foods, who recently posted their Q4 results. And to talk about the company and the future outlook, we're joined by Mr. Sanjay Purohit, who is the whole-time director and group CEO at Sapphire Foods. Good morning, Mr. Purohit.
Good morning, Mihika, and it's great to be on your show.
Yes. So first, let's start about what's your outlook, and just tell us a little bit about how the quarter went by for the company.
So the last 5 or 6 quarters, in general, we have seen a muting of consumer demand. And this is not only in the QSR segment, but I think right across consumer product companies. This quarter, we grew at 13%. Our adjusted EBITDA was down 3%. And our overall EBITDA was up by 7%. So a muted quarter. When I look at the year in total, within the QSR segment, perhaps Sapphire Foods has been the outlier performer when I put in all aspects into consideration, which is revenue scale, revenue growth, EBITDA margin percentage growth, and net new additions. So we've grown restaurant sales by about 16%. We've grown adjusted EBITDA by 3%. So, and we've had about 120, 130 new restaurant additions. Apart from that, Sapphire KFC has perhaps been the #1 brand in the QSR industry. We've grown revenue by 18% and profit margins have actually grown by 30 basis points. So it's been a strong quarter for Sapphire. And plus, we've had other big wins. For example, we are the #1 QSR on the Dow Jones Sustainability Index. We are one of the top 3 franchisees for Yum brands on both KFC and Pizza Hut from a consumer and operating metrics perspective. So while the numbers are slightly muted, the underlying muscle has undoubtedly grown much stronger during the year for us.
Yes. Before I go on to the company specifics, could you maybe give us a demand outlook for FY25? Could there be, sparks of demand revival in the second half of the current financial year?
So we've been calling out that consumer demand has been constrained from perhaps Q4 of FY23. So now it's been nearly 5-6 quarters where we've seen this demand slow down. And it's vetted by the private final consumer expenditure metric that the government puts out in addition to the GDP. And that metric has seen the lowest growths over the last 5-6 quarters, over the last 20 years, perhaps. So undoubtedly, there is pressure. And interestingly, there is pressure at the lower and the middle class segment. What seems to be doing well in these pockets is still the premium segment and upper end. So generally, I don't see consumer demand reviving dramatically over the next 1 or 2 quarters. Perhaps after the monsoons, there might be some revival. Having said that, the most important thing that we can do is be in control of our destiny, which means that how do we make our brands more relevant, focus on innovation, advertising to drive occasions of consumption, increase marketing expenditure, and the consumer and operating standards, lift them continuously. So we are focused on what we can control and improve that for the consumers. Everything else will take care of itself.
Okay. And in terms of, given the backdrop of muted demand, what is the capacity addition in terms of stores that the company is guiding for FY25? And how would it be distributed quarter-wise?
So in December 21, after our first results post our IPO and listing, we had called out saying that we should be able to double our stores in 3 to 4 years. Now we feel that KFC should be able to double its store count by the end of this year, so which is in 3 years. In the case of Pizza Hut, our restaurant EBITDA margins have come down to single digit. And when it is single digit, then it doesn't meet our internal hurdle rates on ROCE. And therefore, we are going to be a little more cautious on our expansion. Once we get to the double-digit territory is when we will restart expansion. In Sri Lanka, we are seeing continued cautious expansion there as the economy is reviving. So it's a mixed bag. KFC continues as it is. Pizza Hut, we are cautious still. Profitability and indeed sales improve. And in Sri Lanka, we are cautious, but we are continuing to expand there.
So would there be any store expansions in Q1 for any of these segments?
Yeah. So typically, I'm loath to give a quarter by quarter guidance, Mika, because much can happen during the quarter. But I think the general outlook that I've given stays.
Okay, got it. And in terms of growth for the overall company, top line and bottom line, for FY25, is it our expectations to be flat, or could we see double-digit growth as well?
So again, our first guidance was to say we aspire to grow revenue by 25% and EBITDA by about 30% and double the store count, as I said earlier, in 3 to 4 years' time. It's been 3 years since we listed, and our 3-year scorecard suggests that we have blown those aspirations perhaps out of the water. We have grown revenue by 37%, EBITDA has grown significantly, and we're more or less on course to double the store count in 3 to 4 years. That's our going forward aspiration. However, again, I'm quite loath to give a quarter and a specific year guidance, because much can happen in the Indian economy and there would be ups and downs, but over a longer term trend, this continues to remain our aspiration. Revenue by 25%, EBITDA about 30%.
Okay, got it. Now, first coming to Pizza Hut, now margins were effectively negative 2.7%. When does the company foresee to at least reach the EBITDA break-even level? Could it be this financial year?
Yeah. So undoubtedly, the last 4 or 5 quarters on Pizza Hut have been tough. I've said in a muted economic environment, heightened competition also has taken its toll on the brand, and a number 2 brand perhaps suffers a little more. And therefore, we have said we are going to aggressively push the agenda of the brand. The brand holds a tremendous amount of equity in the consumer's mind even today. I mean, it's finally a brand that all of us have grown up on. It's 25 years old, and therefore it's quite powerful. But we have got to actualize that the power that it exists in the consumer's mind. We've got to actualize it from a wallet perspective. So what we called out 1 or 2 quarters ago is that we want to up our innovation game. We've taken in marketing investment further, and I had called out last quarter that we should see innovation in the next 1 or 2 quarters. I'm quite happy to say that we launched Melts in March, and Melts is quite a unique pizza concept. It's a folded pizza concept. More importantly, it takes pizza consumption into newer territory, the snacking territory as against meal territory. So we've put in significant amount of marketing investment. So you see the Q4 negative 2.7% is largely because of the higher marketing that we have put in. Without that, the brand is actually at break even. So, and as we've gone from Jan, Feb, March into April, May, June quarter, we are seeing a better than normal sequential uplift. Now, I'll be still cautious to say, let me have a look at it over the next couple of months. But the game plan is quite clear. Market relevant innovation backed by significantly higher marketing investment. And on the consumer and operational metrics side, I think we have made big improvements. We launched Dragon Tail, which is a very unique kitchen planning tool. If you see our ratings across our 300 plus stores on Google, Swiggy, Zomato, all of them have seen marked improvement over the last 1 year. So this is what we can control, what is in our hands, make the brand again strong and revive consumer interest behind it.
Got it, Mr. Purohit. And you mentioned the food aggregators and delivery platforms. Now, pizza is a generally preferred delivery category, and it's also reflected in your channel sales distribution for Pizza Hut, 50%. Is the strategy to focus on delivery, or are you going to continue dine-in?
Oh, no, not at all. We've always said that the best way for a food brand to operate in the country is through an omni-channel model. 70% of the investment behind a store goes into the kitchen. And therefore, why would we stop the consumer from accessing the brand across every single channel? So for us, we are channel agnostic. In fact, we say we are omni-channel. Dine-in is very important. Takeaway is very important. Own delivery, aggregator delivery. Right across, I think we focus on all channels. And that's the only way, I believe, to be profitable in the foods segment.
So what's the targeted mix? Is there an optimum mix that Sapphire Food aims to go to?
Very well. So the mix is slightly different in the case of KFC and Pizza Hut. Post-COVID, we've come to in the region of 40%, 60% dine-in takeaway on KFC and 40% on delivery. In the case of Pizza Hut, it is 50-50. We are seeing reasonable consistency on this contribution over the last perhaps 18 months or so. So it's not changed dramatically at all.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can
The RBI clamps down on Kotak Mahindra Bank. Sources tell us that the bank's IT spends may not have been the problem after all. The problem was bigger and lay in the prioritizing this budget. Pragati brings us more details on this exclusive story. Pragati, over to you.
Right, Samina, thanks so much. Yes, so Kotak Mahindra Bank is still in the news after RBI clamped down on 24th April. Now, a little bit of more digging deep, and we got to know that sources told us that while RBI pointed out issues in the IT infra or in the tech spends, and all our eyes were on how much the bank is spending on its tech, that may not have been issue because the bank, while it spent about 1,600 to 1,700 odd crore in FY24, the prioritization of these spends as to the fact that these spends were not going towards actually solving the problems was the issue. Now, sources told us, I'm going to list down 4 to 5 points for the benefit of our viewers, is that first, the IT funding or the budget was pretty solid for Kotak Mahindra Bank, but the budgeting of the spending was the issue. The priority was not being laid on solving the technical loopholes, especially in the legacy infrastructure of the bank. Now, sources told us that the bank was using legacy infra, and these systems were not being updated or upgraded as per the latest models, and that is why it could not handle the volume of the online payments that could happen, and hence the significant outages that were reported in the system. The next that we have to see is the lack of employee costs at Kotak Mahindra Bank. Now, what we know is that the way an IT budget is planned at Kotak Mahindra Bank, about 20% of the funds are going towards employee costs or the employee expenses. But sources told us that this was not sufficient because despite the bank having a huge workforce of about 1,200, despite the bank having a huge workforce, apologies for that, only about 1,200 to 1,500 people were deployed in its tech team, which were not sufficient. Most of the skilled people needed for this job did not exist or came from the middle management, where anyway the attrition levels were very high. So the lack of funds towards proper having skilled talent in this domain was another problem for Kotak Mahindra Bank. Next issue that we got to know was that the infra that was there in place, for example, example, the disaster management drills that were happening, they were not sufficient. For instance, sources told us that whatever the DR drills that were taking place, they were not just insufficient, but the people that were needed in order to monitor the entire system was the entire issue. And hence, whatever all these factors coming together led towards the RBI clampdown on Kotak Mahindra Bank.
Oh, thank you, Pragati. That's the sense coming in on what led to that tech problem with Kotak Mahindra Bank, and in which in result cost the RBI to crack the whip on them. The stock's still reeling under pressure as they managed to recover after the big fall that it witnessed a few weeks ago. Well, moving on from Kotak to Dilip Bilkorn, reported numbers. It's been a good quarter for Dilip Bilkorn once again. Rohan Suryavanshi, head strategy and planning at Dilip Bilkorn, joins in to break it down for us. Afternoon, Rohan. Thanks for joining in. Your stock has been quite a star performer in the last couple of months. Today, of course, the market sentiment is not very supportive, but it's been a good quarter from your stable. You want to walk us through what the last quarter FY24 looked like, and looking into FY25, what sort of guidance are you giving us?
Hi, Samina. Pleasure to be on your show. Yes, it was a good quarter for us, and but then it's a good quarter for infrastructure sector in general. When we look at the final quarter, and even the quarter, and this pace is kind of continued into the quarter one till the rainfall hit. So it was a good one. We did almost about 2,900 crores of top line on a standalone basis, and even the EBITDA was good at almost 350 crores. PAT was also good at almost about 120, and for an overall year, we closed at about the full year at about 10,500 crores. So it was a good year. The EBITDA was healthy, about almost 1,300 crores of EBITDA and plus of 420 crores of net profit. So we were happy with the performance. In this financial year, we've kind of guided towards a similar kind of number right now in terms of top line of around same EBITDA of 12 to 14% range. And with improving PAT margins. The bigger thing that we've talked about in this year is we have already reduced debt by 860 crores in FY24, and right now our current debt to EBITDA, net debt to EBITDA, is almost 1.1 times, and net debt to equity is 0.29 times. So our total debt is about net debt is about 1,500 crores. Now we're going to reduce this by at least 500 crores more in this financial year and bring it down to 1,000 crores. And the idea is to be a completely debt-free company by in the next couple of financial years. So that's the broad idea for us. In FY26, we want to be, and those are the kind of focus areas for us. And in terms of revenue, I think we've said that we will kind of upgrade you guys or tell you more as the year progresses. Because of this being an election year, the ordering was weaker, but as soon as results are announced, we expect the ordering to be strong.
Right. I'm glad you bring that up, Rohan, because when we spoke to L&T earlier this last week, they indicated the same thing. They said the next 2 quarters will remain slow because of election. Employees and workers have already left for their villages, which of course on the back of voting. So all that would mean that the next 2 quarters or the first 2 quarters of FY25 will be slow. Is that a similar sort of trend we can be expecting from you? Quiet next 2 quarters and a pickup from third and fourth quarter?
Yeah, in terms of ordering, it will, once the government, whatever government comes to power, I think so if I talk specifically about just NHAI and MORTH, the road ministry, there are almost 120,000 crores of orders which have been floated for a while, but they were not awarded. So we feel there will be a flurry of ordering activity as soon as elections start. Now, how that pace will look at, whether this will be more muted in the coming quarter and then pick up from quarter 3 or quarter 4 is anyone's guess. We will see depending on who the minister comes in, what the government is. So all those things will definitely matter, but the orders are already kind of floated. Even in other sectors where we are actively looking at, whether it's railways, whether it's water resources, all those areas, there are a bunch of orders. And I think they're just waiting for this. So I wouldn't want to venture into the area of when the ordering activity would really, really pick up. But yeah, usually I would definitely agree with our friends at L&T that the ordering activity tends to be stronger in the second half of the financial year.
No challenges in execution, right? You want to tell me what your order book is and what the execution timeline is looking like with everything that you're currently sitting on?
Currently, our order book is 17,000 crore plus. So to do that 10,000 crores of revenue, I don't really see a challenge. I think we are in good space from that perspective. The year after is where we would want to have comfort, and for that, where the new ordering activity can really help. But I don't see it as a big concern because of the number of orders that have already been floated, and my team's been working very actively on working all those different tenders.
Also, I mean, you are from a capital-intensive business, and it's very impressive to know that you've successfully reduced your debt significantly and plan to do so furthermore. And we'll talk about that in a minute, but your margins have improved substantially this quarter. I think you're up around 9.5 versus 6.5 odd that we'd seen in the same quarter last year. Going into FY25, you think this could be the lower end of the margin band? Double-digit margins can be expected?
I mean, our margins are improving primarily because, during COVID time, we suffered a whole bunch of losses, and we were carrying a lot of projects where timelines expanded, because of which those projects gave us certain losses. But now, as those projects have been completed and handed over, and as new projects are coming in, so margins are obviously improving continuously basis that. And this should continue to happen because debt will be getting paid down. We are not investing a lot in new equipment. Earlier, Dilip Bilpon used to invest almost 500 crores ballpark every year in new equipment, which has come down to 50 to 70 odd crores now. So we have a great, asset base already. We are looking at securing good orders. We are looking at focusing on cash flows and bottom line improvement rather than making large capex investments. And even so, equipment investment was one area where we made investments. Then there was working capital, and then the third was equity in our PPP projects. Both the equipment and the working capital we have been, consciously and very aggressively reducing. We look at the debt reduction and all, so that has been constant sort of plan. When it comes to investment into equity of PPP projects, there what we've done, we've also partnered with funds. We were earlier monetizing our assets as they were completed and using that capital to then reinvest into new assets. So now we've also, along with that, partnered with Alpha Investments, Alpha Alternatives, where we are setting up an InvIT together. So even that progress is going pretty at a decent
Rohan,
pace.
bring us up to speed with timelines there, because I know there'll be significant cash flow generation from there, which will flow back into the business. Has that started yet? When can we see that cash flow flowing in? First quarter FY25, maybe a few months out? You want to just give us a sense of timeline so we get a better understanding of the strategic tie-up?
Sure. So the InvIT would be set up sometime in the process is on, it's with SEBI consideration. That would be set up in, I think, quarter 3 to quarter 4 is anyone's guess based on when we have the final go ahead from SEBI. Once that is done, so the deal with Alpha is we are giving them 18 projects in total. So 8 projects are going in the first bit of it, and then the 10 projects will be going by FY26 completion. So these 8 projects and those 10 more projects in total would be giving us a cash flow of almost 450 to 500 crores every year from these assets, besides the monetary sort of compensation that we're having for the 74% units that we'll be holding in the InvIT. Which would be worth of like 4.5 to 5,000 crores kind of ballpark figure, like based on what the final valuation comes out. So that would be giving us that, like I said, 450 to 500 crores of free cash every year.
So that will be used, Rohan, to retire 500 crores of debt this year and an additional 1,000 next year?
No, so this 500 crore number we will hit from FY26 and onwards, because these projects will come on to the InvIT. So I think for the first 8 projects, if I was to, and I'm ballparking it, so somewhere in 200 something odd range is the money that we will get by the end of, whenever there's a first full year completion of the InvIT cash flow. For the first 8 projects, about this much, and when the other 10 projects add up, it will jump up to 450 to 500. So first 8, about 200 to 250 ballpark figure.
So I do understand that this is capital intensive and that InvIT cash flow will only flow in later on, and you have an ambition of reducing your debt. Is it a tall task to turn debt free? Is that even a potential likelihood over the next couple of years? And also what I want to understand from you is, while everything is status quo and you're not going to be looking at more investments in the business, is there a possibility that over the course of the next 1.5 year, you may actually revisit those plans and reinvest in the business, or it's not required at this stage?
So we will be continuing to invest in PPP assets, and that is a separate cash flow that we're getting. When it comes to debt reduction, there are strong cash flows that the company is generating on its own. Those are the ones which are primarily being used to retire debt. Along with that, we had also issued warrants to Alpha Alternatives of about 500 crores, out of which, so 533 crores to be exact, out of which about 130 odd crores of capital has already been converted and has come into the company. The rest of these almost 400 crores worth of warrants need to be converted by June of 25. So we have another year or so that's left. So that capital coming in, plus our internal cash flows being very solid, and then this monetization capital from Alpha. So because Alpha is buying out that 26% in all these assets, so that capital coming in. So I don't foresee it to be a challenge given our current business sort of opportunities that we've invested in.
Right. Thank you, Ron. It's always great talking to you, and it's always good to know that things are looking great for Dilip Bilkon. Of course, the investments made in the past are paying up, and the legacy projects that you were, of course, putting pressure on margins are also now behind the company. But thank you. We'll try and connect with you again soon to get a better understanding and a more in-depth conversation of business. Up until then, good luck and congratulations. With that, we're completely out of time on the show. Thanks for watching, but stay tuned to NDTV Profit.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Well, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards...
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Stock selection isn't an easy task.
And neither is choosing the right one.
Hello and welcome to NDTV Profit. You're joining us here. We are at Aloha, very close to the Kochi airport, of course, where we're at the Federal Bank headquarters. And I have with me Mr. Shyam Srinivasan, the MD and CEO of the bank. Mr. Srinivasan, thank you so much for taking time out and talking to us. Pleasure, honestly, always talking to you. I want to start this chat with what is now has become about a 14-year-long tenure at Federal Bank. And obviously you've seen through cycles and cycles within the sector, but you've also seen cycles at Federal Bank. Tell us a little bit about what these 14 years have looked like.
Oh geez, I didn't realize this is going to be like a 14-year story. But yeah, it's been, let's say, fascinating. If you take it in slices of time, the first 5, the next and the next, I think the nature of how Indian banking and how regulations in banking have evolved have been fascinating, right? And we've seen it. Second, we all know technology is driving change. The distance between technology and banking is narrowing, or where one ends, the other begins. It's now we're living it. I recall in the early part of 2000, the decade starting 10, we used to say technology will dominate. Now I think it's become real. So between comparative forces, emergence of new technology and invasion of technology into banking, regulatory changes that are at times ahead of some of the changes and or keeping pace, a lot has changed. What I can say, and I think the bank has come out well through all these phases. And if there's one thing we take great pride in, is we've been fairly scratchless in these years and come out without doing things that have happened without disturbing the furniture, so to say. So in some ways, I feel relieved that we are recognized for being a bank that's credible, consistent, and growing. And I believe that this will be our platform and our calling card for greater success. So yeah, I'd like to believe we've made good progress.
In an era of some cowboys out there, we've been true to the banker name tag. I just want to bring the focus on Federal Bank as an institution now. So, what was originally a more old generation regional bank, today, of course, is a pan-India lender. Most of your business comes from outside of Kerala. I wanted to understand from you in terms of the way the business has expanded. What has been a focus strategy for you, at least over the last couple of years, where the world has come out of COVID and things are starting to look a little better now?
No, I think to understand that, we have to go back to what our roots are, right? We have been traditionally very strong on NR and SME, small business lending, small and medium-sized business. That has been the core.
Yeah.
And because of that, we've been deposit rich. And we've done well. So through our expansion phase, we always believed that we must preserve this. And this inherent skill of the bank, we can carry across the country. So if you broadly map the world of remittances or world of NR money coming into India, principally it was Middle East, Kerala. And in that corridor, we dominated a large share.
Yeah.
That was and hopefully is our strength yet.
Okay.
But we realized that the non-Middle East, non-Kerala, Middle East, non-Kerala, and any part of that quadrant are all growing quite nicely. And therefore, we positioned ourselves in our expansion into geographies where NR remittances are and deposits are a large part. So if you take Tamil Nadu, Maharashtra, Karnataka, parts of North, this is where the bulk of the remittances ex-Kerala comes into India. So we created our catchment in these geographies.
Yeah.
So over the last many years, now we are 1,500 branches. About 900 branches are non-Kerala. And these are all in these geographies. So in most of these states, Tamil Nadu, we have 250 branches now, and the other states have about 150 plus minus. So these have become our conduit for getting non-resident. So the core strength of Federal Bank moved into these geographies. But having been present in those areas, with our lending skills in small and medium, we'll be able to capture the commercial banking, business banking order. Then around 2015 middle, we created the whole corporate banking capability, which was not our core strength. Then, over the last 8-9 years, Harsh and team have built a remarkably strong corporate franchise. So today, thankfully, you mentioned that we are a pan-India franchise. One thought, and that's been a pervading thought, is never have too much concentration in a geography, segment, or product.
Okay.
So if you see our business mix today, it's almost one-third between corporate, retail, and commercial.
Right.
And depends on where you put the ticket size. You could say retail is about 55 and corporate is about 45. So we've tried to keep that balance going. And in that construct, we've created the franchise in such a way that in most geographies, we have now physical footprint to get retail domestic deposits. And over the last 8-10 years, our non-home market, Kerala deposits, have grown at a reasonable clip. So we are able to fund our credit growth through all this. And of course, post-COVID, these have been accelerated. We in 2011 and 16 expanded our network by we doubled it. Then between 16 and 19, we said we'll go more digital, less physical footprint. Around 20, we started our expansion. COVID came, so we halted it for 2 years. So that 22, 23, 24, the last 2.5 years, we've added almost 250 branches. The one that went by, March 24, we added 140 branches. That was, I think, our largest single year expansion that happened. And we believe between now and the next 3-4 years, between 5 and 7% expansion each year is something that's going to happen. So footprint expansion, presence in many geographies. And I think presence gives us the right to be at the discussion table. Right? Both physical presence, digital presence, and more importantly, our corporate and commercial team are more feet. They are out in the market. So I think our presence combined by this strategy has worked quite well.
So you mentioned this point that you don't need to be, you don't want to be concentrated in area or product, right? Any single area or product. Does this apply even if it's your home market or whatever, a place where you were founded as a lender?
No, I mean,
the local community typically expects that a lender that was founded there would be there, or the majority.
This is not a either or strategy; it's an and strategy. Right. We are very prominent here. Hopefully, we'll continue to be prominent and have meaningful presence. But any one geography has limitations, and it's not going to be a infinite opportunity. If you compare to the India opportunity, no one state will give you more than 3 to 5%.
Correct.
And which is therefore, if we take Kerala, it's about 3.5% of India's GDP. There's that much you can do. And we will play our largest share. We have 15-16% market share there. And we must remember that at 15-16, the incremental market share gains are that much more tougher and that much more challenging, right? Because next bank or next competitor is not going to let you just
keep going.
This is the commercial dynamics work so. So I think our presence here remains prominent, and there's no reason we should lose our, actually not even prominent, dominant, and will continue to be so. But like I said, these are not either this or that. It's both. There's nothing to suggest that we are under-investing here and growing somewhere else. We will do more. Like last year, for the longest period, we had not added footprint. Last year, we added about 12 branches in Kerala, which was now a requirement because a lot has happened. Particularly in North Kerala, our presence was relatively lower than, say, Central and South. So we said we'll add more presence. And that also happens to be a catchment, which is like a lot of non-resident comes in. So I think it's a continuous evolution, but I just want to mention that it's not either or, it's an and strategy.
Okay, fair enough. Okay. Now coming to specifics in the business, the strategy with respect to your corporate portfolio, something that you started later in the life of the bank. How do you see the current environment? Because most banks are reporting a significant jump in their corporate credit growth. You had the regulator come in with a draft regulation which upset some people. At least they won't admit it on record, but offline they do say that it's a little onerous on the project financing draft guidelines that they put out. what do you see? Where does this corporate credit growth go from here? Because companies have stopped spending their own money now, and they are tapping other sources. How does this go from here?
I think, see, the two parts, right? One is, I think, for us, as it has been in the recent few years, a corporate credit, and when I say corporate, I mean the higher end of commercial banking also.
Yes.
Like that is our sweet spot. Will grow, and it will grow well into the teens and maybe even higher teens, right? Mid and higher teens. Our base is relatively small. Between corporate and commercial, we're still about 100,000 crores.
Yeah.
Right. So I think scale and opportunity is there. Second, we built a team which is really high end. Third, the technology capability we are putting in there matches the best. In fact, as we speak, the rollouts of different phases of our next wave of tech for corporate is underway. So scale opportunity is there. Now, whether these can be at 20% or 18% or 15%, actually it's going to be dependent on your resource raising capability as opposed to the opportunity. The opportunity is there, and all said our market share is sub 2%. Right? So if India keeps growing at 6 to 7%, which is not an unreasonable expectation, corporate will grow between 12 and 15%. We are a low share player, so we can grow well north of 15. So whether we grow north of 15 or at 15 or slightly below is going to be dependent on cost of resources. In FY24, our corporate grew somewhere in the teens. We let go of some assets which were really at the lower end of the pricing curve and booked some new. If I had not let go, we would have grown 20%.
Okay.
I believe in the year and the years ahead, that is possible, right? And now whether we grow at 15 or 14 or 20 depends on our ability to raise resources at the right place. What we have told ourselves, and if you see our book for long periods of time, the A and above rating dominates our book.
Right.
There is a conscious trade-off you're making. These guys will not pay us big pricing. The only way we can get more from them is being a banker as opposed to a lender. So in the last 2 years, Harsh and team, what they have done is made sure that the corporate relationships that we have, we are able to get more from them as opposed to just being the fifth or the fourth lender to them.
Right.
I think our overall product capabilities have matured to a level where they are willing to give us a larger share of their wallet. So I think corporate will continue, just not lending, but full banker, including payroll, savings account, vendor financing, their whole supply chain. And I think as we scale up and improve our capabilities on technology, I do believe this will be a large opportunity. And goes back to my original point, we do want to stay reasonably equally weighted across business, because one thing I can say with some confidence over the 15 years, cycles will come and go. Those who keep honest to their core structure have come out better through cycles. I believe we've come out better. If you take a CAGR of our growth over this period, it's 15% CAGR.
Right.
I can reasonable confidence say no other bank has had this over an extended period. They may have had 25, fallen off, come up, and I think ours has been a fairly sustained story.
Stable.
Therefore, my belief is reinforced by the fact that we should stay in businesses. Yeah, you'll have to dial in, dial out depending on the environment, but not like get out of a business and, because then you're not a banker. Then you're a good fair weather friend. Then it doesn't live up to our expectation of Rishta and, perfect banking partner. So I think we are trying to live that.
You have a liabilities base, what now? 2.5, a little more than 2.5 lakh crores.
2.6 lakh crores.
So I'm curious to understand one of the few lenders at this point in time who has a wider gap between your advances and your deposits book. How long can this situation continue where banks are growing their deposits, but they're not growing it fast soon enough as much as your credit is growing? And then obviously that's pushing your CD ratio higher and it's making a lot of people uncomfortable. How long can this continue?
Business model. We have told ourselves early 80s should be our CD ratio. We don't want to violate that. And I think we've fairly stayed honest to it for long periods of time. We are blessed with a remarkably good retail franchise. Though it has come down, bulk has gone up, but certainly never in the level that many others are. And that will not change. And yes, we have to calibrate some credit to support the, if we are growing credit 18-20%, we must grow deposit 18-20%. At least 17-18%. Even through the toughest period last year and the previous, we grew that kind of deposits. Term deposits is a pricing, and it's relatively elastic to pricing. We believe we can grow, and we have. The traditional low-cost deposits, CA and SA, that has seen some up and down, and I think some of the core areas of non-resident money coming in, some behavioral change of clients have taken place, and I think it looks at this point in time quite irreversible, which means our retail nature of our deposits from being 90% will become 80%, but that I think we will ensure. So I believe growing at our scale between 16-20% depending on the year on both credit and deposits is possible without violating our 80-82% CD ratio.
What is this change in behavior you're referring to?
I think post-COVID, visibly, the NR behavior on deposits has changed. Probably paying off earlier debt, investing in many who are returning are probably setting up businesses, so the money is going into that, paying off debt for family, wedding, education, starting new businesses, putting it into the markets. These have become more prominent than it ever was. So I think the remittance volumes coming into India has still remained robust. You would have seen $110 billion came in.
Not a lot of it is finding way to the banks.
Comes to the bank. We are now 21% of remittances comes through us. So we are a prominent remittance conduit.
Correct.
But it doesn't go into bank deposits as much as it did earlier. If 21% came, you could say with reasonable confidence 16-18% would stay at deposits. Now it's coming more like 13-14%. So some money is going into the instruments I told you, either to pay off debt, start a new business, going into the markets, or for consumption, because we are seeing consumption pick up. And so while it's not a deposit, it's coming through as credit expansion.
Got it.
So we are seeing that happen. New property.
Is there a pricing point as well here?
On deposits?
Yeah, on these NR deposits.
No, but
anyway, they're higher than what they would get in the domestic markets.
No difference. NR pricing is the same as domestic pricing.
No, I'm talking about their domestic.
I think that also, I think that arbitrage is coming down because interest rates have remained high in many other markets. So converted into rupee, they may not be seeing much of an opportunity.
So maybe that's why.
That also could be.
Got it. Let me talk about the retail lending business a little bit. We have seen some changes coming in within the entire banking sector. The RBI has come out in November with those specific guidelines saying that, listen, you need to increase the risk weight on these loans. That has made some banks more cautious. Others are saying it doesn't look as bad as one would think. What is your viewpoint? In the current space, is unsecured still a lucrative business?
If the credit quality doesn't dramatically change, at this point it doesn't look like, unsecured will remain a very good business. For us, it's a very small part of our overall. Of our 2.1 lakh crores, our cumulative credit card, personal loans, and microfinance, assuming these are the three, is 10,000 crores. So it's still sub 5%, sub 4%.
Right.
But it's growing at a nice clip, and I believe it will grow at the same rate. But on a growing denominator, from 4%, it may become 5-6%. So I don't see it as on our windscreen, it's not going to be a big worry. But having said that, we should watch for the delinquencies and the slippage rates in that. I think genuinely with the bureau and the underwriting skills improving, it hasn't deteriorated. It's still holding reasonably well. If this continues, then there should not be any panic. And anyway, we are providing sufficiently for it. So if a business has predictable 3-4% loss rate, is not a worry. If a business has 0, 1, 2, 3, 4, 5, 6, 7 kind of escalating loss rate, you have to worry. My sense is, and I think mentioned to you last time in my interview, I started my career in unsecured.
Yes.
And I've seen unsecured over last 30, 35 years.
Yes.
I've seen that the predictability of a portfolio depends not in your collection. I think that's useful, is when you underwrite. Now with underwriting skills of banks and the bureau quality improving and so much third-party data being available, I think this is now getting to be more predictably good quality. That said, if somebody is going to be very sort of cowboyish and say, I am going to ignore all this and lend at any cost, yes, you will face some pain. But I think the banks are being quite thoughtful about it.
Okay.
Sorry about that.
No
I
worries.
don't know why.
No worries. We'll just cut it out. That's
Supposed to be on mute.
That's okay. Okay. I want to bring up sort of an elephant in the room kind of a question of your tenure and the way the last year, a little bit of, I would say, at least for me as somebody who tracks the bank, it was a bit of period of confusion, and then now some clarity is emerging. I wanted to get a sense from you as you look back on everything that has happened over the last 14 years, and now there is a definitive date that's coming up. What would you say was probably the big highlights of your tenure this year?
Oh. I certainly have not sat and thought about that.
Too much work to do today.
Yeah, not only that. I think about this. I think it was 2015 in our board we agreed our aspiration is to be the most admired bank. And we took that as a very brave call, because when you tell yourself you want to be the most admired, you are putting yourself on a treadmill, because whatever you do is never good enough. Right? And I have personally, my philosophy is I am happily dissatisfied. I'm never dissatisfied, but I'm never unhappy. And that's a philosophy, and I try to build it as a bank culture.
Right.
I don't want complacency. I want us to be happy, but I want to be dissatisfied. And if you add that back to our most admired bank philosophy, we are telling ourselves we are on a treadmill. Whatever you do is never good enough, because admiration is bought and not earned. Today you will like me, one wrong act, you'll put me back in the boondocks, right? So we are pushing ourselves. So if you take that as our philosophy, I think over the years, we are struggling to get to the space where, Federal is the best in class.
Yeah.
I did point to you, CAGR of our bank over
Correct.
many periods of time. We've been relatively scratchless. We've taken balanced calls. But it comes at the cost of being called a boring bank.
Yeah.
Right? My favorite all-time is Rahul Dravid. Right? And I've said this very often. And I regard him as somebody who's credible, consistent. You can look up to and feel reassured that you're talking to a man of great credibility. And I do believe Federal is in that space of being credible, consistent. Can we do something more? Yeah, we could have. Will we do more? Absolutely, yes. But I think if I look back with some satisfaction, the fact that the platform is strong. We have built a great team. When I joined, our bank's average age was 47. Now the average age is 35. Every year we get 1 year younger. I don't know how many organizations will get younger each passing year, because we are recruiting almost 15 to 1600 people. We are retiring 300-400 people. So the number of people in the system is increasing, and all of them are in their sub 25s. So the average age of the bank is getting younger each passing year. Naturally, in a younger digital environment, the energy levels are different level. So I think we are positioning ourselves for a nice outcome.
Great. Then the related question to that would be then your successor. There has been a lot of speculation, some of it thanks to us. But what do you see your successor coming in and doing, or at least what's your hope that your successor comes in and does?
No, I think, like I said, I think we are a good platform. There are definitely areas of our bank that have to get much better. For example, despite all the hard work, our NIMs are amongst the lower end of the spectrum. It's a choice. We decided to keep our NIMs relatively lower, but thankfully our credit costs are way lower. So the risk-adjusted NIM is amongst the best in class, roughly 3% odd.
Right.
But having said that, there is a scope for NIMs going up. So certainly the leadership team of the bank will look at how does NIM expand, right? And if that NIM expansion flows to ROA, nothing better. So we've moved from 0.7% ROA in 2000 1.18 to 1.32% in Q4. I don't know if many banks have, without a scratch, moved the ROA by 60 basis points increased in a 6-year period. We said every year 10 basis point kind of improvement, and we've delivered. Now, if that momentum continues, we should be close to 1.6, 1.7 in the next 3 years, which will put us at the top of the pile. So I'm hoping, I remain a shareholder of our bank, right? So I will hopefully benefit by the good work done by the team. And, I think we are in a promising.
The final question I wanted to ask you, anything that's in your agenda when you started out here, that's probably still something that you've not left unchecked?
All are work in progress. I'll tell you, and it's a conscious call. Not that I don't want to be satisfied, but I'm telling myself I should not be. Long way years back, I attended a program in the London Business School. A professor of mine, a professor called Don Sull, very good he was. So the day your leader is either satisfied or starts building an office with fountains and all, quit that organization, right? So I have held that true to myself. Anytime the leadership, and I tell my team, if your leader is overly satisfied and or starting to do stuff that is looking very page 3, quit that organization.
Yeah.
So I think our bank is, it goes back to boring. It's good to be boring.
Good to be boring. All right, Mr. Srinivasan, thank you so much for taking time out and talking to us.
Thank you.
Pleasure talking to you again, sir.
Thank you so much.
Thank you so much.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Benchmark indices come off the day's low on a volatile day of trade. The Nifty hovers around the 22,000 mark. Sectoral action mixed. Pharma gains the most while Nifty Auto loses the most. PSU banks and oil and gas follow suit. Tata Motors slumps in trade on muted FY25 outlook. Management says market growth rate is likely to moderate and pent-up demand is exhausted.
तो 6 जून के पहले आप बाय कर लेना, 4 जून के पहले वो सूट अप करेगा.
Home Minister Amit Shah, in an exclusive interview to NDTV, says markets will shoot up after the election results, says buy before June 4th. Voters in 96 constituencies across 9 states and 1 union territory in Phase 4 of the Lok Sabha elections in the fray. Voter turnout till 11 a.m. is at 25%. Politicians and actors among early voters. Hello and welcome. You're watching Market IQ and I'm your host Pallavi Nahata. Let's take a quick look at where the markets are at first. It continues to be an extremely volatile day of trade on the street. While we're definitely off the day's lows, we're still marginally in the red. The Nifty down by about just 0.1%, down by about 30 points currently. The Sensex too down marginally in the red by 0.2%. But it remains a volatile day of trade. The India VIX continues to see a spike, possibly yet another indication of the fear and uncertainty that continues to prevail in the markets. We could be possibly looking at the next few days too continuing to remain volatile. But let's also have a quick look at the key constituents of the Nifty 50. Tata Motors is down by about over 8% in today's day of trade, and it's proving to be the largest drag on the Nifty 50. But other contributors also include RIL, Bharti and SBI. What's performing better is HDFC Bank, L&T and Asian Paints. Still, most of the stocks in the Nifty 50 in the decline versus a handful of advances. Let's also look at where we are at on some of the key sectoral indices. Well, no surprises there. The Nifty Auto down the most, that's down by over 2%. Nifty PSU Bank, Nifty Oil and Gas, Nifty Energy are all down by anywhere between 1% to about 1.5%. What's performing better is the Nifty Pharma and the Nifty Healthcare Index. They're both up in the green by about over 1%. Well, also the broader markets continue to show it's showing a weaker downtrend than the Nifty 50, while the Nifty Mid-Cap 150 is down by about 1/3%. The Nifty Small Cap 250 is actually down by 0.7% nearly. But coming back to one of the key stocks in focus in today's day of trade, Tata Motors. Along with Tata Motors, other automobile companies have come up with their fourth quarter earnings over the weekend. My colleague Puneet joins us with more on these. Puneet?
Yeah, thanks for that. So Tata Motors, one of the key contributors to the Nifty Auto, down by roughly upwards of 2% in the morning. 27,000 crores of market cap eroded today. If you look at the results, the Q4 results were really strong, but the key negative was the FY25 commentary. So we look at the 5 key reasons that may have led to this particular fall. One is a negative management commentary on the passenger vehicle side. The company has said that over the last 2 years, the segment has seen strong growth, reporting roughly 570,000 sales in this particular financial year of 2024. Going forward, they see less than 5% of growth in this particular segment. We see the second one where they see that the market growth in the PV segment will be likely limited going forward, as we've seen a sharp uptrend in sales over the last couple of years from 2022, where the rise of personal mobility post the pandemic was one of the key sales triggers. While over the last 2 years, we've seen electric vehicles sales rise up to roughly 72,000 for Tata Motors as well. When we look at the pent-up demand, they see that this might be exhausted because of these particular factors as well. The CV cycle is another key trigger which is negative for the company. This is affected due to elections as well, and the company sees recovery, if any, only in the second half of the financial year. The third one is basically on Jaguar and Land Rover, which is the key negative for the company. Elara Securities has said that this could see just roughly 2% of growth in sales over the next 2 financial years, while the other key problem is the £3.5 billion investment that JLR is doing, which will lead to negative free cash flow for the company. And finally, to take forward the new FAME subsidy, which has been the scheme has ended on 31st of March and the new EMPS scheme has come in. The company has given some cautious commentary going forward on how buyers react to the subsidy going down by roughly 50%. But these are just some of the reasons we think that the management commentary going forward is slightly negative for Tata Motors. Going forward, we'll see how the sales recovers in the next couple of months. Back to you.
Thank you so much for that, Puneet. Tata Motors down by about 8.5%. But moving on, weeks after the RBI clamped down on Kotak Mahindra Bank, sources tell us that the bank's IT spends may not have been the problem after all. The problem was bigger and lay in prioritizing this budget. My colleague Pragati brings us the exclusive details. Pragati?
Yes, thanks for that. So weeks after RBI's clampdown, as we all know, Kotak Mahindra Bank spent roughly about 1,700 odd crore in FY24 on its IT or technology spends. Now, when the clampdown happened, the real question was that did the bank lack in allotting these funds, or was it about, or what exactly went wrong? So sources told us that the budget or the IT budget of the bank was not really the problem, but the problem was in prioritizing these funds in order to solve the technical loopholes that happened. I'm going to list down 4 or 5 key points that we have gathered from our sources as to what was the problem in Kotak Mahindra Bank's IT budget. First, there was a lack of prioritizing this budget towards solution towards technical loopholes, especially in the legacy infrastructure. Now, the bank was using legacy infra where upgrades were not happening, and hence the bank's infra could not actually handle the volume of online payments that were coming onto its channel. Typically, at the IT budget of Kotak Mahindra Bank is divided into 4 parts. That's what sources told us. And while different parts have different allocations, one of the allocation goes towards the employee cost, that is having a particular tech team, and about 20% of the budget is allotted towards that. Now, what we know from our sources is that there was a lack of adequate funds towards the employee cost. In fact, despite having a huge workforce, only about 1,200 to 1,500 people were employed in Kotak's IT team, which was significantly less. Hence, more skilled people that were needed in order to handle the job, or the tech jobs that were needed, were not really present in the system. Another thing was that most of the skilled people needed in the tech team came from the middle management of Kotak Mahindra Bank, and FY23 annual report also showed us that the attrition levels were extremely high in the middle management. So that was also one of the problems with Kotak Mahindra Bank's IT budget planning, that they could not have skilled tech talent in place for this. The third problem was the infra that was there at the bank lacked sufficient updates, and hence whatever issues were cropping up in the disaster management drills also could not be addressed to. Now, when these DR drills are conducted, the bank's entire server is moved on to a secondary platform in order to ensure that it can work at the right time. But the bank was not just conducting insufficient drills, but it was also not able to have enough people there in order to manage the system. These were the key problems that Kotak Mahindra Bank was facing before RBI's clampdown. Back to you.
Thank you so much for that, Pragati. And with that, let's quickly shift focus to the economy now. So India's retail inflation is coming in, and those figures are likely to be published today at 5:30. Inflation looks like it's going to remain stable in April, with a decline in fuel and core inflation that's likely to be offset by a continuing uptick in food prices. Now, a panel of economists polled by Bloomberg forecast CPI to come in at 4.8% in April. That's compared to about 4.85% for March. So not too much of a change there, likely to remain range bound. Inflation has remained within the central bank's target range of 4 plus or minus 2% since September last year, and now it's expected to inch closer to that 4% target over the course of the next few months in Q1 and Q2. What does this mean for monetary policy critically? Not much actually, because the RBI sees the 4% inflation target within sight, but the way forward continues to remain data driven. Most importantly, we're going to be watching out and tracking the impact of the southwest monsoons, its onset, and how it determines vegetable prices and food prices at large going forward. With comfort on GDP growth, the MPC is unlikely to see any reason to cut policy rates in the next policy. In the near term, as we've spoken about, we're going to be watching out for the impact of the summer season and the monsoons. But moving on, Syrma SGS reported its Q4 numbers and the revenue rose 60%. The stock is down 16% despite the good numbers. Let's hear JS Gujral, MD of Syrma SGS, talking about its latest earnings and outlook for the coming quarter. Listen in.
The EBITDA margin correction is essentially because of the change in the product mix. Per se, if I was to look at the margins vertical-wise, they are almost stable and there is no deterioration in that. Domestic demand, led by the consumer, is growing at a scorching pace. So when I say that we grew by about 55% last year and my exports grew by about 26%, this means my domestic business, which is primarily telecom, consumer-related business, has gone up by a significantly higher percentage, and hence the compression in the margin percentages. Going forward, we are very confident that in the coming year, we'll be able to sustain the margin at 7% of the revenues. And thereafter, in the coming years, once my overall capacity, efficiency, utilization kicks in, there could be a marginal accretion to that. But this year, we maintain our guidance of about 7% EBITDA margins on a yearly basis. Quarter on quarter, there could be variation based on the product mix. But on a FY25 basis, I am very confident that we'll be 7% minimum of the EBITDA margins.
Right. So at the moment, sir, we are going with the assumption that for the upcoming year, margins, EBITDA margins will be maintained at 7%. And once you do have more capacities added, I reckon that there will be some amount of improvement on a year-on-year basis next year. But so moving on, I reckon the next question in that case would be your product mix. Now, sir, if you could tell us about the kind of order book that you have at the moment and what sort of an expectation can we go along with as we move into this financial year with respect to the kind of orders that you expect to get?
We have an order book visibility of about 4,500 crores. And in the current FY25, I expect my consumer business, which currently is about 40% plus, to slightly come down to 37%. And the endeavor of the management is to bring it down further, not by cutting on the consumer business, but by growing the top line from other verticals. Auto will constitute about 21%. Healthcare, medtech will constitute about 8%. Industrial will constitute about 25-26%. And others about 5-6%. That would be the broad composition of the sales going forward in FY25.
And it's raining exclusives on NDTV Profit today. NDTV spoke to the men of the hour, Prime Minister Narendra Modi and Home Minister Amit Shah, about the elections and more. Let's hear a snippet of that chat.
भारतीय जनता पार्टी और एनडीए को 400 पार कराने का दृढ़ संकल्प है और देश ने पूर्ण बहुमत वाले भाजपा एनडीए का मॉडल देखा है और वह गतिशील सरकार देखी है, निर्णायक सरकार देखी है, रिस्क लेने वाली सरकार देखी है और उसके आधार पर हम आगे बढ़ रहे हैं।
16 बार इससे भी बड़े गोते स्टॉक मार्केट ने लगाए। इसको चुनाव के साथ जोड़ना नहीं चाहिए। खैर, अफवाहों के कारण ऐसा हुआ भी होगा तो 6 जून के पहले आप बाय कर लेना, 4 जून के पहले वो सूट अप करेगा। 400 पार होने वाला है, मोदी जी की स्थिर सरकार आने वाली है तो निश्चित रूप से बाजार ऊपर आएगा।
And with that, it's time to slip into a short break. But on the other side, we get to you some on-ground reports from different constituencies. We'll be right back.
Hi, I am Ashish Chauhan, MD and CEO, National Stock Exchange of India. As we all know, vote is an important right, but it's also an important duty. for every citizen of this democratic country. On behalf of all my colleagues at NSE, all my brokers at NSE, and all their employees, we urge all Indian citizens to go ahead and vote in this election so that we get the government that we want. We firmly support NDTV India's initiative of Pledge to Vote and urge every Indian citizen to vote in this general election. Thank you.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable show.
If you want to be in the money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager. Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show.
Welcome back. You're watching Market IQ on NDTV Profit. The fourth phase of the magnanimous seven-phase Lok Sabha elections kicks off today. Voters in 96 constituencies across 9 states and 1 union territory are voting in the fourth phase of the Lok Sabha elections today. Andhra Pradesh and Odisha will also pick their next governments in simultaneous elections. Fates of some key candidates like Akhilesh Yadav, Arjun Munda, Kirti Azad, Mahua Moitra, Giriraj Singh, Pankaja Munde, Asasuddin Owaisi, Adhir Ranjan, amid others, will be decided today. Jammu and Kashmir is having its first election since 2019 today. While polling for Srinagar is underway, elections for the Anantnag Rajouri seat has been deferred to May 25th. 25% voters turned out to vote till 11 a.m. today. The low voter turnout remains a key concern. NDTV's Umar Sudhir joins us to give us a ground check from Hyderabad.
Okay, elections underway in Telangana as well as Andhra Pradesh. 17 Lok Sabha seats here, 25 in Andhra Pradesh, 42 in all. So that will in fact wrap
seats here, 25 in Andhra Pradesh, 42 in all. So that will in fact wrap up the elections from the south of the country for us. And yes, the very key assembly election in Andhra Pradesh as well, 175 assembly seats is what we are talking about. Very interestingly, in Andhra Pradesh, it is the 3 regional parties which are occupying the mind space of the voters there. The Telugu Desam, the Janasena, which are part of the NDA alliance, and the YSRCP, which is fighting it alone in Andhra Pradesh, and it is the ruling party in Andhra Pradesh. They had won 151 out of the 175 in the 2019 election. The national parties, BJP and Congress, really marginal players in Andhra Pradesh. BJP has had less than 1% vote share, and the Congress literally wiped out after the 2014 elections when the anger about bifurcating the erstwhile state was reflected on Congress being in a sense boycotted by the voters of Andhra Pradesh. Telangana again, 17 Lok Sabha seats, 2 national players, BJP and Congress, are going to be fighting out among themselves. BRS, which was really the dominant player in assembly elections less than 6 months ago on November 30, really relegated to a 3rd place, a distant 3rd, and both the BJP and the Congress will be hoping to cash in on the vote share that they hope the BRS will lose with the kind of setback that it has suffered, and they are hoping to gain both seats and vote share at the cost of the BRS. The BRS in fact lost about 10% of its vote share in this 2023 election, and the Congress had gained 10% of the vote share. The BJP has in fact managed to double its vote share in the assembly elections that we saw. Of course, 2019 elections, they had got nearly 20% of the vote share. So that's the difference between a parliament election and an assembly election when they happen separately. But high stakes certainly for all 3 parties, for the simple reason that for the BRS, they must get a decent number of seats, at least a 6 number of seats, so that they can survive or rather retain their own MLAs. The impact of the parliament election we can see on the assembly seats or assembly MLAs that the BRS has, because it is perceived, or the political analysts would tell you here, that if the BRS does badly, hardly manages to get a seat or 2, then you can see an exodus of its MLAs possibly going into the Congress camp. For the Congress, Revant Reddy, very critical for the simple reason that he has to show that the assembly numbers are going to be reflected in the parliament numbers as well, and he would also hope to be able to strengthen his hold on the Congress party here, where of course there are always many contenders for the post of Chief Minister. Remember, he only won, the Congress only got a 4 majority over the halfway mark of 60 in the assembly elections. For the BJP, Telangana is a big hope state. They have gone from 1 to 8 in the assembly seats, and they would be hoping to go from 4 to possibly 8 plus in these parliament elections, and they are really hoping that the BRS vote share in large numbers can get transferred to them as an anti-Congress vote, and that's what they are looking for. And that's where we saw the Prime Minister campaign very hard here, with the Union Home Minister also campaigning, but it has been a largely polarizing campaign that happened. But yes, there are big guns in this election, there are industrialists in this election. One of the richest candidates, Konda Vishweshwar Reddy from the Chevella constituency, see he's taking on Ranjit Reddy, who is another industrialist, 450 crore and more that he has declared. Kunda Vishweshwar Reddy declared some 4,500 crore. He, of course, is married into the Apollo Hospital Group as well. And that is part of the greater Hyderabad region that has largely been dominated by the BRS. But now, which way the vote will go will be a matter of big concern for political observers and critical for both the Congress as well as the BJP in Telangana. If we were to move to Andhra Pradesh, again, one of the candidates who made news was because he was the richest candidate, at least according to the declaration. Guntur TDP MP, Mr. P. Chandrasekhar, who's declared assets of about 5,800 crore rupees. And talking about himself as the richest candidate and catching the attention even though he's making his electoral debut. Just one last word, the BJP certainly hoping that tying up with the TDP and the Janasena will yield them the kind of electoral dividend that they got in 2014 when they tied up with the for the election with the Telugu Desam, because 2019 was a rout for all three parties when they fought alone. Back to you.
Thank you so much for that. And continuing with our election coverage, NDTV's Saurabh Gupta joins us to tell us what the mood is like in West Bengal's Asansol.
Well, 8 important seats in West Bengal are polling today, and one of those seats is Asansol, a very closely watched seat for the simple reason that it has high-profile candidates and has been a high-profile constituency in the past as well. It's an area where the BJP has had success in the past, but in a by-poll held between the 2019 and 2024 Lok Sabha elections, the seat went to the Trinamool Congress, won by Shatrughan Sinha by a huge margin. Now, of course, the BJP has fielded SS Ahluwalia here, who is known to turn seats in his favor. Pull a rabbit out of the hat is something that he's done in many seats. But overall, if you look at West Bengal today, some very important seats are going to polls, including Baharampur, where the Congress leader in Lok Sabha is contesting. Against him is Yusuf Pathan from the Trinamool Congress, and the BJP has fielded Dr. Nirmal Saha there. Then you have Krishnanagar, where the BJP has fielded Krishnanagar royal family member Amrita Roy. The Trinamool has repeated Mahua Moitra after she was expelled from parliament on bribes for charges that was a controversy in the previous year. Now, after all of that, you have the elections now, and in these elections, like I said, 8 important seats, including Krishnanagar, Ranaghat, Baharampur, Bardhaman Purbo, Bardhaman Durgapur, and Asansol, and Bolpur and Birbhum are voting. In Bolpur and Birbhum, it's without the imprint of the Trinamool strongman Anubrata Mandal, who's in jail, arrested by the CBI. Overall, a very important phase, as these are seats that are seeing contests. These are not explicit strongholds where the result can be predicted, but these are seats that could go either way, and therefore a very interesting contest in West Bengal, and 8 seats polling in this phase in West Bengal. We are reporting from Asansol, where there's a high-profile contest between SS Ahluwalia and Shatrughan Sinha.
Thanks a lot for that, Saurabh. And that's all that we have on the show for today. But do stay tuned to NDTV Profit for more.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point. Hello and welcome to the Mutual Fund Show. I'm Neeraj Shah. With the next 20-25 minutes, we'll try and do two things. One, talk about a very pertinent aspect about mutual fund investing, and then try and get our experts to answer 2 or 3 of the queries as we do with every show, so that you feel you're a part of the show as well. And that's the small attempt that we are trying to do here. Well, the topic today, at any point of time, viewers, you would have a plethora of options of investing in the mutual fund show. Say you want to start an SIP today, or you want to do a lump sum investment today, and you would ask yourself or look around and think about, where is it that I should start an SIP, or where is it that I should make a lump sum investment? Now, is there a right choice at all the times? I would argue yes. Now, if you're wondering that you want to start an SIP today, but you don't have an idea about where is it that you should, or what are the options that you should look at, today's show, we'll talk about one such option which might be a good fit in the current scenario. At least I feel it might be a good fit, and I'm going to ask my experts if they believe the same about this or no. Now, because markets are trading the way they are, we are 3%, 4% off the highs, but circa new highs. Because large caps are trading relatively at a safer valuation than mid caps and small caps, and because there is uncertainty around what will happen with interest rates and thereby fixed income instruments, should one look at managing the portfolio in a dynamic fashion? And therefore, would dynamic asset allocation funds, wherein the fund manager will do this job for you, be a good idea under the current scenario? Let me pose that question to both our experts today. I'm joined by Rushabh Desai, founder of Rupee with Rushabh Investment Services, and Mohit Gang, co-founder and CEO of Moneyfront. Gentlemen, both of you, thank you so much for taking the time out and joining us. And Mohit, great to have you in our studio. Rushabh, great to have you as always on the show as well.
Thank you so much, Neeraj.
Pleasure is entirely ours. Mohit, can I start with you? Is this a good idea to look at dynamic asset allocation funds under the current scenario? Why or why not?
Okay. Thank you so much, Neeraj. Always a pleasure to be on your show.
Thank you.
Look, to me, I think there is never a bad time for a dynamic asset allocation fund. Okay. Is this a good time? Perhaps this might be a great time to get into that category. But again, as I say, there's never a bad time, because it gives you a good blend of everything, right? A mixture of equity, debt, some bit of commodities and few other assets depending on what category or what fund house you go into, and a component of arbitrage which plays and gives you that equity taxation. You get the best of all the worlds, right? With equity taxation, getting fantastic returns, giving a safety cushion, having a protective net in your portfolio, getting the upside from equity markets, checking into the growth rates. I think you can't ask for a better combination. And as I said, there's never a bad time for this category.
Okay, Rushabh, well, Mohit kind of firsts my thought here. I would love to understand from you, because this stems from a conversation that we were having yesterday as well. I presume you would second this.
Neeraj, absolutely. I completely second what Mohit had to say. There is never a bad time to invest in dynamic asset allocation funds, whether it is at the peak of the market cycle, middle point, or the low point. There are a few reasons why I really strongly feel dynamic asset allocation funds are today in a sweet spot. There are 4 particular reasons for this, Neeraj. One is, see, these funds are dynamically managed between equity and debt. So the fund manager takes real active calls. When the markets are expensive, they trim down the pure equity allocation and venture more into debt. And when the markets are low, valuations are low, they venture more into equity and reduce the debt, right? Second is that if you look at the market scenario, which you correctly put it and summarize it very well, mid and small caps are trading at a premium. Large caps are trading at its historical average, so it's quite reasonable compared to mid and small caps. See, today equity markets are also volatile, which is positive for the arbitrage spreads. And we are uncertain about the rate cut. So currently, as we speak, debt yields are trading at its peak range. Now, if you see the portfolio of these dynamic asset allocation funds, I took out some very interesting data at a category average level. It's quite balanced between equity, debt, and arbitrage at this point of time. See, the average pure equity allocation in the dynamic asset allocation category stands at around 53%, and the debt and arbitrage allocation stands at around 47%. Second is that, because large caps are reasonably valued at this point of time, the equity portfolio in these dynamic asset allocation funds, stand particularly at 75% large caps. So these are very well positioned to take the benefit of the large cap rally when it happens over the next 2 to 3 years. And if you see the debt yield and the debt average maturity of these portfolios stand at around 5 years, and the yield to maturity at a gross level stands at 7.5%. So I feel a combination of these factors, looking at the portfolio of these funds, over the next 3 to 4 years, I really feel tremendous upside opportunity can be made. Good amount of double-digit returns, I feel, can be made from dynamic asset allocation category, Neeraj.
Okay, so let's try and simplify this, Mohit. For somebody who's wanting to know that they've heard you and they know that this is a good category, what kind of funds fall within dynamic asset allocation fund? Would a fund be called, for example, ICICI Prudential Dynamic Asset Allocation or HDFC Dynamic Asset Allocation, or is it something else? And would you recommend an SIP in this category? Would you recommend an STP if somebody has a lump sum, or would you recommend a lump sum investment as well?
Got it. So Neeraj, I think first things first, I think Rushabh has brilliantly explained what it entails. Just adding one more point to it. Look, for investors who can't themselves track the market very dynamically and can't create a balanced portfolio or can't decide what mix of equity and debt to have at what particular market cycle in their portfolios, this is a brilliant category to have because it auto fits, it auto tunes your portfolio under all market cycles. The fund manager himself is dynamically switching between equity and debt, and he's increasing the equity composition as markets get attractive, and reducing it when markets get extremely riskier or pricey or whatever you might call, right? So for those category of investors, it's a brilliant call. Whether to go SIP or lump sum, look, honestly, it's a case of a very unique condition to every investor. If you have regular flows, if you are a salaried investor, then perhaps SIP is the best choice for you to go. But if you are sitting on a lump sum, which is by virtue of your year-end bonus or by whatever reasons, then I would say stagger it out for not a very long period, but let's say 3 to 6 months, just take an entry for a couple of reasons. One, debt yields have been fairly elevated for some time now. They eased off to around 6.9%, the 10-year in India, but went on to around 7.1, 7.2 now. US is already at a very high 10-year yield again, right? And the rate cycle, which was looking imminent for a reduction, is perhaps a little delayed now, right? So my sense is spreading those funds for next 3-4 months might mean a good entry point in the debt cycle also, if we were to see the yields again shooting back a little. And second, equity, because we think there is some amount of volatility owing to elections and other things, maybe a 2-3 month kind of a staggering, but not for someone who can have the appetite for risk and have the appetite for volatility, perhaps go out, all out and do a lump sum. But for, I think, a normal retail investor who is a little fearful, wants to take a calculated call, a 3 to 6 months kind of an STP is a better choice to take into this. What kind of funds come into this category? Most of your balance advantage funds, like your Pru ICICI balance advantage fund, your HDFC balance advantage fund, which is one of the biggest AUM fund in this category, almost 80,000 crores of AUM under that. Your Edelweiss balance advantage funds, right? So typically you will find the name balance advantage. You might also find the name of asset allocation funds. So you will have those kind of asset allocation funds also in this. Again, you will have to go into the underlying tone and theme and try and understand what the fund actually does. There are some funds which actually work on the fundamentals of the market and change equity debt allocation depending on the P ratios and PB ratios of the market. And there are some funds like Edelweiss who more track the technicals of the market and the momentum of the market and then change the composition of the equity and debt. So what is the underlying tone and methodology of each fund? Perhaps an investor will have to be a little more cognizant and maybe take help of his advisor in selecting it out. But again, that's the broader category. But I think it's an all-season category.
Okay. By the way, viewers, before we take the break, we will make you hear the Home Minister talk about market volatility as well, since we're talking about taking advantage of the volatility. But there is still some time for the break. I just want to wrap up this topic first. And Rishabh, I'll come to you therefore. How do you look at investing in this space? As Mohit was saying, that there could be various nomenclatures and each fund maybe approaches this shifting or being dynamic in this quite differently. So where is it that you find favor within this landscape of this dynamic asset allocation funds?
Neeraj, Mohit brilliantly explained, the dynamics of this particular category. There are two types of funds which Mohit also explained. One is the pro-cyclical and one is counter-cyclical. Pro-cyclical is usually follows the technicalities, the momentum strategy. It's a little more aggressive towards equity, and counter-cyclical is more like to do with the valuation game, P, PB ratio and stuff like that. So I think a combination of having a pro-cyclical and counter-cyclical fund, to give you an example, see, the Edelweiss BAF product is a pro-cyclical product. It's a little more aggressive towards equity. And the ICICI Prudential Balance Advantage Fund is the counter-cyclical product. So having a pro and a counter-cyclical product, works best. As Mohit correctly pointed out that, spreading out investments over the next 2-3 months would be ideal. I wouldn't go beyond 2 to 3 months because we don't know, because now the market cycles have also shortened. So the volatility also has shortened. So take advantage, if the markets fall by 1% or so, you might want to invest a good amount of lump sum money during that time, but not more than 2 to 3 months spreading out. This is something what I would, give my opinion on. And, last but not the least, both SIP and lump sum methodology works great. This is more of a category for moderate risk takers, who don't want to venture purely into equity and don't want to take that pure equity risk. This is more of for a moderate risk taker. But if someone has a longer time horizon, say like 7-10 years, doing an SIP, if someone can take risk, and doing an SIP in pure equity products would work best to give you better risk adjusted return. But someone who cannot stomach that much of volatility, or probably who has a medium term time horizon, this category fits best for them.
So Rishabh, what are the kind of returns to be anticipated for a moderate risk investor if she or he invests in this category today? And what are the recommendations? They will not be exhaustive recommendations. You could choose 2 out of the many that you like, but share a couple of names.
Neeraj, I feel the minimum time horizon should be 5 years, anywhere between 4 to 5 years for these products, because, over a longer period of time, since these products inception on a 5-year daily rolling basis, these products have given no negative returns at all. So I think the ideal time horizon would be 4 to 5 years. There are two products which come in my mind is one is Edelweiss Balance Advantage Fund and second is the ICICI Prudential Balance Advantage Funds. I think dividing it into these two products would be a great portfolio.
Okay, Mohit, from your end?
Look, again, I think here investor will have to get into a discretion of figuring out what kind of an equity composition and what is the aggression level of the funds do they want. If you want a highly aggressive fund with a slightly higher equity composition, then HDFC Balance Advantage is your choice. If
they typically do this, you say?
They are typically on the higher side of the equity composition. If you want a very, very safe, conservative, long-lasting theme, then Pru ICICI Balance Advantage is the choice for you. I think S. Naren has been brilliant in the way he's been managing, and he's very vocal about the way he's been managing this fund, right? And if you want a bit of technicality involved, chasing some bit of momentum in the market and then deciding on equity debt allocations, which perhaps works very well in these kind of markets, then Edelweiss Balance Advantage should be your choice.
Okay, interesting. Viewers, I mean, if I was an investor, I think I got the complete lowdown of this space, why I should or should not invest depending on the kind of investor that I am, and what are the choices out there amongst the many. But I urge you, please do your own research as well. Consult your financial advisor if you have one about this category, but definitely ask your financial advisor why you should not be investing in this category at the current point of time. Both our experts believe it's an evergreen category and under the current circumstances might be one that you should definitely explore at least, if not invest in. I hope this conversation helped you. Now, we'll of course slip into a break. On the other side, we'll try and take some of the queries that our viewers send us. But we were talking about volatility, right? And the current ongoing volatility in the market, according to Home Minister Amit Shah, is not a sign of or a signal of BJP's weakness. And the markets, according to him, will surge come June 4th in an exclusive conversation with NDTV's Vikas Bhadoria. Listen in.
16 बार इससे भी बड़े गोते स्टॉक मार्केट ने लगाए। इसको चुनाव के साथ जोड़ना नहीं चाहिए। खैर, अफवाहों के कारण ऐसा हुआ भी होगा तो 6 जून के पहले आप बाय कर लेना, 4 जून के पहले वो शूट अप करेगा।
तो इस बार पुराने रिकॉर्ड फिर तोड़ेगा, 1 लाख के पार जाएगा क्या?
क्या करेगा, मैं कोई स्टॉक मार्केट के लिए आकलन नहीं कर सकता, पर नॉर्मली जब स्थिर सरकार आती है तो स्टॉक मार्केट बढ़ता है। इसलिए मैं कह रहा हूँ कि 400 पार होने वाला है, मोदी जी की स्थिर सरकार आने वाली है, तो निश्चित रूप से बाजार ऊपर आएगा।
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
Back with the mutual fund show right here on NDTV Profit. Now, as promised, viewers, try and take some queries. They might be synonymous in some sense, but to each individual person, the query holds significant value. So we'll try and ask our experts about these. The first one comes in from Amit Sharma. Now, Amit is aged 41 years. Amit's goal is to create a corpus of 1 crore rupees. Maybe we have the timeline. We'll get to that in a moment. His query is that he has SIPs in 7 funds and can additionally divide and invest 12,000 crores in those. Can Amit achieve his target through these funds, or does he need to make changes? Now, 12,000 rupees, excuse me, that was the thing. So he wants to invest 12,000 rupees in them, and he wants to invest, whether he should make changes in these funds or no. So the current SIPs are in Axis Blue Chip Fund, 2,500 rupees. HDFC Retirement Fund, about 4,000 rupees. HDFC Top 100, 2,500. So on and so forth. The numbers are there on your screen. ICICI Blue Chip, about 4,000. And then the other 3, which is ICICI Pru Large and Mid Cap, as well as Nippon India Growth Fund in these numbers. Now, Mohit, can I start with you? Have you had a chance to look at this query, and what would you advise Amit?
Yeah, so look, I think Amit is fairly well set with his current SIPs of 21,000. He will achieve his goal of 1 crore by his retirement age, which is 16. So he has 19 years to go. My sense is, Amit, you need to up your goal out there. I think a retirement corpus could be a little higher. So up your goal with additional 12,000 rupees of SIP, which you're planning to do, you will achieve much, much more, right? And if you continue to increase your SIPs, then all the more better. In terms of fund selection, look, if I were to start a portfolio today, I will perhaps not start with what Amit has been doing, but I'm not a big believer of twisting and turning the portfolios. There's nothing wrong in the fund selections which he have, but because he is at 41 years, he has 19 years to go, perhaps he can increase the risk level in his portfolio and include 1 more mid-cap fund and a small-cap fund in the portfolio. He can go with an Edelweiss mid-cap fund, a Pru ICICI small-cap fund for his new SIPs which he wants to do, right? Otherwise, I think broadly the funds are good, the track records are great, but as I said, if I were to start the portfolio today, perhaps I will not have this composition, and if at all, he can have one passive allocation also. These are all active strategies in his portfolio. He can either go for a Momentum 30 index fund or a plain simple Pru ICICI Nifty 50 index fund.
Quick question. He has got 7 funds. You're recommending adding 3 more or swapping out of some of these, looking at his age and getting into the other 3?
So I'm not recommending coming out of any of these existing funds, but he can stop SIPs into few of the funds, right? So maybe perhaps he can stop his SIP into a large and mid-cap fund which he holds in his portfolio, and he can start SIPs into a couple of more funds. His portfolio is a little tilted towards large cap. Because he has 19 years, he can go more towards mid and small cap. So that's what I think he needs to do. And because he's also wanting to put in additional 12,000, so that is where if he's doing some additional allocation, maybe adding 1 or 2 more schemes might not harm him a lot.
Okay. You know, viewers, I'll ask Rushabh to give us view on this query as well, because this is a query that could be applicable to many people. It's very similar and synonymous for a lot of people. Rushabh, do you have some thoughts on this? Your thoughts could be different from what Mohit has said, of course.
You know what Mohit had to say, particularly about his retirement, I think he's very well sorted in terms of the amount. He can definitely increase the SIP amount as and when, you know, his annual salary increases. Overall, he is going to achieve 1 crore in 12 years, but since he has a good amount of more years towards his retirement, he can definitely look at increasing more, taking more risk. His portfolio is more inclined towards large cap, and he has quite a lot of funds in the same AMC. This is where I would little bit differ with Mohit, that, you know, having multiple funds in the same AMC could be concentration risk and, you know, towards the style, towards similar stocks. And if, you know, an entire AMC underperforms, you know, the entire portfolio goes into the underperformance risk at the same time. So, I think diversifying across different styles is very important, and also diversifying across different AMCs is also very important. HDFC and ICICI are both great AMCs, but I would suggest trimming down a little more funds and having a maximum of 5 to 6 funds in the overall portfolio over different styles and across different AMCs would be ideal, would be better in terms of risk mitigation.
Okay, well, I hope this gives you some answers to your query, and I hope this helps you in a meaningful way. Very quickly, let's take one more query because we have time for maybe one more. And this one comes in from Shyam, who's aged 20. I'm glad you're thinking of starting off the investing lesson so early in your life cycle. The goal is a small corpus actually, 1.5 lakh rupee corpus. Okay, not too much. But Shyam says he wants to invest 2,000 rupees per month in mutual funds for the next 1.5 years. So there's a time-bound amount. Can you suggest a few funds? Rishabh, can I start with you? Will he be able to reach his goal, and what fund should he choose within this limit?
Neeraj, first of all, I would like to congratulate him that at such a young age he's thinking about investments. At our 20s, probably we're not even thinking about investments. There are 2-3 things. He has kept a very short time horizon of 1.5 years. I think if he wants to create wealth, see, no amount is small when you are investing in SIP route in the equity segment, right? But the time horizon is very small. 1.5 years is absolutely very small. I would recommend him to increase his time horizon, to at least 7 years, minimum. I mean, he has a lot of time horizon, but at least have a minimum of 7 years time horizon if he wants to do an SIP methodology into equity. Now, if he just wants to stick with 1.5 years, then of course doing an SIP in debt mutual funds would be best. But if he can increase his time horizon to say like 7 years or so, then he can definitely look at investing in Motilal Oswal Nifty 500 index funds, because he's just starting it. So tasting the equity segment would be much better, because Nifty 500 will give a good flavor of say around 75% in equity, 15% in mid caps, and around 10% in small cap.
Got it. Thanks, Rishabh. Mohit, out of time completely, but very quick advice.
Not an ideal time frame for equities. Need to have at least 5 years to go with that. But great thing that he's wanting to start. 1.5 years he won't be able to make that kind of corpus which he's looking for. Either increase the amount, but the better thing is to increase the time frame. He has time in his hands. Need not come out of equities in 1.5 years. Not at all.
And I think that's a fair way to get this approach as well. I hope this helps you, Shyam, in some fashion. But Rishabh, Mohit, both of you, thank you so much for joining in on the show today and giving us your thoughts. Really appreciate the time. Mohit, thanks for joining in the studio again. And viewers, thanks for tuning in to this leg of the Mutual Fund Show.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Hello and welcome. You're watching Earnings Edge right here at NDTV Profit. I'm your host Puneet Zaveri. We're now going to be speaking with Finolex Industries, and they're buzzing on the back of strong Q4 earnings, where the company revenue grew by roughly 8%, coming at roughly 1235 crores, while on EBITDA and PAT it was just slightly subdued at just down 3% and 0.9% respectively. We're now joined by the MD, Mr. Ajit Venkatraman of Finolex Industries. Good afternoon, sir, and thank you so much for joining us here at NDTV Profit today.
Good afternoon, Puneet.
I just wanted to just start off with the PNF margins. Firstly, I think we've seen them come a little higher by roughly 300 basis points compared to the previous year. How do you see these margins shaping up for the next fiscal? And what kind of range are you maintaining? Do you see that these might go up to roughly 12 to 13%, or will they be somewhere around the current range of roughly 11%?
Thanks for the question, Puneet. See, the margins are going to be a large extent dependent upon the PVC price movement. Currently, for the last 2 quarters, they have been fairly steady. And therefore, if you the parameters which we track is the EBIT per kg, which has improved significantly with respect to last year. Last year, it was in the range of about 5 rupees, whereas right now it has reached about 13 rupees per kg. So, I'm sorry, 12 rupees per kg. So, this has been a significant movement. And also, it is on the back of a significant growth in the pipes and fittings segment, which is we have seen a volume growth of about 11%.
Got it, sir.
And it's also dependent upon the product mix. And as we go along, our focus has been on the non-agri segment. And when the more non-agri segment contributes to the overall revenue, the margins should be improving.
Understood, sir. And currently, I think your agri to non-agri split is roughly around the 63 to 64%, if I'm correct.
That's right.
Where do you see this going forward in the next couple of years? Slightly long-term question, I think, because you have been saying that you want to increase the non-agri share. So I think this will be dependent on how the construction and the real estate industry also performs, as well as on any kind of, the project basis that the company takes on. So I just wanted to first know the split as well as any kind of outlook that you have on the non-agri side, sir.
See, we are fairly strong in the agri segment, and the agri segment we expect it to grow in the upper single digits. Whereas in the non-agri segment, which is the plumbing and sanitation segment, this segment is likely to have a CAGR of almost 15% for the next 5 years. So that's an area where we expect the growth to happen. And therefore, our mix, which we are aiming for in the next 4 to 5 years, is a 50-50 split.
50-50 split over the next, that's quite a sizable shift from the current revenue mix, and surely definitely will aid the margins as well. I wanted to come into your role as well before we get into more of the business questions. I think you joined roughly sometime mid of last year. How has the transition been? Has the company also had some changes within personnel or any kind of story that you might have wanted to change within the firm? Can you guide us through that, sir?
So I joined about in August of 22. So it's a little more than 1.5 years now. We have a good senior management team, and we have experts from in all the segments. And we have people joining us from various industries, and therefore bringing about a lot of cross-pollination of ideas within the organization. And therefore, right now we have a complete team, and we have set out a very aggressive path for the future.
Got it, sir. And for the resin revenue per se, I think for the full financial year of 24, we definitely saw it come down compared to the last year. Was it just on the kind of price fall that the resin revenue has seen? Is that the reason?
There were two contributing factors. One definitely is the price of PVC. And the second has been that we had some supply chain issues with one of our key suppliers. And therefore, there was an issue with raw material availability. And this has been sorted. And therefore, for the last quarter, for example, we have seen a fairly decent 20% growth in terms of volume compared to Q4 of FY23. And this, we believe, is going to be behind us. But we are constantly watching what is going on in the Middle East, because that can cause a little bit of turbulence.
Yeah, that exactly gets me to the next question, sir, on commodity prices. Because of geopolitical issues that we've seen, we've also seen the commodity prices of other industries also affected. How do you see this shaping up for the near term, for the next 1 to 2 quarters? I know it'll be difficult to kind of quantify it, but how do you see this going forward?
See, last 2 quarters have been fairly stable, and stable PVC prices means a lot more steady growth for the industry. So it's a wait and watch at this point of time. We hope that the stability in the last 2 quarters continue forward.
And sir, I wanted to talk about the capex intensity. I think could you guide us on what kind of capex did the company do in this particular year, and what's the outlook for financial year of 25?
So we have 150 crores of capex outlay, which is a combination of incremental capacity addition as well as maintenance capex. So this is something which is a steady state for us, and any further expansion or expansion plans will be on top of this.
And currently, is the company evaluating any kind of increase in the current capacity? Because also, if you could tell us, I think the current capacity is roughly around the 470,000 million tons. What kind of utilization has the company seen, and do you see any kind of incremental capex to increase the capacity going forward?
So we are at about 70% capacity utilization. And yes, you're right. We have our total pipes and fitting capacity is 470,000 tons. And given the growth rate which we are anticipating, we definitely will need additional capacity. But our current plants will be capable of taking modular increases as well. So we are considering both.
And could you also update us on the fittings capacity? I think separately the company had in 2023 commercialized this facility. How much is it currently, and how much is the current utilization of that as well? And going forward, would you want to increase that as well?
See, we set up a new fittings plant in March of 23, and we are nearing the rated capacity at this point of time. But this plant also has capability to take more machines, more molding machines, and therefore we can increase the capacity in the existing facility itself. Our total fittings capacity is about 48,000 tons.
Understood, sir. And we did speak about commodities briefly. You did mention about what you see going forward in the short term as well. Is that overall on the PVC, EDC as well as the VCM prices? Or do you see one of these being kind of like in a tough spot? Because we've seen PVC prices remain largely stable this year compared to the previous year. But amongst these, because these are the key raw materials for the company, do you see any kind of movement in these currently?
See, we have seen the PVC EDC delta drop down to almost $427, and the PVC VCM delta dropped to almost about $135, $140. So these are about the lows which we have seen, and we hope that these deltas would increase going forward.
And I wanted to just talk about the current working capital as well as the receivable days. I think they're slightly on the higher side for this particular quarter. How do you see the momentum going forward for the next 1 to 2 quarters on this? Do you see these coming down? And also on the current credit that you're giving to your customers, is that in the historical range of roughly the 30 to 60 days?
That's correct. It's the current credit period is anywhere between 30 and 60 days. And as you will see the way things have been, the agri segment is more of a cash and carry segment, whereas the non-agri segment, which we are putting a lot of emphasis to grow, that is much more of a credit segment. As the non-agri segment grows, you're likely to see a little bit of an uptick in terms of credit.
Yeah, got it, sir. And I wanted to also just finally talk about the competitive intensity currently. How are you seeing the competitive intensity in both agri as well as non-agri segment? Because we've seen a lot of players also in the listed space who are there. How are you seeing that on competitive intensity in general as well as on pricing, sir?
So there has been a lot of price wars in the market. And it has been fairly intense over the last couple of quarters.
And finally, my last question here, you have a current cash balance of roughly, if I'm right, 1,800 crores. How are you seeing this going forward into this particular financial year? Is that the level that the company is going to maintain? Because we've seen that the company has also announced a dividend this year, you've spoken about the capex intensity also going forward of roughly 150 crores, and any kind of increase in capacity would be over and above that. What kind of cash level is the company going to maintain going forward?
See, we are looking at expansion over the next couple of years, and that will need us about 300 to 400 crores in terms of capacity expansion. And the remaining money, we will be returning it back to the shareholders.
Understood, sir. Thank you so much, sir, for joining us today here at NDTV Profit. We look forward to our next chat very soon. I hope post our first quarter results or before that on any business update. Thank you so much, sir, for talking so freely today on NDTV Profit at Earnings Edge, sir. Thank you so much.
Thank you. Thank you very much.
Well, it's time to slip into a short break, but do stay tuned. We have lots more here lined up on the other side.
I pledge to vote and encourage all my colleagues at Godrej Industries Limited and associate companies to exercise their voting rights. It's the essence of democracy, and we stand firmly behind it. I would also urge everyone else to vote. We are thrilled to join NDTV's pledge to vote campaign and help spread the word in the corporate world and beyond.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve
Hello and welcome, and we continue to focus on earnings. I'm Harsh Saita, and we'll talk to the management of Capri Global with regard to their numbers. There's been a margin contraction which seems to be bothering the street a little bit. Also, OPEX has remained elevated, but the positive within the numbers is very strong AUM growth, which continues, which is not new to Capri Global, and you're seeing credit costs absolutely very close to zero, in fact. And that will definitely be a couple of positives. So we'll talk about all of those, and we'll talk about FY25, what one can expect. With us, we have Mr. Rajesh, who's the MD CEO as always. Welcome, sir, to NDTV Profit.
Yes, thank you.
Right, sir, talk to us first off with regard to margins. I want to try and break this down a little bit more. Your cost of funds has gone up, yes. How do you see the margin picture evolving over FY25 and 26? Where would the normalized margins be at?
So if you look at that, the last 2 years have been the year of the expansion. We opened a lot of branches, and we have done a lot of technology investment and set up the Capri Tech office where 100 plus people are working, and onboarded various new technology systems, including core banking by the Oracle, our collection module, our data science team. So put together last year also about 112 crore rupees have been spent on the technology alone. There was a lot of branches we opened. So I think going forward, the branch expansion will slow down because we already reached the target number of branches. And then our technology spend, what we have done, will start contributing toward the better productivity. So the coming picture of 25-26, we clearly see that gold loan AUM will continue to increase, which is high yield product. So put together all the fact of stabilizing the growth and lower spend in coming year on the new branches, which and plus technology contributing to the better margins, I think our margins will be improved. we expect that our spread will go back to about 6.8 around that, and with that I think our AUM is growing at a 50% pace last 2 years. So I think we are quite excited about the coming.
Understood, sir. Okay, so some bit of margin recovery definitely in the works. But your cost to income, which was the other piece you tried to touch upon, now has breached 70%. As you scale down sharply with regard to branch expansion, opening new branches and the like, where should cost to income start to taper towards in FY25, and where are you comfortable in terms of a number over the medium term?
So I think next year we are targeting a cost income ratio in the range of about 53 to 55%. And we are comfortable when it settles down in the range of about 47, 48%.
Okay, so and how quickly will it get to 47, 48? Because next year itself you are expecting sharp contraction, 10% plus just in terms of absolute number versus cost to income this year.
Yes, so I think next year we expect that this cost to income ratio will come down to, as I said, around 53, 55%. And the coming year to that, we expect it to come in our target range of 47, 48%.
Okay, so in 2 years, this will scale down quite sharply. Understood, sir. Before I come to what this does to ROA, I want to try and cover what credit costs and how credit costs are really playing out. Because near zero credit costs this quarter. Is it an exceptional quarter? And where should credit costs typically lie at?
So credit cost, I think because of the higher PCR and provisioning, it has come to that level. But otherwise, cost should remain in the range of about 50 to 60 basis every year.
Okay, got it. Got it. And what does this do to profitability? Some of these metrics that you are working on. One is on gold loan. You've spoken about how gold loan goes break even. Maybe at the fag end of FY25 is my sense. Please correct me if I'm wrong. Second is, what does that do to your numbers overall? Where do ROAs therefore start to lie? Because ROAs have held up over 2%. But where do they go from here? Because there are plenty of levers for that ROA expansion.
So we expect that in the coming year, our ROA should come in the range of about 3%. Thereby, it means that our profit for the coming year should be in the range of about 450 crore rupees, because our car loan entity, which is done this year also well, will continue to grow. Our insurance tech platform should come in the play in the coming year, and we, with the help of about existing 400,000 customers, which will grow to about 800,000 customers in coming year, this good fee income contribution will also happen from car loan as well as the insurance income. Besides, as I said, cost income ratio will come down. So collectively, I think our profit should be in the range of about 450 crore rupees and ROE in the range of about 3%.
Understood. Talk to us about gold loans, because this is a segment which you're growing extremely quickly. What's the book size as of today? And where does it go in terms of the overall book size? And also talk to us about growth. Currently at 15,000 crore odd the book. Can you grow at 30% plus?
So we'll continue to grow at 25% plus, and this growth is not happening alone. There is a proper risk governance framework, there is a proper collection mechanism, there is proper investment in the technology, huge investment have been made in the technology side, and the branch expansion have been done, the addition of the product have been done. So with collectively of this, the growth is happening. Growth is not happening only in one product, and without any consideration to the proper risk mechanism being in place. You are seeing that our net NPA and GNPA have been behaved very in a controlled manner. So we believe that our even gold loan AUM, which is about 3,400 crore, is very, very minuscule in the overall scheme of things, and still we are in the range of only 5 crore per branch. If you talk about our competition, they are at 12 to 18 crore kind of a range. So still, I think a lot to be done here.
Okay. Talk to us about the breakup of the book as it gets towards the 20,000 crore mark. How would the book evolve between MSME and other segments, gold and the like, which you currently do, housing versus construction finance?
So I think if we talk about 20,000 crore book, next year gold should be in the range of about 6,000 crore. Our MSME should be in the range of about 6,000 crore. And our home loan should be in the range of about, again, 5,500 to 6,000 crore. And construction finance should be in the range of about 3,500 crore rupees.
Okay, so construction finance actually coming off, is it? Is that how one can look at it?
No. So this year we have closed construction finance at about 2,600 crore.
Sure. Okay. I get your point. Fine. And with regard to construction finance itself, absolutely any impact of the new regulations on your book?
So
provisioning related.
Still is a draft regulation, but because we as a company we have a high PCR, more than what RBI stipulated, even though it comes, it is not going to impact our balance sheet because there already excessive provisioning have been done. So without increasing any provision, we should be able to meet that guidelines in case it is brought in force.
Understood. So you are already well provided for, yes, even through to FY27, 26-27, which is when the full 5%, the current draft reads that way, of course, but the full 5%, if at all it is implemented as is.
Yes.
Understood. Got it. Okay. Thank you so much, sir. It's been a pleasure speaking with you, of course, in trying to break down these numbers. A larger conversation definitely warranted on the business and where does it go over the next 5 years. We'll probably schedule that at some point, but good chatting with you.
Thank you. Look forward.
Right. That was, of course, Mr. Rajesh Sharma of Capri Global, MD CEO, spoke to us about numbers and what FY25 expectations are. Time to slip into a very short break. More on the other side. Stay tuned to NDTV Profit.
16 बार इससे भी बड़े गोते स्टॉक मार्केट ने लगाए, इसको चुनाव के साथ जोड़ना नहीं चाहिए। खैर, अफवाहों के कारण ऐसा हुआ भी होगा, तो 6 जून के पहले आप बाय कर लेना, 4 जून के पहले वो शूट अप करेगा।
तो इस बार पुराने रिकॉर्ड फिर तोड़ेगा, 1 लाख के पार जाएगा क्या
करेगा, मैं कोई स्टॉक मार्केट के लिए आकलन नहीं कर सकता, पर नॉर्मली जब स्थिर सरकार आती है तो स्टॉक मार्केट बढ़ता है। इसलिए मैं कह रहा हूँ कि 400 पार होने वाला है, मोदी जी की स्थिर सरकार आने वाली है, तो निश्चित रूप से बाजार ऊपर आएगा।
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager. Thanks for tuning into India Market Close, and it's a day of recovery. You have to say that. And well, in some way, Tamanna and me can tell you that we told you so. Because in the morning when the markets are looking weak, we are speaking about the possibility of this happening. And look at this, from the lows of the day, we are now trading circa the highest point of the day. So it's good going really. And there is a bit of a recovery in breadth as well, selectively. It's not let's pull up the market breadth, the advanced decline ratio, and market wide is looking slightly different, but this is the point I'm making. Look at the deep difference between advances and declines at some point of time in the day, and look at it now. I mean, the advances, actually this number looks a bit off because clearly the advances are more than the decline. So let's remove this number, but clearly the market breadth has improved quite significantly. Bank Nifty too clawed its way back into the green earlier than the Nifty, by the way, the Bank Nifty did, and it is up 0.64%. So in some sense, banks are driving this. Mid cap and the small cap indices very quickly before we get to the individual stocks on the Nifty, and I will talk about UPL for sure. Mid caps in the green, and small cap index will come up on your screen. Margin in the red, but from the lows again, look at the kind of recovery and the pace of recovery. In fact, the small cap index is trading at the high point of the day. Now let's get the heat map up on the screen. And some result boys and some bounce backs that we've seen. So you have to admit that it's a day that belongs to pharma and agrochem in some fashion. Cipla has been a rock solid performer right from the start on the brokerage notes. So up 5% and steady at that level for the large part. But there is Divi's out there which is up about 3.5%. There is also UPL, not a part of the index anymore, but has done really well, and we'll talk about that in detail. There is Asian Paints. Now, 4 of the last 5 sessions, I would reckon, Asian Paints has actually had a good day after the worst performance was over and most brokerages downgraded it. I think it needed that to bounce back. Look at that move today, 4.5% up for Asian Paints. The Adani twins, both Adani Port and Adani Enterprises, doing really well in the session today. And I think one, it's a general market bounce back, but two, also this whole announcement about investments into various businesses that has come in from the group, also helping the stocks in the session today. Some strength in HDFC Life, Britannia and Hindalco up about 1.4%. But I think the key is what some of the others have done and what HDFC Bank is doing. On the flip side, Tata Motors continues to sulk 8%, not a whiff of a bounce back despite the fact that the market has come up, which shows the extent of selling that's happening in Tata Motors, and to an extent some PSUs, the likes of BPCL, Coal India and ONGC amongst others, looking slightly wobbly in trade. But Tamanna, one, the bounce in some of the names, and two, the result reactions in agrochemical. We saw in the morning Sharda Cropchem being up 8%, UPL was up 7%, and then again after the results has shown some spunk. So pretty good going into some of these names.
Yeah, UPL is exciting, definitely, and I would say that I don't know how much we can say I told you so, but Amit Shah definitely told the market so, because if you're wondering what changed through the day, and we'll play out that series of bites, the first two exclusive to NDTV, where Prime Minister Modi and Amit Shah, the Home Minister, spoke with NDTV network in the last 24 hours. Those were the comments that seem to have bolstered the market, especially the Home Minister saying that wait and watch and see what happens on the 4th of June after the results, because if that was one cloud over the markets, it's certainly lifted. Let's come to specific stocks. We showed you what's happening with UPL. I want to talk about ABB, because if you're looking at stars of the show today, and you know that star cast is quite varied, ABB is definitely on top of that list, 11% up. The margins are better than expected. The management commentary has been positive. That stock completely, outselling and running the expectations that were with it. So ABB doing great today. Dr. Lal Path, again, I want to pull up. Dr. Lal Path, Piramal Pharma, we're talking about result reactions, and these are the companies that are doing quite well. Dr. Lal Path, second day in a row. We spoke with the management also today. Their expansion plans in tier 3 cities of northern India seems to have enthused the markets. Piramal Pharma off the highs of the day, but still rock solid, up about 3% after good numbers. On the other side, if I look at a BOI, I look at a VIP, I look at a Sapphire Foods. So again, you're seeing very, very clear reactions to results coming in. 10% down on a Bank of India. A VIP also not looking that great, about 5% down. And likewise for a Sapphire Foods, which had a mixed sort of a run in terms of how brokerages looked at it. Most weren't too happy with the numbers. Nuvama was the outlier. We talked about it this morning, 3.5% down on a Sapphire as well. So very clearly results focused kind of afternoon, but the general mood, I wouldn't say back to a complete upbeat, bulls in charge kind of a scenario, but you have to see it in comparison and definitely much better than what it was looking like mid-morning today, Neeraj.
Most certainly. Let's take stock of that situation then, Tamanna, and try and get in our guests. And of course, we'll make you hear all that's happened on the political front as well. More so the assurance, if you will, that has come in for the markets. Firstly, get in our guests today, Hemen Kapadia of KR Choksi Stocks and Securities on the technicals, Pankaj Pandey, Head of Research at ICICI, Director on the fundamentals. Gentlemen, thanks so much for joining in. Hemen, how does the pullback look today? Convincing enough to initiate longs or still on the sidelines maybe?
A very good afternoon to you, Neeraj. Thank you for having me on the show. It's always a pleasure. Yes, I think I totally go with your statement that the pullback looks good enough to initiate long positions. One gets the feeling that the 1,000-point sell-off that we witnessed over the last few trading sessions, maybe the last week or more, seems to have halted for the time being. 21,834 was important support from my point of view, Neeraj, and we've taken support proximity on that level. So I'd say, yes, it warrants selective longs. The weeks remain disconcerting, Neeraj. We've spoken about it every week for the last few weeks, I think. And the weeks at 21, it's like, that's hurt, obviously. Now, the bounce is underway. I believe Nifty is at 22,118 right now. With a few permutation combinations, we're going to go to 22,400, 22,500 probably this week itself. But the VIX needs to cool off a bit. But yes, what you said, I'd go with that. It is worth going selectively long in this bout, Neeraj.
All right. Before we get to more comments and more stocks that we want to talk today, I just want to play out for you the kind of commentary that's coming in from the political arena. Remember, right now, at least, the political scenario and market movements are quite closely interlinked. You're in the middle of phase 4 elections. And phase 4 polling has been going on for the last several hours, midway, so to speak. And the uncertainties in the market were seen in the India VIX. Now, in the last 24 hours, two exclusives on the NDTV network, Prime Minister Modi and Home Minister Amit Shah have spoken about the election expectations and the impact on markets. Listen in.
भारतीय जनता पार्टी और एनडीए को 400 पार कराने का दृढ़ संकल्प है और देश ने पूर्ण बहुमत वाले भाजपा एनडीए का मॉडल देखा है और वह गतिशील सरकार देखी है, निर्णायक सरकार देखी है, रिस्क लेने वाली सरकार देखी है और उसके आधार पर हम आगे बढ़ रहे हैं।
16 बार इससे भी बड़े गोते स्टॉक मार्केट ने लगाए। इसको चुनाव के साथ जोड़ना नहीं चाहिए। खैर, अफवाहों के कारण ऐसा हुआ भी होगा तो 6 जून के पहले आप बाय कर लेना, 4 जून के पहले वो सूट अप करेगा। 400 पार होने वाला है, मोदी जी की स्थिर सरकार आने वाली है तो निश्चित रूप से बाजार ऊपर आएगा।
You'll have to wait and see in the first 100 days and the budget which will come in that period. But the fact is, in a way, a certain base has been created. I see public investments continuing. I see greater enthusiasm for private investment. I think a lot of people are looking after June 4. They will see those numbers, and I think that will strengthen the resolve to invest in this economy. I definitely see much more foreign investment coming in. So right now everybody is like, okay, let June 4th happen and then I'm going to take the call.
Okay, so let June 4th happen. That seems to be the messaging coming in. The conversation around 400 seats is also back, at least in the political messaging. Pankaj Pandey, I just want to understand, has this helped calm nerves in your view? Because if I look at the intraday chart of the Nifty, you clearly have seen a change in mood.
So hi, good afternoon. Thanks for having me. I guess it has definitely sort of helped in terms of intraday recovery, what you see in the markets. But our sense is that, you still have a good number of trading sessions ahead of us till the results sort of come out. Our sense is that election outcome-led nervousness is going to be there, and that is sort of would lead to consolidation in the index, probably in the range of say 21,700 to 22,400. Historically, over the past 4 elections, we have seen Nifty during polling phases witnessing a 6% kind of a correction. We are already done at 4%. So possibly some bit of a consolidation on both the sides is very much possible. I don't think we are going to get a decisive move till the time election outcome is in front of us. Till that time, I think you will continue to see stock-specific move depending on how the results pan out. I think global cues, domestic inflows, all of them have been very positive, but the markets have not been reacting to it. I think market is largely following the election-related news flows at this point in time, and which is why we would want to believe that the consolidation is going to sort of pan out for the next 2 weeks at least.
So fair enough, we might be having a relatively decent afternoon, but the uncertainty doesn't end. Let me just pull up the India VIX, and that actually outlines what Pankaj Pandey is saying today. So that's still about 11% up. And you have seen a big jump up in the last few sessions in the India VIX. It's at 20.54, has been above the level of 20 for the first time in 7 months. That's the highest level in 7 months. So it's not as if, all is well yet. Let me come to the stock-specific story. And Hemen, I have to start with the Tata Motors. I mean, the kind of drubbing that the stock has taken is quite something today. It's still about 8.5% down. Now the question is there a bounce back that you see at some point from 960, 95? Does it become attractive at this point?
Well, frankly speaking, Tamanna, how long can you avoid the laws of gravity, right? Even Newton would agree to that. I mean, stock goes up from 380 to 1060. Almost 1 week. Yeah, there were a couple of months where it took a small breather, but nothing significant. Not a proper technical time price correction, as I would put it, Tamanna. And now we are tired. It's obvious that there is medium-term top which has been formed. There is a distribution pattern which has happened, and now we are breaking down from there. 930 is important. If it closes below 930, I think this correction could deepen. There's a bearish gap today, which is not a good sign. Until this gap doesn't get covered up, I think it is going to play the villain, and I don't see it getting covered up in a jiffy. So it's taking a breather. It's had a phenomenal move. The long-term charts still seem okay, not an issue. But currently, I think it's overdone. I mean, the way it has moved, the quantum and the speed, somewhere it has to cool off. I believe the cool off is on. So I wouldn't be unduly worried even if it breaks 920 and goes down some more. I'd look at it as a opportunity for a long-term buy, but currently if you're saying anything, I'd avoid the counter. I don't see any compelling technical reason to buy except for the fact that the cash market volume is 5 CR. Now that's huge, and we still 45 minutes away from the close. When such a big volume happens and the low doesn't break for the next 5 trading sessions, that means stronger hands are bought, but it's a bit too premature to take that call. I'll just stay away for the timing because setup remains unequivocally bullish.
Okay. So 920 onwards is where Hemen sees the opportunity, and the volumes is an indicator. Pankaj, your take on a Tata Motors, does it deserve the kind of beating? Because the numbers on the face of it are not bad at all. the outlook perhaps on commercial vehicles, etc., was a little of a dampener. What would you do with the Tata Motors at this point? Is it an opportunity to buy?
So, from a number perspective, I think the numbers are quite robust. I think the company is walking the talk in terms of debt reduction, especially on the JLR side. I think the only challenge what I see is that we have seen good recovery in the CV as well as PV segment in the last 2 years. Given the impending elections, there is an expectation that demand is probably going to sort of consolidate in the near term, which is why you don't see much of a trigger for the next 1 or 2 quarters. So we have been liking this stock for quite some time. Our rating is hold at this point in time with a target price of 1120. In case if we this stock reaction looks a bit surprising, I mean that is what we are seeing in a lot of cases, also other even banks as well. So I think stock reaction looks a bit exaggerated, but our sense is that overall post these 2 quarters, we don't have much to sort of complain in terms of how the company has been doing. In fact, on the EV side, they are looking to sort of volumes of about 1 lakh. Plus, our sense is that if the budget happens on expected lines, the CV industry also would witness better days ahead. So fundamentally, we don't find much of a problem in the stock, except for the fact that next 1 or 2 quarters triggers are missing.
Okay. Well, that's on Tata Motors, and NDTV's Mugdha Mishra spoke to Tata Passenger Electric's Chief Commercial Officer Vivek Srivats on Tata's EV plans and sales outlook for FY25. Listen in.
So in Bharat Mobility, we had already shown this, and in the previous Auto Expo as well. So we have a couple of products confirmed already on the EV side, which is the Curve and the Harrier EV. Curve will also come in petrol and diesel, and it would be in the market before the festival season. I think it is definitely a challenging year because 2 reasons. One is all the pending waiting customers have, I think, dried up. Most post-COVID, there was a lot of customers. There were a lot of customers who were waiting for new products, and there was a long waiting list among many companies. That is tapering down. Second is that network stock itself across the industry has gone up, so that buffer of being able to fill in a network pipeline has also gone away. So the entire industry this year is going to depend on fresh demand generation without any buffers in terms of filling up pipeline. So it is going to be difficult.
It's going to be difficult, and it's showing in the way Tata Motors is reacting. The stock is facing some difficulties. By the way, just very quickly before we get to ABB, Aditya Birla Capital numbers on your screen as well, and the stock is up about 3%. NBFC disbursements up 16%, so that's not done too badly. There's a bit of a spike there for the stock, and the loan portfolio is up about 31% YOY. Okay, but the stock that deserves all mention is ABB for the right reasons. Over 10%, in fact 11% on the back of a robust margin beat. Now, there's of course a con call that has happened as well, and Anushi Johnson with the key details of what is the standout when it comes to these numbers. Anushi.
So now if you have to look at ABB's numbers over here, quite a beat on margins, as you've mentioned, revenue about 28% of growth, which was mainly led by its process automation and electrification business. But it's the EBITDA which stands out 98% of growth over here, margins moving up to 18% compared to 11% here. A couple of reasons that we have seen as to why this margin boost is happening. First, the company in its con call reported that its material costs have gone down below the 60% level, which has not happened before. Again, we have to notice that the orders that took place last year, they had a higher share of raw material cost included in, which has supported this kind of growth we are looking at. Again, another aspect is the higher share of the automation business, which has supported this, and even higher exports, wherein the margins are comparatively better. So again, that is to be focused over here. Another area, apart from that they have mentioned going forward in the con call, which was important, is the growing significance of their data centers, where they're going to be doubling down their efforts over here. Focus areas, again, see about a 15% of growth going forward. And even if you have to look at electrification motion, that would be on a sweeter spot owing to the building and infra theme that is playing out. Now, if you look at the order backlog, that has seen about a 15.8% of uptick in the orders, while the order backlog about 25% growth. So 40% of the orders that we are looking at in the backlog, that comes from their long-term projects which are in the railway and process automation business. Now, regarding these, earlier in the day we had discussed, but just to reiterate that, now a couple of brokerages having a strong buy over here. Motilal seeing about an 18% target, with the EBITDA having with its EBITDA margin at an all-time high. Again, margins were led by the superior product mix as discussed earlier. Even Jefferies see about a 27% of an uptick, with EBITDA seeing no one-offs this quarter. Again, renewables, we have to look at order inflows which are supposed to be having a higher growth pickup in the H2 of next year. Again, renewables is like a moderate growth area compared to a high growth area, so that remains on watch out. So these are the couple of reasons as to why ABB India is buzzing in trade today.
Okay, ABB is buzzing, no doubt about it. Jefferies has also retained a buy. Pankaj Pandey, ABB looking rock solid to you too?
Well, yes, I think ABB, nothing much to complain. I think 18% kind of a margin was definitely a surprise. And even management commentary that they are going to maintain margins about 12% as quite conservative. I think that's the only challenge with ABB has been it's very difficult to sort of justify a stock like this. It's becoming a concept stock. So even we are taking margins of 17%. The stock is trading at 90 times or so. So it's very difficult to sort of justify a buy. But like I said, it is one of the companies which nobody wants to sell, and everyone, whosoever wants to have an exposure on the capital goods or capital expenditure theme, I think this is one of the prominent stocks to sort of play. So if somebody already has it, I think they should hold. I am not too sure when it will sort of correct sufficiently enough for us to give a buy.
Hemant? Right now at these levels, and ABP does look quite exciting. Would you book profits? Would you buy? Would you accumulate? What would you do?
I'd stay away, Tamanna. Too late, too early. Too late to buy, too early to sell. There is nothing which warrants a sell at this point in time. Whether you look at a short, medium, or long-term time frame, Tamanna, it's in an uptrend on all counts. So there's no question of shorting. I don't see any logic to book profits. I mean, booking profits is never a bad idea. Better to take something home. There's a positive gap, there's a bullish gap today, which I think would hold in good stead, and that would provide support. So frankly speaking, I'd say stay away. There's nothing much to do as far as ABB is concerned. If I were to go for a punt, I'd go in for IT. I think that's underperformed, can surprise. So any IT stock would be a slightly off point, but that could be a good punt. ABB is, I believe, run up significantly. I'd stay.
The only thing is, as we take the break, if indeed they clock in this 18% margin each quarter, because they in the con call have said that there's no one-offs in the margins, imagine the beat that they bring about on the profit growth front for each of the next 3 quarters. I think that is something to watch out for. Nevertheless, take a break on that note. Stick around. We delve deeper into today's market movement, talk about some losers as well on the other side. Stay tuned.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures.
Back with India Market Close right here on NDTV Profit. And yes, the markets have recovered and done very well, and a lot of stocks have flown. But there are some losers, as we said. So Tata Motors is one key name. But look at Sirma SGS, down about 17%. And you know, everything in this EMS space does well until it stops doing well in one quarter because of bad numbers. Now, this may not necessarily last, because remember, Dixon from 4,500 fell down all the way to 2,500. At a point of time 2 years ago, when the numbers went a bit kaput and then really rose. I'm not saying Sirma will do the same, but currently Sirma is undergoing the pain of missing out on the numbers in some fashion. The stock is down 17%. Pankaj Pandey, do you have Sirma under your coverage?
Neeraj, we don't have a coverage on this thing. I think so. That is, see, the challenge with this space is that if your margin is volatile, the reverse becomes quite volatile, and it's very difficult to ascribe value then. So that is the entire challenge with this segment, and nobody knows the kind of pricing power they have. That is what we have seen in case of Dixon and even in case of Amber.
And that's a fair assumption. Now, just before you get to the management though, Himen, this 16.5% downside on Sirma, what kind of downsides does it open up?
Well, frankly speaking, I thought 450 was rock solid, impregnable support, and yeah, it just about sliced through that rather easily, I'd say. So it's a relatively new listing, Neeraj, not too much of data to go on. But yeah, this does not augur too well, and the next support is far away. It's at 380. So, but once again, the volume spike has been huge. So same logic applies if somehow this level holds for a couple of trading sessions, which it might. I'd say things should be okay, but till 450 is not reclaimed, it's going to remain messy and weak and wobbly. Neeraj.
Okay. Well, the company, as we said, reported the numbers. Hear out what the management had to say in an interaction with NDTV Profit.
See, the EBITDA margin correction is essentially because of the change in the product mix. Per se, if I was to look at the margins, vertical wise, they are almost stable and there is no deterioration in that. Domestic demand, led by the consumer, is growing at a scorching pace. So when I say that we grew by about 55% last year and my exports grew by about 26%, this means my domestic business, which is primarily telecom, consumer-related business, has gone up by a significantly higher percentage, and hence the compression in the margin percentages. Going forward, we are very confident that in the coming year, we'll be able to sustain the margin at 7% of the revenues. And thereafter, in the coming years, once my overall capacity, efficiency, utilization kicks in, there could be a marginal accretion to that. But this year, we maintain our guidance of about 7% EBITDA margins on a yearly basis. Quarter on quarter, there could be variation based on the product mix. But on a FY25 basis, I am very confident that will be 7% minimum of the EBITDA margins.
All right, the other focus on Dr. Lal Path Labs, that stock has also done fairly decently after their steady earnings. We in fact had the opportunity to speak to the group CFO Ved Goyal on the key growth drivers in Q4. Listen in.
We are happy to announce that margins has, decent margins this quarter. There were 2-3 things which has, one is of course our expansion overall, which is deeper in tier 3 and below. has responded well. Again, the growth for this quarter is 11%, 11.1%. And if you see, then product mix has also gone up. Our SwasFit in this quarter is highest, 24% contribution from SwasFit, which is highest ever. So these two things has contributed, and plus, overall volume growth also, if you see, is inching up compared to last quarter. So we are confident that we are able to sustain these kind of numbers.
Hemain, any views on the stock? Dr. Lal, Path Labs had a good run for 2 consecutive sessions, if I count Friday and today. Do you see a further up move?
I think so, Tamanna. It seems to be breaking out of this range, but the cash market volume seems to support it. 17 lakhs shares cash market volume. This is obviously not delivery marking, but this is probably the highest volume seen in the last 10 months or so. So yes, but formally the level is 2495. 2520, not 2495. Sorry, we need a closing about 2520. I believe that's very much possible looking at the price volume action today, and we should be heading towards 2650. And at the risk of sounding overly optimistic, even 2750. So it's ticking all the right boxes. The short to medium term charts have turned positive, indicator support. Long term charts, things are turning. So fingers crossed, it's looking better.
Pankaj, your take on the diagnostic space, and I want to pull up what's happening with the Vijaya Diagnostics also. Of course, Dr. Lal also doing well. Vijaya Diagnostics today taking a tumble, down about 4.5%. But anything you like in this space, and any view on this specific company?
So diagnostic as a space, we're not tracking, so I will not be able to comment. But of late, whatever healthcare numbers have come out, I think Cipla numbers look quite robust to us. I think the management commentary or the aggressive EBITDA margin guidance of 24.5% or 25.5% what they're given for next year is quite sort of good. And this is again irrespective of the fact that in case if there is an adverse outcome from US FDA, because I think they already have a plan B in place. Largely because US growth is again expected to remain robust, and India growth is also good. So I think Cipla numbers came out good. We have a target price of 1645 on the stock.
Well, Zomato, Tamanna, you've been ordering.
If I'm being honest, I actually, order more from the rival. But yeah, Zomato has its moments as well. There was a tweet from Dipinder Goyal yesterday saying that their highest ever sales were for Mother's Day. But they've not needed that boost clearly as far as their numbers are concerned. Net profits at 175 crores versus losses of 188 crores. Just the first cut of numbers on your screen. Revenue is doing well, up 73%. We'll wait and see what the breakup is and how much of that is Blinkit, how much of that is Zomato, and what are the other sort of parameters coming in. But those two numbers, I'm seeing the stock take a tumble. And can we just pull up? Yeah, there's the chart. Stock's not responding too well and has been seeing quite a sharp fall as those numbers are out. We'll wait for details. Down about 3% now. So just in the last couple of minutes has shaved off about 1.5% on Zomato. Revenues maybe a tad below estimates, up about 8% is the figure I just saw. It's a tricky one, isn't it, Neeraj? Because the way the company has also chosen to count its EBITDA margins had come up for questioning last quarter as well. 4.5% down now as we speak. So Zomato really taking a bit of a knock. To be fair, it's run up a fair bit as well.
Yeah, but it'll be interesting to know if anything within the presentation has spoiled it, because I'm just broadly thinking the PAT number, they've spoken about how they will get back to a profit number, QOQ as well. It's a 175 crore number versus 138 crore. It's not looking bad, and this is in a non-IPL quarter that they've done what they've done. I would presume that the IPL quarter will probably be more, but clearly something's disappointing the stock. Remember, after hitting life highs in Friday's session, down about 5% now. Pankaj, just wondering why this disappointment with Zomato? Do you look at it fundamentally?
No, Neeraj, you don't have a view on the stock fundamentally.
Okay. Well, of course, the market cap is at 1,75,000 crores. In some sense, that's not a very healthy PAT number per se, but maybe there's more to this. Maybe what we do is take a break. We come back from the break and try and analyze Zomato in greater detail. It's actually falling like a knife through butter, really. 6% down now for Zomato. We'll talk about this on the other side of the break. Stay tuned.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell?
It's all about Zomato. Before we went into the break, Neeraj said it's like a butter cutting through knife. It's like orders cutting through your wallet, or like calories getting added to your waistline. However you see it, Zomato down 7% now. Sharp cut in the last few minutes as the numbers have emerged. Now, what is bothering the street is really the question, and why are we seeing that kind of a hit? The Blinkit numbers will be interesting to see, and that is where the whole buzz about Zomato really lay, and the excitement lay in a Blinkit. Their revenues on the face of it, okay, about 8% up, consolidated QOQ. EBITDA up 69% consolidated QOQ. No real apparent reason why Zomato is seeing that kind of a hit. EBITDA margin at 2.4% versus 1.6%. Remember, for a lot of companies in this space, the question is about profitability and how close you are to profitability. And that seems to really elude the company so far. What's interesting, Neeraj, and also a bit of a question mark, is that remember Zomato has been on the top of pretty much everyone's wish list in terms of all of the big brokerage firms as well.
Yeah, and it's done really well. On the face of it, the numbers seem okay. I don't know if they are just below estimates. I don't know if there were Bloomberg estimates to this. Unfortunately, we don't have that access. But it certainly seems that there is some issue out here for Zomato, which is plaguing the stock. Unfortunately, can't place my finger there, but clearly market knows it best for now. A bit of a disappointment there. Again, Himen, a stock which doesn't really have too much of history, but now it's been listed for a sufficient time. What do the charts suggest? Hit life highs in Friday's session and down today.
45 to 207 linear move. Interesting thing is that in this whole move, which started when it bottomed out in January 23, Neeraj, if I see the charts correctly, not a single month has it broken the previous month's low. Just 1 month it ended below the previous month's close, but it's not broken the last month's low even once in this entire time frame. So it's been a linear move, one-way move. Once again, I believe it's more to do with stock getting tired because it's had a phenomenal move, frankly speaking. 182 is important support. I don't think that breaks. If that breaks, yes, the correction will deepen, and the chances of it slipping into an intermediate correction are high, especially 182 break. So today's move is just a one-off thing, and I don't think anything changes. But yes, now the volume generated by this technical downward bar reversal, which is on the verge of forming today, Neeraj, that would mean that 205 now needs to be taken out if we expect Zomato to continue. So I believe it's stagnated. The range is between 182 to 205. If 205 gets taken out, everything is hunky-dory. If not, I think it will fall under its own weight. Tired, overbought, could go for a breather. Limited data, like you said, but as of now, it's been a beautiful one-way move, just a bit tired.
Yeah, and likely maybe just looking at the Blinkit numbers, or it has to be that some of these numbers are slightly below what the estimates are. There's no other reason why this would happen. Anyways, so that's on Zomato, but there's a market beyond Zomato out there, which also we need to talk about. There's a clutch of stocks out there which have done well. UPL, a case in point, 5% higher today, if I'm not wrong, for now 6% higher. By virtue of the fact that it's beaten street estimates quite convincingly. And wonder if agrochemicals at large is looking like a pocket which is strong. My colleague Varsha is going to come and talk about the chemical space, but agrochem stocks, Pankaj Pandey and UPL in particular, what did you make of the numbers? I mean, why this thumbs up to UPL a day after it had clocked in a 7% gain? So not only was it up 7% in Friday, it's up another 6% today post the numbers.
So UPL don't have a specific coverage, Neeraj, but overall, our sense is that chemical is one space which has not done well over the past 2 years. So obviously it's oversold. And I think some of the numbers which have sort of come out, say for example, we have turned positive on Gujarat fluorochemicals, largely because the commentary, what we are sort of picking up now is that, say the biggest segment, which is a fluoropolymers, I mean, which is somewhere about 57% of their sales. I think they're seeing prices being stable there. The volume recovery is started to sort of happen, and they're not seeing competition in some of the segments from Chinese. And in general, what you sort of get a sense is that the inventory or the excess inventory is out of the system, and prices have started to stabilize. You don't see further dumping happening from China. So worst is largely behind us, and things are a bit of a green shoot is visible in some or the other pockets in some of these chemical companies, and which is why I think selectively one can be positive. Rallis, I think, is yet to sort of display that kind of a numbers. But in general, yes, one can be selective in this entire chemical as a space, be it agrochemical or chemical in general.
Sharda Cropchem should come up on your screen. Let's see if that one is still holding on to the gains that it did. UPL is up 6%, but Sharda Cropchem is the other one, 7.5% higher for that one. So really good going by UPL. I mean, quarter on quarter, big improvement in margins, right? Other expenses was 36% versus 54% in the previous quarter. And when you see that kind of performance, EBITDA margin last quarter was 1%. It's 13% this quarter, and I think that is the point, that for most of these agrochemical companies or chemical companies for that matter, we know that pricing YOY might be lower, but volumes are looking strong. And if sequentially there is a bit of an improvement, then you would want to extrapolate that kind of an improvement into the quarters ahead. So volume growth plus sequential improvement effectively leads to the kind of uptick that we're seeing into some of these chemical/agrochemical stocks. Hemant, UPL or a smaller one like Sharda Cropchem or some of the others, anything that stands out for you on the charts?
UPL has found a medium-term base, Neeraj. It's 3 years, 2 years, 11 months to be precise of underperformance. It's fallen off a cliff from 850 to 440. So it's almost become half over the last 3 years, doing nothing. Has found a base over here. The range is between 450 on the downside and 515 on the upside. It's in the throes of a strong rebound. 2 crore plus volume today, that's 2 crore 42 lakhs is big. It's close over the 55-day exponential. Everything seems to suggest we're in the midst of a corrective bounce, which I believe, I think it looks like it's going to sustain above 530. If it does, it opens the doors for a move till 560 and maybe even more. So 3 years of hatching eggs, doing nothing. The recovery is going to recover further. So notwithstanding the move which has happened today or over the last 2 trading sessions, I still feel it has more legs for an upside, Neeraj.
Oh, I love that term, hatching eggs and doing nothing. I haven't heard that in a while. I mean, nice to hear that. What is definitely not hatching eggs is Zomato. Some recovery from its sharp knock and a little more details on the numbers that you're now seeing on your screen. So that's maybe getting a sense of why the panic. From what we're learning from our research team, it's a miss in EBITDA and PAT, which has hurt the stock. It's a beat on top line basis consensus numbers, but on EBITDA and PAT, it's hurting the stock. So margins are at 2.4% versus an estimate of 3.4%. EBITDA at 86 crores, fine, but the estimate was 118 crores, and revenues were also slightly higher than estimates perhaps. So that maybe is what is hurting. Even a net profit of 175 crores has come in versus an estimate of 187 crores. So maybe the point that when you have that much of a upswing and a good mood and a good conversation around a stock, but it doesn't really then deliver on the numbers, that's what you expect to happen. Like even the food delivery uptick was just about 2% from what I saw on our flashes right now. So maybe that's the story as far as Zomato is concerned. But some of the other counters that have been buzzing in trade, and I just want to pull up the pharma pack and a Piramal Pharma to be specific. Cipla doing well today, Piramal Pharma among them. The entire pharma index actually having a pretty good day. I'm going to come to you, Pankaj, on Cipla first. Now, pharma could be seeing a good day because of a defensive move, either way you see it, but Cipla, in terms of its numbers and the kind of brokerage notes we have seen today, seems like the concerns have eased about what happens after FY26.
Correct. I think for Cipla specifically, we have increased the target price to 16.45. I think what we are sort of liking is the confident tone of the management in terms of guiding for 24.5 to 25.5% kind of a margin, and despite any major sort of launches or one-offs. And they're also sort of penciling in the fact that in case if there is any US FDA-related adverse outcome, I think that is not going to sort of dent the numbers. So our sense is that over the next 2 years, we could easily see 11% kind of a top line growth and 21 or 22% kind of a bottom line growth because the growth in key markets like US and India looks intact, and respiratory is the segment which they want to sort of continue with. So no, nothing to sort of complain in terms of Cipla numbers. So we continue to remain very bullish on this stock.
Cipla, then while Vijaya Diagnostics may be down, but some of the others like Dr. Lal, Metropolis, etc. have not had a bad move. Look at that. I mean, Lupin is up about 5.5% too, Aurobindo 4%, Divi's, Gland. Some very strong moves there. Very few pharma names like Laurus, Biocon, etc., which are in the red, but a clutch of names doing remarkably well in the session today.
Yeah, Hemen, you track the Adani twins closely. You've been very constructive on Adani Enterprises for a while now. It's not moved per se. Today, both these stocks have shown this 2.5% uptick. Could there be more?
I think so. Frankly speaking, the technical promise that Adani Enterprise showed, Neeraj, it briefly fluttered positively before it sort of came off. I mean, there was absolutely no logic for an underperformance happening. But anyways, like you said, it's taken support on the 55-week exponential moving average, Neeraj. There is very strong support at 2760. The volume spike today is highest, Neeraj, since 18th March. So if it's taken support on an important support and the moving average volume is highest since 18th March, so that's almost 2 months, I believe a rebound is underway. The first headache for the rebound is 2950, Neeraj. But yeah, I believe a short-term bottom has probably been formed. We'll need probably another 2 or 3 trading sessions to confirm this, but I believe that's happened. About 2950, a further upside to 3020 seems possible. So time being, I think the downside seems to be capped as far as Adani Enterprises is concerned. And if you're speaking about Adani Ports, it had outperformed, posted a new high, relatively stronger support at 1240, bouncing back good. Resistance at 1340, about 1340 can surprise.
Okay, well, a 3% apiece for both of these names, so they have done well for themselves in the session today. What else? You know, Tata Motors isn't the only loser, of course. We've spoken about Sigma SGS as being the one. Wonder if the likes of Dixon or an Amber and others are also looking a bit soft, though Sigma can't be a driver of that, but Dixon is down about a couple of percentage points. Amber flattish in trade, and there are a clutch of other names, of course, now within that EMS space, about 9 stocks within that bucket, and we probably want to watch out for some of those, if not all. Pankaj, what auto stock would you be a buyer in currently?
So Neeraj, if you look at from Tata Motors number, what is coming out clearly that the CV and PV is expected to consolidate given the fact that they've done well. I think the only segment left is two-wheelers. So at a peak, we sold somewhere about 2.1 crore two-wheelers. This year, we closed at 1.8 CR. So there's still room for upside, and which is what you're sort of picking up on both, be it Hero MotoCorp numbers. The company is going to deliver double-digit kind of a lower double-digit kind of a top-line growth. And even for Eicher also, we've been expecting the recovery, especially in the premium side. I think that looks more believable at this point in time. So we feel that two-wheeler as a space within auto is relatively better poised, and both these stocks look good to us. I think in Eicher, we have put a target price of 5,600, and in Hero MotoCorp, it's about 5,500.
Okay. The other one which is really surging is BEML. Actually, the top gainer on the BSE 500 is BEML, up 15% with the margins expanding. That stock has had a really good move. Pankaj, do you have coverage here? Did you look at the numbers of BEML by any chance?
So Neeraj, we don't have a coverage on this, but some of the names what we are liking is something like Engineers India, because it's a good proxy play on the overall capex done by PSUs. Valuations are attractive and return ratios are good. I think the turnkey project segment is going to sort of contribute less, and the consultancy is going to contribute more. So obviously it's better margin profile. So Engineers India is what we sort of like as a good proxy play for overall capex by the PSUs.
So BEML up 15%, and you know, Hemen, I want you to come on BEML, but I also want you to take a chance at Siemens, because I wonder if it's the ABB effect that is showing into some of these MNC names. I wonder if Honeywell Automation is the other one that is also maybe active. I don't quite know, not as much, but remember they're in the same bucket of sorts, and if there is pricing power for ABB, maybe some of the others might also have some. Maybe wrong to extrapolate that, but keep that in mind. Remember, ABB, the management, will be on NDTV Profit at 4. But Hemen, come in on BEML and come in on Siemens.
I'll start with Siemens first, and I think that extrapolation that you're talking about, frankly speaking, makes a lot of sense on charts. Because whatever you said in terms of fundamental in the extrapolation is translating into exact price action on the chart. So Siemens, 4 years and counting, 4.5, 4 years and counting, phenomenal dream move, sub 1000 to 6600, and it still doesn't seem to be in a mood to let off. So frankly speaking, I think it's a buy on every decline. It is in the throes of a very strong bull market, and I don't think that changes in a jiffy. So what's good is good, remains good. So makes a lot of sense, Neeraj. I think it's a buy on dip sort of a stock, frankly speaking. And coming back to BML that you mentioned, I mean, that is frankly speaking a bit surprising. What looked like a possible rounding top has been broken through on the downside, and volume is humongous, 32 lakh shares. I don't know when last such volume happened, and that's happened. It's happened at least 10 months ago. So huge volume, and yes, I'm assuming these levels hold. The level to watch out for is Neeraj, 3677 swing high on 24th April, 3683 swing high on 3rd May, and now we've taken both of them out with higher volume on the same day. So if the level holds, assuming those levels now become a base, if we're seeing BML heading towards 3900 and more, Neeraj.
Well, some good going there for some stocks, but agrochemical is a space in focus. Keep in mind, viewers, and that is what we should be focusing on in moments from now. Actually, take a moment to thank both our guests, Pankaj Pandey and Hemant Kapadia, for joining us today and giving us your thoughts. Really appreciate your time this afternoon, gentlemen. And while we are about 5 minutes away from close, I think there is a special focus that should be laid on chemicals and agrochemicals in the session today, simply by virtue of the fact that some of these stocks are either showing promise in the numbers by virtue of volume growth or showing a promise in the way the price movement has happened. Look at Agrochem, Sharda Cropchem or UPL. Now my colleague Varsha has analyzed all the chemical companies. She joins in to give us a quick synopsis of what stood out in the chemical company results thus far. Varsha, what stood out?
So over the weekend, we received 3 to 4 chemical companies who reported their Q4 FY24 numbers, wherein starting with RT Industries, if you see, revenue was up 7% year on year. Now here, we need to see what is quarter on quarter growth also, because we need to see whether prices of the chemicals are improving quarter on quarter. So if you see for RT Industries, the company did report 2.3% revenue growth quarter on quarter. Margins were 16% versus 15% last year. Now, we did speak with the management wherein they are expecting EBITDA, FY25 EBITDA to be in a range of 1400 to 1700 crore, and they are expecting volume growth in FY25 to be 20 to 25%. Then we have AMI Organics, wherein all-time high quarterly revenue they've reported of year-on-year growth revenue of 20% and 35% quarter-on-quarter, and the growth was driven by strong volumes. And if you see that they are targeting a revenue growth in the range of 25% in FY25. Then Sharda Cropchem, overall volumes, if you see for this company, have increased 24% year on year, out of which agrochemicals grew 28% year on year, the volume growth. And if you see the revenue for year on year, they've degrown due to lower product prices, but quarter on quarter they have done exceptionally well. And their material cost for Sharda Cropchem, if you see, with respect to revenue, was 65% versus 74% in Q3 FY24. So overall, if you see, all the 3 companies have reported good volume growth, and sequentially the numbers have been good. So maybe the prices are improving from here onwards. Let's see what other chemical companies post on.
Just a very quick question. Did you say RT Industries has guided to 1400 to 1700 crores of EBITDA? Because in FY24, they have done 975 crores.
Yes, Neeraj. So in FY24 also, they had guided around 1000 crores of EBITDA, where they fulfilled it. And today itself, we spoke with the management, wherein they've guided the numbers. 1400
to 1700 crores. That's
yes.
a 40 to a 70% jump in EBITDA.
Yes.
Wow. Okay. Great. Varsha, thanks for that. Tawana, that's significant. If the operating profit margins inch up from where they are,
to where they could be, because I think March 2022 their EBITDA margins were 28. That was a rosy blue cycle, but they're at 15%. If they improve that a little bit, it'll be great for the company.
My question is that we've been waiting for this cycle to turn for a while. So
we're seeing the volume growth now.
Yeah.
Let's see if the pricing power comes back.
yeah, so FY25 maybe the turnaround. Yeah, all right, we're almost at close. Himin, very quick BTST calls or STBT? All right, we'll try and get that take for you, but you're looking like you're closing in a pretty good steam considering the kind of market that we had this morning. Neeraj, one would reckon that maybe the mood has changed at least for the day. The big question remains whether you sustain. You're closing in the green at least for now.
And that's a big respite. So we're closing well, and that's a good sign. The question is, can we build on from tomorrow? So let's quickly just get the heat map up on the screen. Because we're doing well. We know that we've done well for the day today. Let's just see how we are closing and what stocks are leading the charge and what stocks are not. So it's the same set of names, but for the fact that HDFC Life has perked up in trade. So 3%, the Adani twins are right up there. 3% apiece. They were 2.5% when the markets, when we started off the show. HDFC Bank is still in the top 10 gainers. So that's essentially the list of stocks which are doing well. But giving HDFC Bank company or ICICI Bank and Kotak Bank, what's not doing well? Tata Motors, BPCL, Shriram Finance, Coal India, NTPC. So some of the PSUs have certainly pulled back in trade. Actually, I can see 5 PSUs in the top 10 losers, and that's quite a staggering statistic. That the PSU index probably hasn't done well. At least that's the large cap pocket, Tamanna, but the broader end, a lot of result reactions as well.
All of it result reactions, and you have at least the Nifty Mid Cap 100 up in the green. The small cap also, small cap still seeing a bit of pain over here. But let me just quickly pull up your top gainers and losers in the S&P 500 to give a sense of what really has moved. And you're right, Neeraj, it's largely been about results. I mean, ABB India, the star in that sense. Dr. Lal Path also on the back of numbers. UPL. Also, Siemens, like you said, maybe the ABB effect that you're seeing over there. So that's the story as far as this side is concerned. I'm intrigued by Hindustan Zinc, which continues its up move unabated. On the losing side, of course, Bank of India again, numbers, Tata Motors. I don't know if they deserve that beating, but obviously that concern remains as far as they're concerned. I would say the Pharma pack was the other gainer of the day, and not just a Cipla across the board. And Aurobindo Pharma, Lupin, Divi's, Piramal Pharma also did fairly well in that space today. I just want to close off by seeing what happened to Zomato finally with all of that seesaw and up and down. I mean, that stock had quite a volatile kind of a last 15 minutes of trade, but closing down in the red, about 2.5% down after that, crazy up move it's seen over the last several months. The numbers perhaps not what the street expected.
Yeah, but a staggering day to my mind, simply because it looks so bleak at the start of the trading day, if you will. But I think it's ended well, and if the index can build on from there, a lot of shorts in the system. Yeah. Let's see if there's a bit of. I mean,
the trick and the challenge is really to sustain through the week. We're only on day one of a very, very interesting week.
And a long week, 6 trading days. Because Saturday is a working day.
Yeah, Saturday is a working day. I'm wondering what the turnout number would be at the end of the day today and end of the evening, and that might also determine some of the mood of what we see tomorrow. So that'll be one important factor to see. But remember that big interview on NDTV network, Amit Shah speaking about how markets will respond and a whole host of other things. Prime Minister Modi has spoken exclusively. We have so much going on the channel. So for now, it's thank you from Neeraj, me and the entire team. But stay tuned. So much more on the other side on NDTV Profit.
Witness the power of information as the market heaves a sigh of relief following an exclusive interview with Home Minister Amit Shah.
16 बार इससे भी बड़े गोते स्टॉक मार्केट ने लगाए, इसको चुनाव के साथ जोड़ना नहीं चाहिए। खैर, अफवाहों के कारण ऐसा हुआ भी होगा तो 6 जून के पहले आप बाय कर लेना, 4 जून के पहले वो सूट अप करेगा।
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Hello and welcome. You're watching the Small and Mid Cap Show here on NDTV Profit. I'm Harsh Saita and with me is Varsha Chandani, and we're going to talk to the management of Aarti Industries with regard to Q4 numbers and beyond. We have with us Mr. Rajendra Gogri, who's the Chairman and Managing Director at Aarti Industries. Welcome to NDTV Profit, sir.
Yeah, good morning.
Right. Sir, let me first start off with what's happening on top line and margins. Could you talk to us about how the demand environment as well as the supply environment, more than the demand environment, is shaping up?
Yeah, discretionary demand is getting more stabilized, and whereas non-discretionary, especially agrochemical, I think still the demand pressures are there. Inventory corrections are still going on, and especially they are more product specific. So that's where the demand situation is there.
Okay. And how is supply shaping up, sir? How is the China supply shaping up for you?
Yeah, basically, supply side almost, because when the demand is slow, there will be always a demand supply gap in that sense. So overall, I think there will be a little bit excess supply in the system.
Okay, understood. Sir, with regard to how margins are shaping up, could you talk to us about you're currently around the mid-teens kind of number? Of course, we've seen a jump when it comes to your top line versus the first half of this year. Do you expect that margins will go towards or closer to the 20% mark probably in FY25?
Actually, the way our business model is mostly the raw material pass-through model. So margin as a percentage to sales is not an actually appropriate measure. So absolute EBITDA is more important measure. But even at the constant raw material prices, we expect EBITDA margin to improve because of the operating leverage. as FY25, the volumes are going to increase. Compared to that, the manufacturing fixed cost or corporate fixed costs are not going to increase. So at a constant raw material prices, there will be a margin improvement as a percentage also, and also on the absolute EBITDA.
Hello, Mr. Gogri, Varsha this side. Last time you did mention that we have seen an improvement in pricing trends. Would it be possible to give a sense on how much pricing improvement you have seen relative to the first half of the year, and which segment are actually driving this pricing improvement?
So pricing improvement, generally will move with the demand side. So discretionary side, as the demand is global demand is stabilizing. So we see, some sort of a improvement in that segment. Whereas non-discretionary like agro and all, the pricings continue to be under pressure.
You guided for demand improvement, at least in Q3, that demand would improve over the next 1 to 2 quarters. Are you seeing green shoots of that, or are you seeing demand completely come back?
Yeah, discretionary, I think we are near normal.
Sure.
And I think when Q1, Q2 of this FY25, it should reach the almost normal only. Whereas agrochemical, still continue to be on demand side. There is still some pain, I think, and in calendar year 24, I think it will continue this year also.
Also, regarding the recent 2 contracts that you have won, that is 9-year and 4-year contract. Now, how do we see revenue for these contracts? Will it be linear? And even from the EBITDA margin perspective, if I see this 3,000 crore contract is having almost 20% EBITDA margin. So, are we going to see this from the first year of operation itself?
No, that first contract, which is of 9 years, there will be a ramp up. Actually, the next year, FY26 onwards, it will be more stable. This FY25, we are also expanding our capacities. As far as the second contract, which is a 4-year contract, ramp up will be from current year itself. So there, it will be much more stable from the current year itself.
Sure. And in terms of the linearity, how will it contribute to top line? Just want to try and get some perspective. So the 6,000 crore contract, roughly 1,500 crore to contribute to top line in FY25 itself. And for this one, on the 6,000 crore contract, what's the margin number like? Will it be closer to 20%?
No, that margin will be more around 15% range for that product. And it will be basically 1,500 crore. I think that will be a linear as far as that contract is concerned.
Also, Mr. Gogri, you had given a guidance that in FY24 we'll be having a EBITDA of around 1,000 crore, which we did achieve that guidance. Now coming back to FY25, you had guided EBITDA to be in the range of 1,400 to 1,700 crores. Now, where are we in terms of that?
Yeah, we are maintaining the same guidance of 1,450 to 1,700 crores. As the volumes get stabilized for discretionary and also improve in non-discretionary, and also will our new projects on ethylation, nitrotoluenes, and some of the specialty chemical will get commissioned this year. So this year is a transition both on the volume stabilization as well as stabilization of our new facilities. So we continue to maintain this guidance of 1,450 to 1,700 crores.
Also, coming to your capex plan, so how are you seeing this capex? And I mean, what is the capex expectation or target that you are in FY25, and how are you going to fund this?
Yeah, this FY24 we had about 1,280 crores, and FY25 it will be in the range of 1,500 to 1,800 crores. And funding wise will be partly through internal accruals and partly through debt.
Understood. Thank you so much, sir. It's been great chatting with you. Good perspective with regard to Aarti Industries. Of course, the stock not doing the best in trade today, but nonetheless, that's the take on the numbers, and quite positive in terms of FY25 commentary. Time to slip into a very short break. On the other side, we'll be joined by the management of GE Shipping to talk to us about the company's fourth quarter earnings and beyond. Stay tuned.
Presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna Mana Hai. Co-powered by Canara Bank. Together we can.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Hello and welcome. Today our focus is on Great Eastern Shipping. The company has come out with its Q4 results, revenue about 2.8% of an uptick, while margins have gone up by 334 basis points at 62.14%. Net profit about 25% of an uptick compared to last year's quarter. Now but to discuss more, we are in conversation with G. Shiv Kumar, the CFO and the Executive Director of the company. Hello and welcome, Mr. Shiv Kumar.
Thank you. Hello, and thank you for having me.
My first question for you is the March quarter's performance. Now, if we look at the sequential, in a sequential manner, it is one of your seasonally weaker quarters. But again, we saw some uptick compared to the December one. So I just wanted to understand what has led to this, and again, what should we look forward as of going ahead?
Yeah. Okay. Yeah, thank you. That's a good question. It is typically a seasonally weak quarter for the dry bulk business. It's the weakest quarter usually for the dry bulk business, but a strong quarter traditionally for the tanker business. And the tanker business has been strong. The dry bulk market has been unusually strong considering that it's supposed to be seasonally the weakest quarter. And the reason why the dry bulk market was strong was because Chinese imports were strong, Brazilian iron ore exports were strong. And as you know, Brazil to China is a very long route. Every additional ton of cargo from Brazil to China requires more ships than on any other route in dry bulk. And that's why dry bulk was strong. On the tanker front, tankers were strong because of the disruption caused in the Red Sea. Ships have been rerouting around Africa when they're going from, say, the Middle East to Europe, and that resulted in demand for more ships, and that's why tankers were also strong.
Absolutely. Now, you have described about the dry bulk business remaining strong. But to come to the Baltic index for the month, if you're looking, we have seen some kind of an uptick over here. What does this mean going forward?
Typically, this is the time when the index recovers, the Baltic freight rates recover for dry bulk. Because seasonally they come off the weak period, which is Jan-March, and start improving from April and May and go into a fairly strong summer. So the strengthening is not unusual. However, the good thing is that we are seeing strengthening across all sectors in the sense that we are seeing the Capesizes, which are the big bulk carriers, also strong. And we are seeing the smaller vessels also, which is the Panamax, Kamsarmax, and the Supramaxes. Doing quite well. So the dry bulk market is showing quite a lot of strength, possibly on the back of stronger dry bulk trade flows. We've seen Chinese imports of iron ore and coal being quite strong. Indian imports of coal also have been quite strong.
Absolutely. Now, the major highlight, if you look at the second half of the year, has been obviously the Red Sea impact that we are seeing. Major disruption in the Suez Channel, but Suez Canal. Again, if you look at the Panama Canal, also some disruption over here. I want to understand now what is going on there currently and how should we look forward to this situation in terms of next year onwards and this quarter, in fact, like how are we seeing the trends going on over there?
Yeah, on these two disruptions, the one update on the Panama Canal is that we were at 32 to 34 ship transits at peak. That came down to below 20 at the bottom when the Panama Canal was at its driest, which was early 2024, that was around December, January. That's now back up. They've had some unseasonal rains and it's back up to the low 20s, and they're expecting to go back to the high 20s by the end of this monsoon season, which is in the next 3 to 6 months. So you should have a little bit of reversal there. On the Suez Canal, it's anybody's guess. This is a geopolitical thing. It's not a weather-related thing. So it's anybody's guess what happens to it. It could stop tomorrow or it could continue for the next year. So we just don't know that.
Absolutely. Again, I wanted to understand, there had been some US sanctions in the crude tanker segment. So I wanted to understand what does this mean for our segment also in the crude tanker as well going forward. Do we see any sort of impact over here?
So the sanctions that we've seen recently have been very focused and have affected a small number of ships. As a result, they haven't had much impact on the wider market. What is also happening is because of the fear of sanctions, less people are doing the Russian trade, less owners, legitimate owners are willing to do the Russian trade. So it's not had a significant impact on the market balances recently, these round of sanctions. Maybe if there are more widespread sanctions, it could have an impact, but otherwise, no.
Absolutely. So small impact over here. Now coming to the order book. So our order book has remained on the lower side. But if you are to look at your presentation, you have mentioned that there has been some build up in both the crude tanker and the product tanker. So what kind of outlook does this paint for the markets going forward over here?
Okay, so the order book has indeed built up, as you said, that there has been a significant pickup in the pace of ordering of tankers. The good thing is that these ships are likely to come only in 2026 or 2027. There's nothing much coming in 24 and 25 in terms of new tonnage joining the fleet. And therefore, that threat of the new supply is limited, at least for the tankers. It's still not a large number if you see it in relation to the old fleet. There are a lot of old ships which are still in the active fleet, mainly because the market is so strong. If the market becomes weak, then you will find the old ships going, which gives a little bit of a safety net to the demand-supply balance. So if there is an oversupply of ships because of new ships coming in, then you could have old ships being scrapped and removed from the fleet, which will bring the market back into balance.
Absolutely. Mr. Shiv Kumar, now moving on to the vessel sides, the repricing, about 12 of our vessels are getting repriced, and that too, if I'm not wrong, in the first half of FY25. So can you quantify what is the extent of repricing that we are looking at, and how does that lead to our margins, our EBITDA, in terms of an incremental sense?
Yeah, so this is the offshore vessels that you're referring to. Right. We have 12 of them coming up for repricing within the next few months. Most repricings are happening at higher levels. In fact, all repricings are happening at higher than previous levels. And if I had to quantify this, I would put this at an average of $3,000 to $4,000 a day better than previous contracts. And since the cost base is fixed, this is an addition to, this flows straight from top line to bottom line. So all of these vessels are getting repriced, and the pricing is better because the market is just better. These are typically 3-year contracts. Market in 2024 is much better than it was in 2021 for the offshore vessels. And therefore, the repricings are happening at much better rates, which of course will feed through into our profitability.
Okay, so better outlook for the offshore vessels over here that you've mentioned about. But now if I look at the Saudi Aramco side, some cancellation has happened over here, about 90 rigs to be precise. Now, what is the kind of impact that we look at for our offshore vessels over here?
Yeah, so we have 2 rigs coming up for pricing in this year. They're coming off their earlier 3-year contracts. There are tenders in place which are under process. One tender got cancelled, which is relating to where we had bid our rig Greater Chetna. The other tender is under process still. Typically, what happens in the Middle East should not affect this market. These are disparate markets, and you're unlikely to find rigs which have been cancelled in Saudi Arabia coming to India. It's not very likely for that to happen. So it shouldn't have a practical impact. It might have a small impact on sentiment internationally. Practically, it should not have an impact on the Indian market, really.
All right, Mr. Shiv Kumar, before I let you go, my final question is, what is the key strategies that we are looking to place for FY25 going forward? So can you just highlight on the picture forward?
Yeah. So a couple of things that we're doing. We have, of course, collected a lot of cash. Our balance sheet is very light. We would like to do more capex and expand. However, the prices are expensive, and therefore we are not likely to do a large amount of capex currently. What we're doing is replacing our old tonnage with more modern tonnage. We will wait for the market downturn to invest a significant portion of our resources. So we are going to be patient and wait for the markets to come to the right prices for us to invest.
All right. Thank you so much for joining in and having this conversation. We look forward to next quarter to discuss more.
Thank you very much.
Presented by Patanjali Kesh Kanti Oil and Shampoo. टूटना मना है. Co-powered by Canara Bank. Together we can.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Markets recover to end higher for the second day, come back from the day's low after Home Minister Amit Shah in an exclusive interview told NDTV that markets will shoot up after the election outcome, said buy before June 4. Tata Motors slumps in trade on muted FY25 outlook. Management says that the market growth rate is likely to moderate and the pent-up demand is exhausted. Stock ends over 8% lower. Zomato records its fourth consecutive profitable quarter as its top line crossed 3,500 crore rupees while profit jumped by 27%. Kotak Mahindra Bank's IT spends remained strong over the last 2 years, but sources tell NDTV Profit that the bank may not have spent it all right. Fourth phase of voting takes place in 96 constituencies across 10 states. First major election in Srinagar in Kashmir after the removal of Article 370. Hello and welcome. You're watching The Reporter on NDTV Profit and I'm your host Pragati Oberoi. As always, the show aims to bring you the market insights along with national and international news. As we kick off the show, it's time to see how the markets fared during the day. I'm joined by my colleague Neeraj Shah for a quick wrap of all the market action.
The markets, the benchmarks closed higher, but you could argue that this was a day of recovery because it was a really good show by the markets intraday. I mean, we had a low point somewhere in the middle of the day, but I think we closed in near about the highs of the day. Nothing great. VIX is still higher, by the way, and therefore you got to keep that in mind. So while we've closed at the high point of the day, VIX is still higher and 11% higher. So some people would argue that this is a sucker's rally, but let's wait and watch. There are already a lot of shorts in the system. If indeed they start to scramble, then you might have a completely different kind of setting for the rest of the week. Remember, it's a long week of trade. But we did well. Let's get the heat map up on the screen. Banks led the way, but a lot of other sectors like pharma was active because you had stocks like Cipla, you had stocks like Divi's, you had stocks like Aurobindo trading in the green. There was strength in the Adani twins. two of the top 5 the Adani duo of enterprises and ports. Asian Paints has had a really good run in the recent past, about 4% higher for that one as well. And save for a Tata Motors which sulked big time, and maybe some PSUs, 5 PSUs like BPCL, Coal India, SBI, ONGC in the red. Not too much else was really very, very weak. So that was one good part. Then you look at the broader markets and BSE 500 and a lot of result reactions today to be seen. I'll start off with the losing side on the BSE 500. That list will come up on your screen and you will see, for example, Bank of India correcting. Tata Motors, of course, a part of that. TCI, never mind the Jeffries note of a potential 65% upside, but they've cut the earnings estimates. Not the best of results, down about 6.5%. So that one corrected a little bit. And on the gaining side, the star of the trading day today has to be ABB. For such an expensive stock, to have a 12% gain means the result needed something special, and that 49% EBITDA beat according to Jeffries note was something special. I think it showed in the way Siemens reacted in the session today as well, a bit of collateral impact coming in on Siemens. On the positive side, I might add, UPL, very strong show by agrochemical company. Sharda Cropchem, remember, was doing very well. UPL about 7% higher. Dr. Lal PathLabs about 6% higher. Again, results based, so that was doing very well. And there were a few numbers which did really well or came out with numbers and stood out, the likes of UPL, the likes of Zomato and a few others, which should be mentioned by virtue of the kind of intraday movement that they showed. UPL, of course, 7.5% higher in trade, and Zomato, this 2% downtick belies the kind of volatility that came in the last half an hour of the results. So net, not a bad trading day. Let's see what tomorrow has in store.
Well, that was the market wrap for you. It's also raining exclusives here. NDTV team spoke to the men of the hour, Prime Minister Narendra Modi and Home Minister Amit Shah, about their expectations from elections 2024 and its impact on the market. Here's a quick snippet from the chat for you.
भारतीय जनता पार्टी और एनडीए को 400 पार कराने का दृढ़ संकल्प है और देश ने पूर्ण बहुमत वाले भाजपा एनडीए का मॉडल देखा है और वह गतिशील सरकार देखी है, निर्णायक सरकार देखी है, रिस्क लेने वाली सरकार देखी है और उसके आधार पर हम आगे बढ़ रहे हैं।
16 बार इससे भी बड़े गोते स्टॉक मार्केट ने लगाए, इसको चुनाव के साथ जोड़ना नहीं चाहिए। खैर, अफवाहों के कारण ऐसा हुआ भी होगा तो 6 जून के पहले आप बाय कर लेना, 4 जून के पहले वो शूट अप करेगा। 400 पार होने वाला है, मोदी जी की स्थिर सरकार आने वाली है तो निश्चित रूप से बाजार ऊपर आएगा।
Well, even External Affairs Minister S. Jaishankar said that more foreign investments will come in India. In fact, he also assured investors that they are all waiting for June 4. Take a look.
You'll have to wait and see in the first 100 days and the budget which will come in that period. But the fact is, in a way, a certain base has been created. I see public investments continuing. I see greater enthusiasm for private investment. I think a lot of people are looking after June 4. They will see those numbers, and I think that will strengthen the resolve to invest in this economy. I definitely see much more foreign investment coming in. So right now everybody is like, okay, let June 4th happen and then I'm going to take the call.
Well, now let's take a look at some of the stock movement that happened during the day and why it happened. Now, Tata Motors stock declined by over 8% after the company said that it expects growth to moderate over the next couple of years. The company, in fact, said that it expects first half of FY25 to be weaker, while the luxury business under Jaguar Land Rover may just remain there. Puneet Javedi joins us with more on this. Puneet, what are the brokerages making of this commentary?
27,000 crores of market cap eroded today. If you look at the results, the Q4 results are really strong, but the key negative was the FY25 commentary. So we look at the 5 key reasons that could lead to, that may have led to this particular fall. One is a negative management commentary on the passenger vehicle side. The company has said that over the last 2 years, the segment has seen strong growth, reporting roughly 570,000 sales in this particular financial year of 2024. Going forward, they see less than 5% of growth in this particular segment. We see the second one where they see that the market growth in the the PV segment will be likely limited going forward, as we've seen a sharp uptrend in sales over the last couple of years from 2022, where the rise of personal mobility post the pandemic was one of the key sales triggers. While over the last 2 years, we've seen electric vehicles sales rise up to roughly 72,000 for Tata Motors as well. When we look at the pent-up demand, they see that this might be exhausted because of these particular factors as well. The CV cycle is another key trigger which is negative for the company. This is affected due to elections as well, and the company sees recovery, if any, only in the second half of the financial year. The third one is basically on Jaguar and Land Rover, which is the key negative for the company. Elara Securities has said that this could see just roughly 2% of growth in sales over the next 2 financial years, while the other key problem is the £3.5 billion investment that JLR is doing, which will lead to negative free cash flow for the company. And finally, to take forward the new FAME subsidy, which has been the scheme has ended on 31st of March and the new EMPS scheme has come in. The company has given some cautious commentary going forward on how buyers react to the subsidy going down by roughly 50%. But these are just some of the reasons we think that the management commentary going forward is slightly negative for Tata Motors. Going forward, we'll see how the sales recovers in the next couple of months. Back to you.
Well, ABB India also reported its first quarter numbers. Its EBITDA jumped by 98% and margins jumped by about 651 basis points. Now, the margin boost came on the back of higher share of service and export revenues. We spoke to the management also in the day, and here's what they make of the earnings.
If you look at the income statement of ABB for this particular quarter, it has been mainly driven by the material cost reduction. So material cost, which used to be 62.5% of our revenues, we are hit and a low of 59.8. I think they're almost 300 to 400 basis points lower. So I think this is basically a product of quite a few factors, right? So the first factor is, of course, we are now executing those orders which were booked during the time when the material costs were pretty higher. But subsequently, during the execution, the material costs have softened. So we are enjoying that particular benefit, what was there, number one. And the number two is, we are for the first time achieved 3,000 crores in revenues, which is a good amount of capacity utilization leverage what we have got. And third, but most important point is the mix of orders what we have executing at this point of time.
Well, in the big story for the day, we bring you another NDTV Profit exclusive, but this time it's on Kotak Mahindra Bank's IT spends or the tech spends. Now, naturally, the lender has been in the news ever since RBI cracked down on it, asking it to stop customer onboarding via its online and mobile banking channels. It also asked the lender to stop issuance of fresh credit cards. But now the company's management did say that they spent roughly about 1,700 crore rupees on its IT or the tech. So yes, the spending has been strong, but why has the bank not been able to meet RBI's expectations on IT standards is the real question here. Now, sources tell us that while this spending was strong, the bank missed the mark when it came to appropriate budgeting of this spending. In fact, the key problem at the bank was a lack of prioritizing solutions to technical loopholes, especially when it comes to legacy infrastructure. Now, to explain this properly, let me bring this point for you. Typically at the bank, when an IT budget is planned, approximately 20% is allocated towards the employee cost. And the people cost is where things went choppy for the bank, as its spending did not match the ambition for the lender. Despite a huge workforce at the bank, the tech team would only have about 1,200 to 1,500 people, and most of the skilled tech needed to handle or monitor the systems came from the middle management of the bank, where the attrition was anyway very high. So in addition to the people problem, the bank's core infrastructure also had issues. Sources told us that the bank was using legacy systems and a timely upgrade of them was largely missing. In addition, the disaster management drills or the DR drills were also a problem for the bank. Not only did the bank conducted insufficient drills, it also lacked the right people to constantly monitor the system in place. So a combination of all of these factors led to Kotak Bank's problems in terms of IT spends with the RBI. That was a big story on Kotak Mahindra Bank exclusively for you. Moving on, let's take a look at UPI. Now, UPI is undeniably one of the most successful tools deployed by India to boost the online payments. In April, in fact, UPI transactions crossed 19 lakh crore in terms of value. The number of transactions crossed about 1,333 crore. This is, in fact, 50% more than a year ago, so quite a significant number. But the concern for the industry is that UPI continues to be free. In fact, merchants pay nothing on these transactions when compared to credit card payments and all other methods in place. This also means that the UPI pie is largely dominated by Google Pay and PhonePe, who between them or between each other enjoy over 90% market share. In fact, Paytm's recent problems have only added to this. So if this service continues to be free for merchants and eventually customers, can smaller players even survive? Now, to debate on this entire topic and of course if UPI should be free or not, my colleague Tamanna Inamdar spoke to Deepak Shenoy, founder of Capital Mind, and Shinjini Kumar, co-founder of Salt. Let's take a look at what they had to say on this.
Should MDR be chargeable as a percentage of the amount spent? No. It is like me saying it doesn't cost any more for anybody to transfer bytes worth 19 lakhs versus 19,000 versus 19 rupees. Therefore, I think having a percentage charge is retrograde and it should not be done. But okay, giving you the example of how much the difference is. Yes, the rupee printing cost for the RBI has come down by 300 crores last year. That is 22-23 saw 4,600, 21-22 saw 4,900 crores. That 300 crore rupees was the saving, and that is definitely something, like Shinjini said, should be in a way transferred to the players in the ecosystem.
Well, we have a quick weather update for our viewers also. Sudden change of landscape here in Mumbai with dust storms blowing across and of course some rainfall also expected. Now for a quick chat on this, we have GP Sharma, President of SkyMed, joining us. Sir, thank you so much for coming in and joining us for this chat.
Yeah, thank you.
Yeah. So, sudden change of weather here in Mumbai. Certainly that was not expected neither by IMD nor by SkyMed. So, can we expect these conditions to prevail?
See, this is a pre-monsoon now season set in. Well and good all along the coast also. And this is around the time, around middle of May or so, when Mumbai can expect this type of weather activity. And it comes up all of a sudden, okay? Like just about 2 hours back or so, Mumbai was having nice and good weather with bright sunshine, and then it developed just about an hour and a half back. And yes, there is a thunderstorm, there is some strong winds also. And this is a part of the pre-monsoon activity, which possibly we will see more of it now, even in the coming days also. I see a big event happening even around possibly 16, 17, you will have a stronger event than this which you are having at the moment. It's a part of the pre-monsoon activity. Yes, the timings, sometimes it becomes difficult to predict about the pre-monsoon all along, not only Mumbai, any other places also. Yes, that's it.
Okay, so not only Mumbai but any other places, is it expected just in the Maharashtrian belt or other places perhaps in the southern India also?
No, other places. Like the other day on Friday, Delhi had a massive dust storm, winds in excess of 80 km per hour, a lot of damage, even claimed some 2 lives also as such, many people, 25, 30 people injured as well, damage to the property. So this is what happens in the pre-monsoon. The sudden disruption of this inclement weather activity takes place, and particularly for the places which are hotter than the other one, like Mumbai for that matter is a coastal place, so the temperatures generally remain confined to mid-30s or so. Yes, it does have some heat wave sometime, but then this is the first rain or first thunderstorm of the pre-monsoon season for Mumbai. Okay, and as I said, this is a offshoot of the offshore trough which has been there, right, starting from Goa and then going across Konkan and right into southern parts of even Gujarat also, Surat, etc. Okay, so this activity will not last very long.
Okay.
You can expect the things to become better, possibly within about an hour or so, I will say. Complete that belt, Pune, Nasik, Mumbai, they are having right now this thunderstorm activity. Yeah.
Right. So won't last very long. Just a couple of hours, not even
Yes.
another day or so.
Yes.
Okay.
But the coming days, as I said, we will have these build-ups, giving some thunderstorm activity. More of it, I expect it to be around 16, 17. Okay, that's it.
Okay, fair enough. Sir, also one more question for you here. Well, good weather and temporary relief from all the heat is naturally there, but what is the likely impact? Can we expect any damage to crops or any other signs of caution?
See, any unseasonal activity is obviously not taken very kindly for the crops as such, and more so when some thunderstorm activity is there. Thunderstorm means the harmful part of this activity is very strong winds and hailstorm, if any. Mumbai doesn't have hailstorm. Okay, all these places, they do not have hailstorm activity. So, but any stronger winds, about, say now Mumbai must have experienced about 50-60 kilometer per hour wind speed, which are rather strong, and that lays the crops as such. If at all the standing crops are there, it is definitely harmful for that. As far as Maharashtra is concerned, yes, they have experienced this activity actually for quite long now, for the last few days, shifting gears from Marathwada to Vidarbha to Madhya Maharashtra. These are the places which have been experiencing, I will say, untimely weather activity, and this will definitely reflect on some damage even to the standing crops as well. Yes.
Yeah. All right. So possibly some damage on that thing, but considering that the monsoon is also expected in about first 10 days of June, any impact there, any changes in prediction there in fact?
Though you see, it is a little early to say. Firstly, they have to come and settle down somewhere over Andaman and Nicobar Island. From there onward, it takes about 10 days for the mainland. I expect possibly it may come in over the Andaman Nicobar Island, say anytime around 20th, 21st of this month as such, and thereafter the countdown starts, and then we await its arrival. That's over mainland Kerala. Yes.
Okay. So one last question before we wrap this up with you. How is the weather over the next few days expected to pan out? Can we expect a heat wave back in the Maharashtra, Mumbai region or other parts as well? Because IMD did warn earlier in the day of another heat wave in the northwestern part.
See, I feel now most of it is done and dusted. As far as Maharashtra is concerned and southern parts are concerned, decent rains have been there over most parts. Entire South India will have a week of rain and shower, so there is no question of heat over there. Even parts of East India, which are real under extreme heat wave conditions, Odisha, Bengal, Bihar and Jharkhand, they also will, including Odisha, they will have at least some intermittent showers will be there. So I don't expect the temperatures to climb to earlier levels. That means reaching across even mid-40s, 45 or so. So literally, I don't see any heat wave coming back so soon, at least not in the next 1 week or so. In case there is a long break in the precipitation as such or the showers as such, then it comes back. But then I rule out that possibility over the southern parts. Even the parts of Maharashtra adjoining region also will ease out a little. Yes, northern parts of the country where the monsoon will arrive late in the month of June or possibly first week July, they still stand a chance to have the heat wave condition. Northern plains, Haryana, Gujarat, Punjab, Haryana, Rajasthan, Uttar Pradesh, yes, there is a likelihood, yes.
Got it. So definitely some ease coming in from the heat wave on that front. Mr. Sharma, thanks so much for joining us for this quick chat. It was a pleasure talking to you. Viewers, it's also time to slip into a short break, but please stay tuned because we have lots more lined up for you on the other side, especially on the election coverage.
Witness the power of information as the market heaves a sigh of relief following an exclusive interview with Home Minister Amit Shah.
16 बार इससे भी बड़े गोते स्टॉक मार्केट ने लगाए, इसको चुनाव के साथ जोड़ना नहीं चाहिए। खैर, अफवाहों के कारण ऐसा हुआ भी होगा, तो 6 जून के पहले आप बाय कर लेना, 4 जून के पहले वो सूट अप करेगा।
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable show.
If you want to be in the money.
Stock selection isn't an easy task.
Welcome back. You're watching The Reporter on NDTV Profit. Now let's shift our focus onto the massive election coverage that we bring to you. 96 constituencies across 10 states in the fourth phase of voting takes place. This is also the first major election in Srinagar in Kashmir after the removal of Article 370. Let's go across to our colleague Ratnadeep Chaudhary, who sent this report from Odisha's Behrampur.
Amid rising temperatures, there is a good footfall in many of the polling stations under Behrampur constituency, one of the four constituencies in Odisha which have gone to polls today. Remember, there are 21 Lok Sabha seats in Odisha, of which 4 have gone to polls today. Behrampur being one of the significant, given the fact that this is part of the Ganjam district. We are reporting from the district headquarters of Ganjam, Chhatrapur, which is part of the Behrampur Lok Sabha constituency, where there is a battle between two turncoats. In one side you have BJP's Pradeep Panigrahi, who used to be with the BJD, used to be a very close aide of Chief Minister Navin Patnaik and a former minister. And on the other side you have Bhrigu Bakshi Patra, who used to be a top BJP leader. So in this battle of turncoats, it is also a prestige battle, given the fact that the BJP is trying to make serious political inroads in Odisha, which has also gone for simultaneous assembly elections with 28 out of the 147 seats going to polls today. Remember, southern Odisha is seen as the stronghold of the BJD, which has been ruling the state for 25 long years. Chief Minister Navin Patnaik eyeing a straight 6th term, and the BJP wants to topple his political equation. In fact, there have been several issues, but one key factor has been the participation of women voters. The women, as of now in Odisha, have been seen as a strong supporter of the BJD, as a strong vote bank of the BJD. But this time, Prime Minister Narendra Modi had also campaigned very hard in Odisha against BJD, which was once an ally of the BJP, but now the relations have really turned into a fierce political battle, with the BJP trying to make an inroad in Odisha, one of the states in the eastern part of the country where BJP wants to gain in the Lok Sabha elections and also wants to increase its tally in the state assembly. And therefore, perhaps this battle of Behrampur is very important. It's not only a prestige battle, but perhaps it also defines how intense the fight this time has been between the BJP and the BJD, and perhaps Naveen Patnaik faces one of his toughest political battles this time. From Chhatrapur, with camera person Sanjay Chakravarti, Ratneep Chaudhary for NDTV.
Well, let's also go across to Prabhakar, who is joining us from Samastipur, Bihar. So, Prabhakar, this time it will be very interesting to watch that how NDA does in Bihar. What are you picking up from the ground?
This fourth phase of polling in Bihar is very, very crucial, especially crucial for NDA, because remember in 2019, MBA had all these 5 constituencies which are going to poll today, and they have to defend these numbers. So we are talking about Ujiarpur, where Nityanand Rai, MOS Home, is in fray. We are talking about Begusrai, where the Union Minister Giriraj Singh is contesting. We have Munger constituency, where Lalan Singh, a former JDU national president, he is in the fray. And then you have Samastipur, where the kids of 2 of the sitting ministers of Nitish government, Ashok Chaudhary and Maheshwar Hajari, their kids are contesting against each other. So it's a very, very interesting phase, high-profile candidates in fray, and very crucial as well for NDA, because NDA has to defend these numbers. If they have to reach anywhere near that magic figure which they are talking about, the 400 par, ab ki baar 400 par. So if they have to be anywhere near that, they have to retain these numbers. These were the seats which were with NDA in 2019, and they will have to retain these numbers. So basically they have to defend the numbers, and the RJD or the India Alliance parties, they are actually trying hard to dent into it. So this entire belt, which is the central Bihar area, Begusrai especially, very critical, very important. Remember last time in 2019, Giriraj Singh had won from a huge margin. He won from almost 4 lakh margin against Kanhaiya Kumar, a very high profile candidate again. He was contesting from Begusrai last time, 2019, though this time he is contesting from Delhi. So Giriraj Singh had an edge last time in 2019 because it was a triangular contest. There was also the RJD candidate in fray, but this time it's 1-to-1 fight against Avdesh Rai, who is fighting on the CPI symbol. So it's things are not that easy for Giriraj Singh this time. The same is the case at Munger, where Lalan Singh is seeking re-election. The caste, Lalu Prasad Yadav is known for his caste arithmetic, the way he plays it in the election, and he has used that not only in Munger but in most of the constituencies. Whether you talk about Samastipur, whether you talk about Ujiarpur, he has used those caste factors, the caste arithmetic or the caste equation, which Lalu Prasad Yadav understands very well. So the NDA candidates who are there in fray, though they are putting up a brave face, but it's not that easy. It won't be a cakewalk this time, and it will be a tough fight on all these 5 constituencies.
Well, that was the update on the election coverage, but since the scenery has a little bit changed here in Mumbai, we have news just coming in with all the weather changes happening. All takeoff and landing operations have been suspended for 30 minutes at the Mumbai airport. Let's go across to our colleague Aditya Rao for more on this. Aditya, thanks so much for joining us. What are you picking up from your sources?
Yes, Pragati. So as you have told our viewers already, for 30 minutes, the operations of takeoff and landing has been disrupted at the Mumbai airport due to the severe weather condition that has developed after 3:30 p.m. today, and we can see that the weather has drastically dipped, and thunderstorm and rain is pouring in, because of which the flight operations seem to have gotten disrupted. We are still waiting for the further details.
All right, Aditya, thanks so much for bringing us those. We'll come back to you as soon as you have more. Well, viewers, that's all the time that we have for you on The Reporter, but please stay tuned to NDTV Profit for all the latest news and updates, and of course, our continuous coverage of the Lok Sabha elections 2024.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love
Hello and welcome to NDTV Profit. You're joining us here. We are at Alua, very close to the Kochi airport, of course, where we're at the Federal Bank headquarters. And I have with me Mr. Shyam Srinivasan, the MD and CEO of the bank. Mr. Srinivasan, thank you so much for taking time out and talking to us. Pleasure, honestly, always talking to you. I want to start this chat with what is now has become about a 14-year-long tenure at Federal Bank. And obviously you've seen through cycles and cycles within the sector, but you've also seen cycles at Federal Bank. Tell us a little bit about what these 14 years have looked like.
Oh geez, I didn't realize this is going to be like a 14-year story. But yeah, it's been, let's say, fascinating. If you take it in slices of time, the first 5, the next and the next, I think the nature of how Indian banking and how regulations in banking have evolved have been fascinating, right? And we've seen it. Second, we all know technology is driving change. The distance between technology and banking is narrowing, or where one ends, the other begins. It's now we're living it. I recall in the early part of 2000, the decade starting 10, we used to say technology will dominate. Now I think it's become real. So between comparative forces, emergence of new technology and invasion of technology into banking, regulatory changes that are at times ahead of some of the changes and or keeping pace, a lot has changed. What I can say, and I think the bank has come out well through all these phases. And if there's one thing we take great pride in, is we've been fairly scratchless in these years and come out without doing things that have happened without disturbing the furniture, so to say. So in some ways, I feel relieved that we are recognized for being a bank that's credible, consistent and growing. And I believe that this will be our platform and our calling card for greater success. So yeah, I'd like to believe we've made good progress.
In an era of some cowboys out there, we've been true to the banker name tag. I just want to bring the focus on Federal Bank as an institution now. So, what was originally a more old generation regional bank, today, of course, is a pan-India lender. Most of your business comes from outside of Kerala. I wanted to understand from you in terms of the way the business has expanded. What has been a focus strategy for you, at least over the last couple of years, where the world has come out of COVID and things are starting to look a little better now?
No, I think to understand that, we have to go back to what our roots are, right? We have been traditionally very strong on NR and SME, small business lending, small and medium-sized business. That has been the core. And because of that, we've been deposit rich. And we've done well. So through our expansion phase, we always believed that we must preserve this. And this inherent skill of the bank, we can carry across the country. So if you broadly map the world of remittances or world of NR money coming into India, principally it was Middle East, Kerala. And in that corridor, we dominated a large share. That was and hopefully is our strength yet. But we realized that the non-Middle East, non-Kerala, Middle East, non-Kerala, and any part of that quadrant are all growing quite nicely. And therefore, we positioned ourselves in our expansion into geographies where remittances are and deposits are a large part. So if you take Tamil Nadu, Maharashtra, Karnataka, parts of North, this is where the bulk of the remittances ex-Kerala comes into India. So we created our catchment in these geographies. So over the last many years, now we are 1,500 branches. About 900 branches are non-Kerala. And these are all in these geographies. So in most of these states, Tamil Nadu, we have 250 branches now, and the other states have about 150 plus minus. So these have become our conduit for getting non-resident. So the core strength of Federal Bank moved into these geographies. But having been present in those areas, with our lending skills in small and medium, we'll be able to capture the commercial banking, business banking order. Then around 2015 middle, we created the whole corporate banking capability, which was not our core strength then. Over the last 8-9 years, Harsh and team have built a remarkably strong corporate franchise. So today, thankfully, you mentioned that we are a pan-India franchise. One thought, and that's been a pervading thought, is never have too much concentration in a geography, segment, or product.
Okay.
So if you see our business mix today, it's almost one-third between corporate, retail, and commercial.
Right.
And depends on where you put the ticket size. You could say retail is about 55 and corporate is about 45. So we've tried to keep that balance going. And in that construct, we've created the franchise in such a way that in most geographies, we have now physical footprint to get retail domestic deposits. And over the last 8-10 years, our non-home market, Kerala deposits, have grown at a reasonable clip. So we are able to fund our credit growth through all this. And of course, post-COVID, these have been accelerated. We, between 2011 and 16, expanded our network by we doubled it. Then between 16 and 19, we said we'll go more digital, less physical footprint. Around 20, we started our expansion. COVID came, so we halted it for 2 years. So that 22, 23, 24, the last 2.5 years, we've added almost 250 branches. The one that went by, March 24, we added 140 branches. That was, I think, our largest single year expansion that happened. And we believe between now and the next 3-4 years, between 5 and 7% expansion each year is something that's going to happen. So footprint expansion, presence in many geographies. And I think presence gives us the right to be at the discussion table. Right? Both physical presence, digital presence, and more importantly, our corporate and commercial team are more feet. They are out in the market. Right? So I think our presence combined by this strategy has worked quite well.
So you mentioned this point that you don't want to be concentrated in area or product, right?